Yo, 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 good morning, everybody. Welcome to a fresh new week. It is Monday the 17th. Welcome to the 5ers live stream. It is the London Open. You guys may have noticed that we're starting 1 hour earlier from today. Let's see who's in this morning so far. I am going to just quickly say hello to those of you who is in, and then we'll get straight into the market because I'm already in a trade, and I will show that to you in just a second. First in this morning, we've got Gajo Gambo Jibo. Man, I just screwed your name up. I apologize for that. Hi, good morning to you. We've got Terrorblade. Good morning, Warcraft days. Sandeep saying hi. We've got Afritech saying, oh, okay, actually, this is a good question. I'm going to just star this one, and then I will get to that one in a moment. But hello to you, Afritech. Morning to MGN, Simu saying hi. We have got Adu saying Euro USD. I'll get to that in a second for you, my friend. Azrael Trades, good morning, guys. Good morning to you. We've got Pratik saying good morning. Rich, good morning to you, Pratik. I will apologize to everybody for the fact that I wasn't here last week. I had a bunch of technical difficulties. Didn't have electricity for 2 days, and then right after that didn't have internet for 2 days. So, lovely week. LJ saying, what up, home slice? LJ, what's up, mate? Hope to see you in about an hour. Good morning to LJ. Morning to Ren. Assalamu alaikum. Abdu, morning. All right, I'll have a look at Euro USD. Wait, let me first just get this up and running. Share my screen. Come on. Share. There we go. All right. So, just took TP2 now on a trade that I was in. Was a very quick little one. I didn't get to do any trading on Tuesday, Wednesday, Thursday, and Friday last week, unfortunately. Like I said, I had some electrical issues and then followed immediately by internet issues. So I was very eager this morning to look for a trade and to get into one that immediately fit. You'll notice down here that there's 6 buttons. 1, 2, 3, 4, 5, and 6. Those are my 5ers accounts. I have decided to have them all just be numbered. So if I wanted to go to a specific one, I know which one it is. Number 3, 4, 5, and 6 are 100K accounts. So I did go ahead and purchase my not last two, but the last two that I want to have, which is the step 2, 8% and 5%. 100Ks, and then I will also still get myself a 200K, but for the time being I'm just going to be working on these ones. Anyway, so this is a NASDAQ trade that I am in already, which just took TP2 now. So I had this area up over here, which I was looking at as a potential area for rejection, which was Friday's highs, which happened to be also the weekly high of last week. But we were so bullish throughout the week that I had this inclination that we were potentially going to try and push up a little bit higher. If I go over to the daily, you'll notice that we have this area over here, which was the last bullish attempt before we had this sell-off on NASDAQ. So this area over here, which was all the way back on the 30th of June. So those two ones, I was looking at a potential reaction off of this area. So last week, Friday's highs, which is what I wanted to react off of. But because of how high this was, I thought maybe we can come into this area. So that's one of the reasons why I decided to take the trade. So you can see that we had this whole segment here that looked like a potential strong area of resistance. However, this reaction that we had over here on Friday did not even come close to take out the lows of Thursday. So I just thought, okay, to me, this looks a little bit more bullish than bearish. I wanted to see us get into the zone here before we have a potential reaction. So Down to the 15-minute, you can see we had a gap with rollover. So, well, the gap was all the way up to over there. We gapped, price came down, filled a little bit of it, then eventually closed bullish. So this area over here is a potential area for price to come back to come and test. So I'm going to have this as a base because it was, if you take into consideration the gap, we had the low of Friday, which was down here, and then a slow upward tick, and then eventually a strong reaction, and then a follow up as well. So this is going to be a base for me right now. All right. So based on that, we attempted to break lower here. So when we established the Tokyo low, which was very, very early on in the day, roughly around the open of the day as well, we tried to break through and retest here, and we just failed. And then we started picking up nicely. So that's why I said, to me, it looked like on the lower time frame, we were a bit more bullish. On the higher time frame, we were also a bit more bullish. Granted, we had this area up over here that we potentially needed to come and react off of. Didn't quite get there, and we had the London Open now that's trying to push price a little bit lower. Anyway, so with that, if I go down to the 5-minute, we had this slight little bit of consolidation, basically coming into this higher end over here. So let me draw a box. That might be a bit of, yeah, there we go. So we basically had this. So that high point of Tokyo, the failure to break through lower, eventually we broke through this, and then we had a little bit of consolidation. And the moment we started to push price up here, like the moment we reacted off of that with a little bit more bullish of a candle, this candle over here, decided I'm going to take a buy here. Hopefully we could get up into that zone. Hopefully we were not going to react too strongly from last week Friday's highs, which is not entirely how I want it to be lined up. There we go. So initially it moved very nicely, strongly, started pushing through, slowed down ever so slightly over here. It pushed through volumetrically, and then when it retested and on the close of this bullish candle, I was sure this trade was definitely going to go in my way, because this is effectively a break, retest of Friday's highs, and then a continuation. So to me, this was a nice little trade. I'm done with this one, 1 to 2, just very quickly. For those of you who don't know, I've kind of been forced to move away in the interim from my 1 to 4 TP point trading style, because it is considered bulk trading. Yeah, so unfortunately. Anyway, so now we've had the London Open trades already done. My very first trade, this was a 0.25% trade, so this is a 0.25% of risk, so this is 0.5% that I took off of the table here. I'm happy with that. It is Monday. Mondays tend to be my worst trading days. Did not have any trading last week. It looked good, but there was still a potential chance that it was going to reject off of this, so I didn't want to have too much skin in the game just yet. If there is a nice reaction later, hopefully we can have continuation. If there's another nice trade a little bit later, I will take a fuller risk trade, maybe 0.5%, maybe closer to 1%. We'll see. But for the time being, I'm happy with the little bit that I took. Anyway, so in this case, I'm now on a 1 to 2 risk to reward basis for the time being, until I can figure out a way to have on MetaTrader 5 a EA that allows for the risk calculation as well as taking profits at multiple take profit points without entering multiple entries. So one entry with 4 take profit points. I know I've gone and done some research. I know that it can be done on CTrader. I know that there are EAs on MQL5, which is the community, the say software development side of MetaTrader 5, the community MQL5. I know that there are EAs there that can do it. So I know it's possible. I am just unwilling to pay for it, first and foremost. And secondly, I would much rather have it be made in-house. So by in-house, I mean MGN, my brother, is going to create it for me, and we will go through it exactly how I want it to work and see with his genius ability to code to make it for me. So, yeah. Anyway, people asked for EU. Okay, EU. No, that's metal. No, that's metal. EU. All right, EU, straight from the get-go, looks quite bullish. Let's go over to the daily. I see I have something here. Oh, I don't know why that was drawn there. Did I have anything else? No, there's no drawings. All right, on the daily on EU, we had quite a bearish reaction from January the 27th. We slowed down here quite a bit. So this was the 24th of June. So we basically had from January all the way to June quite a bearish channel that we were following. Initially, this was the channel that got broken here and then pushed up again, creating this higher, slightly higher downward channel. Anyway, we've broken it now. The thing that I think is interesting here is like whatever is happening here is effectively what happened here, because you can see that we had a low. There we had a low. We had a failure to create a lower low, effectively a higher low. Failure to create a lower low, effectively a higher low. An attempt at a push, a retrace, and a push up. Attempted a push, a bit of consolidation, so it's slightly different, and then a continuation push up. So as of right now, if I just look at the daily, to me, EU is bullish. We've broken this area of consolidation already. We have this area over here, which we're getting close to, and then we have this swing point over here that we're getting close to, and then we also have this one. So we have 3 swing points on the daily, which we can potentially come and test. That's one, that's a second one, and then the third one we're basically at right now. Yeah, so you're basically at it right now. A little bit more bullish, I would say. We have this area of consolidation as a potential retest zone. So price can potentially push up, sweep this high point over here, and then potentially come back down, retest this area of consolidation, and then maybe start pushing up again, trying to get to these high points over here. And then from there on, that's actually a very nice, I actually like this area for a potential, yeah, this looks good. This is an established zone. This looks good. So basically, you have it acting as an area of support, breakthrough, acting as an area of resistance, breakthrough, acting as an area of resistance, breakthrough, once again, area of resistance, 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 breakthrough, acting as support, acting as breakthrough a little bit more, acting as support. So this to me looks like a very nice area of interest. So first and foremost, we need to break through the high point of which day was this? This was June the 16th price action, which is sitting around 1.16, let's say 1.16200, and we're currently at 1.1597. So we do have a fair few pips to go before we can break through that one. But I think if we can break through that, this is going to be our area of interest, definitely. So 116.52 to 116.85, this zone. If and only if we break through this area over here, which happened to be that high of the 16th. So to me, that is what I'm seeing on EU right now. This is on the daily. If I go down to the 4-hourly, okay, let's just add this as consolidation. We did have a lower on the 4-hour time frame here, acting as a little bit of support and resistance, which we've broken through now. That looks good. I think it looks good for buys, definitely. We're currently, from where we are, about 10 pips away from the first zone, and then from where we are currently to the second zone is 53 pips. So if we can potentially break through another 22 pips or so, then we'll definitely potentially come and reach the stop end. So that's what I'm seeing on EU. I'm assuming GU is going to be similar. Let's start on the daily. GU not as clearly in a downtrend. The retracements here are a little bit stronger. So if we just do this, we had one break retest, but the idea is here you have a low, you have a high, you have a higher low, and you should theoretically look to create a new higher high, potentially around this area over here. So in that case, let's look at I would say theoretically this could be a good area to test 136.04 to 136.53. So from where we are right now, we've just wicked this area here, which was the high of Wednesday the 15th of June. It looks strongly bullish, which is good. This is still a daily candle, by the way, so looking good. If we do break through, there is a potential that we can come up to this area over here, which is from where we are right now. Oopsie, that's not the, I want this one. From where we are right now, that's about 41 to 42-ish pips before we reach this area here. So yeah, for me, EU-GU is definitely more bullish. I can see a potential for a pullback on GU as well to this area over here, which acted a little bit as an area of resistance. Just missed this area down here as resistance. Maybe if I just adjust it a little bit, let's say something like that. That makes a little bit more sense. Then this area over here acted as an area of resistance. We eventually broke through, but it didn't hold. We collapsed down again, reacted over here, tried to break through. So to me, this area does look good as well for a potential pullback. So price can potentially try and pull back to here and then pick up some orders to try and go up higher. But yeah, that's me. EU and GU is definitely bullish. Oh, wow, yeah. 5-minute bullish candle here. EU 5-minute bullish candle. Yeah, definitely bullish. Gold. Let's have a little gander at gold. All right, I'll start on the daily. Minimize that. Okay, so we have this area of consolidation right over here over the last few weeks. So this is all the way from June the 22nd, and we got a breakout on August the 5th. So quite a few weeks of consolidation, a very nice break. We've effectively come to a little bit area of consolidation right now on the daily, which is roughly around this area over here. Wait, I'm going to use boxes because my drawing is horrible today. We've come into this area over here. We did reject off of this area here. So basically on the daily, we had one day that we tried to be bullish on this downward leg that we had here. We were trying to break to these lows, and then from this bullish day, we had that sink off that eventually broke these lows. These low swings that we have here eventually broke and closed. We just didn't break and close below that one. But we did have a follow-up to push price lower. So we came back into this area. So this is starting to look like a bit of a flag. So you have a long daily pole, a bullish pole, and then a little bit of a flag. So I'm interested to see what Dirk and LJ has to say about this, about gold potentially pushing higher. To me, it does look like we do have, it's not a super strong area. It's just a little bit of consolidation here. We did act as a area of support. If we're going to break through, we're going to have to get up to these highs over here, which was the highs of the 26th of May. Or potentially just the lows of this segment here, which is just the top end of this box, which is 4515, and then the lower portion is 4423. Let's see. I don't like the fact that we rejected. We had higher days, like each day was higher than the previous day, but we could not really follow up. And then we had one lower day, which was Friday. And today is so far is bullish. So gold, I can see the bullish potential of it. But I can also see us trying to get back down into this area of consolidation down here to try and potentially pick up some orders. But then again, you also have a base area right over here, which you can potentially come and test. This is on the daily. Let's see if what the 15-minute looks like here. That was just a whole day. Yeah. Bullish on gold, but definitely I can see a bit of bearish price action try and come in. What area is this? That doesn't look half bad, not gonna lie. So on the 15-minute, the high of the 7th of August, we eventually broke through. It did act as an area of resistance, broke through, became an area of support, stayed as support, eventually created new highs, created the high of that week, which was the Thursday, came back down, reacted, started pushing lower, consolidated ever so slightly on the Thursday. Friday morning acted as resistance, pushed even further down below. On Friday afternoon, we broke through, retested it as an area of support, and tried to push up this morning now. So, all right. So in this case, on the lower time frame, we're currently on the upper end of this area of support. We do have the highs of Thursday last week to potentially come and test. From where we are currently to there is about, let's say, 43, almost 44 points. So that would then be 4,440. We'll see. Right now, slowed ascent ever so slightly, very slowed. Little bit acting as a bit of consolidation around about the highs of last week Friday. Let's see. Let's see whether or not this is going to have a bit more of a pullback. Maybe come and test the lows of the day so far. Maybe a midpoint somewhere over here. And then potentially push up. Let's see. Let's see what gold is going to be doing. I'm not so keen on gold as of right now. I mean, we do have a pretty decent channel that we are following. I mean, it's not horrible. The lows from Friday, the lows of this morning, both Tokyo session lows as well. And I mean, we had this as a high. This now is a new high. So we're still in upward facing price action. So price action is pushing up bullishly. I mean, port of call is 4,440 for me on CFD. So I think if we're going to carry on pushing up, obviously we need to break above the Tokyo high and then carry on pushing up at the same time, respect the Tokyo low and not try and push lower. Just give me a second, guys. We've had some issues since yesterday with our streaming platform. I don't know if they are updating something in the background or what's happening, but we've had some errors So not entirely sure. Just give me a second. I just quickly want to reply to a message. Anyway, so we may not have an outro today for anybody that was wondering, because the videos that we have, like for argument's sake, the intro and stuff like that, the outro is just gone. It's not on our system at all. We can't find it. So, and then there's a bunch of like 404 errors and stuff like that. So hopefully, hopefully we can have that sorted out. All right, I wanted to walk you guys through the schedule for today. So today's schedule, this is the first week where we're going to have effectively 2 streams. All right, so we're going to have a 3-hour stream today. I was supposed to be here last week to give this announcement and stuff like that, but technical difficulties. We're going to have a 3-hour stream in the morning. So this is going to be the London session. It starts at London Open. So that's 7 GMT. All right. So today, all the way through until the midpoint of next month, we're going to have that 1 hour earlier start than we normally would have. So 7 GMT, we're going to have a 3-hour stream. That's going to be the London session. There's going to be a 30-minute break. That 30-minute break is just we're going to add some interviews and stuff like that, like just content in there. And then we're going to have the pre-New York session, which is then going to continue after that 30-minute break, which is going to be at 10:30 GMT. So half an hour after the break, or after the first session ends. That's going to be our pre-New York session. So the idea is the London session is going to be all about London. It's going to be all about the news events in London. It's going to be the early people, those wanting to trade the earlier sections of London and whatnot. We want to get in a little bit earlier and have that. And then when we do trivia is going to be in the London session. When we have the 1v1s, they're going to be split. 1 battle in the London session, 1 battle in the pre-New York session. And then once pre-New York is closed, everybody is just diverted to the futures channel. So you can go from CFD in the morning in the London session. You have a half an hour break where everybody can go and touch grass, which I would suggest. Go and have a lunch, touch some grass, come back, refocus, revitalize. We go on to the next segment, which is then the pre-New York session. We finish that out with our expectations for the New York session, and then the New York session is going to be the futures platform. So that's what we're going to be testing going forward. We're going to have a bunch of cool giveaways coming very soon. We have a few events that we're busy working on in the background as well. So there's a lot of stuff still happening. The 5ers is growing constantly. And with that growth, I'm going to ask you all to please drop us a subscribe and a like. It really goes a long way to help this kind of content get out to more people. So if you guys can assist us with that, that's all we ask as payment. We do this for free. We do it Mondays through to Thursdays. And if you like this kind of content, please drop us a like. Even if you don't like it, drop us a like regardless. You're still here. Anyway, we've got Devil PM saying afternoon. Russell Schaefer saying good afternoon. We've got Usam. Morning all. Good morning to you. Private Parts. I still, like, I can't believe it took me so long to, like, pick up on your your nickname. Reporting for duty. Morning, Richard. Good morning to you. Load shedding. Yes, we did have our own version. No, it wasn't load shedding. We had a ring sub failure. So where we live, we have substations, and these substations feed into other substations and so on and so forth. And we had a failure there because of a storm that we had. We had a massive, massive storm last week, Monday and Tuesday. And then eventually it just caused a bit of a grid failure. So our whole town was without power. But yeah, not load shedding from our, let's say, our main electricity provider. Good morning, trader. Good morning. Oh, yeah. Thanks, MGN. Yeah, storm damage, then followed by vandalism by midnight shoppers. Morning, Justin. How are you? Justin, question, have you received your 100K account yet? Apologies for not being here last week. I was supposed to be in with you for your 1v1. I heard great things. I heard that you beat the host. I just wanted to know whether or not you've already received your account. And if not, I can follow up for you. Russell saying USD CHF daily topping pattern. Let's have a look at CHF. I don't know. Do you think? You think we topped out? Wow, what a sell-off candle that we've had right now. Yeah, I would agree, but I would say that we definitely had some area of resistance and support acted as. So for those of you who don't know, and for those of even if you do, I'm going to repeat it. I started my trading journey with support and resistance. That's where I learned in the beginning, and it never went away. I've always tried to keep support and resistance into all of my trading strategies that I've had, and I started my view from here. So I will always try and come back to like support and resistance, or supply and demand, whichever way you want to call it. In this case, this area created a demand zone or a supply zone, supply in the sky. We had a strong reaction pushing price lower. We acted down here as an area of support. So this one led to that one. Acted here as support, pushed up, created resistance, broke through, acted as support, came back in resistance, tried to push up again, failed. So this area over here, which is where we reacted here and almost reacted there, is a area of strong resistance. So we're selling off right now quite nicely on the Swissy. So what areas are we looking for as a potential retracement towards? So first and foremost, obviously, we've already broken through that swing point over there, which was the low of Wednesday. We've got the low of Monday and then the low of Friday. The low of Friday looks like a little bit of a stronger zone because of the fact that we have multiple reactions here. So first port of call for me is 0.806 to 0.8055, and then if that gets broken, then we'll come down to 0.843 and 0.830. That's the last two areas of interest, but then again there below is another area of interest right here, and this is, I can see us potentially make our way down to 0.8 flat. If we can break through obviously this last area, which is 0.8100. Where's 0.8 flat? 0.8 flat is there. I mean, yeah, I can see it. 0.8 flat being around here. I can see it. Maybe not today, but in the following few days leading up to it. I mean, this is a very, very strong downward candle. Did we have news? Let's check that, because I know that... Oh, yeah, we did. Iranian Foreign Minister outgoing communications with Qatar, which is playing an influential role in de-escalation efforts. I know that the MOU is coming to end soon. So we'll see whether or not that is actually going to play out. But I think this is probably what is leading to this little bit of a reaction. So we should be seeing the DXY also react here. So the DXY, the dollar index, is pushing a little bit lower. So gold in turn should be trying to push up. NASDAQ in turn should be trying to push up. AUD pushing up. EU, hey, EU is at that area. NZD bullish as well. CAD pushing a little bit lower. CHF pushing lower quite a bit, and then the yen should also be theoretically, yeah. All right, so all of the dollar associated pairs, if they are the quote currency, if the USD is the quote currency, they would be going up, and if they are the base currency, they would be going down. So that looks good. All right, Tai Keith, top of the morning to you, Rich. Top of the morning to you, Tai. the bulk buys. Learned it from you, but sadly I must adapt to. Yeah. The Earn Forex Position Sizer EA. What about it? Yeah, I use the Earn Forex Position Sizer EA, but the way that it works when it enters a trade is if you have multiple TPs, it enters multiple trades. So it doesn't enter a single trade and then splits them into 4. You have 4 individual trades that each has its own TP and stop loss then, which is then considered bulk trading. What is an established zone? An established zone, in my mind, is a point of interest that has been reacted from. So you establish a zone that gets reacted from, basically. It's just my own way of saying it's an area of resistance or support that has been reacted off of. It can also be an order block, as an example. So from here, this might be considered an established zone. So you have a area that acted as resistance. You have an area that acts as support. So between these two, you have establishment. You're establishing that price is reacting off of this area. So the way that I would draw it up, if I did not have this area over here, is I would say, okay, cool, we have a high. We've come to break through the high, and now we've come back down to retest. So the moment we do the retest over here, that becomes the establishment of an established zone. So it's established itself as a reactionary point. So as price starts picking up, the idea is when price comes back down to this area, we may have a similar reaction, which in this case, once we did get back down to it, we did have a similar reaction pushing price up. So I then add information like how volumetric was the candles coming into that zone, how fast was the movement. So do we have price action, misclick, do we have price action like this, where it's struggling to continue lower, there's no momentum? Or do we have a reaction like this, where it's strongly into it and then reacts off of it strongly as well? So a V recovery almost. So 2 distinctly different reactions off of the same area. I prefer this in. This one to me is the better reaction. It's technically consolidation, so you've got a slowing of momentum. Price is making its way down, but it's really struggling to continue its way down. And then eventually when it starts picking up, it starts picking up with momentum. So you see these candles, let me just remove all of the drawings. If you compare these candles here to just this one candle, you see what I mean. This is a momentous attempt to try and break out of this area. This is consolidation. If you compare that with the fact that we have an area that acted as resistance and support, so an established zone, it gives you a clear idea of what price wants to do. Wants to try and push higher in this area. So that's what I refer to as an established zone. Shivs is saying, hello to Shivs, by the way, is saying, this is my first view. I passed the 20K bootcamp account and it has been successfully activated. Now I'm waiting for a sniper entry on gold. First of all, congratulations on passing your 20K bootcamp. Notoriously difficult account to pass because of the 3 phases and the ratio between your take profit and your stop loss. Well, your profit target to pass the account and your drawdown, that ratio is it's just difficult. So you effectively have slightly less than a 1-to-1 or slightly more than a 1-to-1. So you start off with 5% of drawdown available to you, and you need to make 6%. And then now that you've passed, remember that it changes. It's now no longer a 6% target and a 5% drawdown available to you. It's now a 5% target and 4% available to you in drawdown. So just keep that in mind. So technically your range is tightening on both sides. Okay. So, but like I said, congratulations. What you've done to pass phase 1, 2, and 3, replicate that. Maybe drop your risk a little bit so that you can have a bit more longevity, but just keep on doing what you were doing. And congratulations once again. So we will have trivia this week. We'll have a trivia giveaway. And on trivia, the idea is I ask questions. Well, myself and LJ, we ask questions and you answer them. And if you are the one that has the most correct answers, but also the fastest, you will get yourself a 20K account as well. Hello, Henry. Haven't seen you in a while. What's up, Henry? My fault. My fault that I haven't seen you. So saying, oh, why is this? Come on. There we go. Like I was saying, DXY reached a weekly fractal low in discount, looking for USD longs. So if I go back to DXY, I mean, okay, this was 22 minutes ago. So I apologize, I'm a little bit behind on chat, but very strong fall through. Let's go to the daily. Let's see. I mean, this is like momentous. If you just compare this reaction that we've had here and now this reaction over here, this is a volumetric push lower. We had consolidation and now we've got breakouts. So I don't know yet about buys or longs on DXY. I'm not sure if I like it just yet. If I just take this whole segment that we've had here, we've had breakout now of this long from January upward channel that we've had. Definite loss of momentum and then a gain of momentum. Yeah, I don't know. I don't see it just yet. Potentially, where we are right now, this is an area of consolidation that we are at. We can potentially see it react here. We can also see it potentially try and break through and get to the lows of the 29th of May. But to me, it's very bearish. Very. And strongly bearish. So, you know, obviously this is the daily time frame. So this can end up just sweeping this and then start picking up as well. So, but to me, strongly bearish as of right now. JJ Trade saying, good morning, gentlemen. Good morning to you as well, JJ, to all the ladies and gentlemen. Waiting for it to go a little higher before higher to sell. All right. Cool. Thanks, Usam, for acting as moderator and answering questions that I haven't gotten to. Appreciate it. CHF, yes, rolling lower. Hello, Rich, your take on NQ. My take on NQ was bullish. I did already take a trade here. Strong reaction. Once again, I mean, just like looking on the idea of an area that acts as resistance, price breaks through, reacts off of it, carries on, comes back to it again, carries on up higher. It's so difficult to not see the market in that fashion. You have an area that acts as an established zone, price reacts off of it, it continues higher. You have what I call bases, which also continue, you know, there's like a nice look at continuing higher or lower. I always refer to like this arm wrestling between buyers and sellers. Base areas just being that stalemate, where if we are in a bullish trend, the bears try and break that upward push. So you have these moments where as you're moving up, the bears try to break that channel, that upward move, and then fail, and then have continuation. They try again with a little bit more vigor this time, they fail. Carries on going up. Go into consolidation, a strong attempt to try and push price lower, but then you come back into an area of support and then react off of that again. So to me, right now, still bullish. We are having a bit of a rejection candle here on the 5. If we look at the 4-hour and the 1-hour, these extra candles here on the side, 4-hour very bullish, 1-hour very bullish. 15-minute had a 1 bearish leg, which ends up being this movement over here, and then it looks like there's a continuation. This fresh 15-minute candle has opened up, and we've got 14 minutes before this hourly candle closes. We may see a bit of a rounding here. Long wick below, swept the previous hour low. We've swept the previous hour high. We've got 14 minutes before this one closes. It's most probably going to close as a bit of a bearish candle or a rejection candle in this case. 2 hours and 2 hours 14 minutes before the 4-hour candle closes. Quite bullish as well. I can see us potentially trying to break into the zone, and then we'll decide from there. But my first trade is done. I am going to now look for a slowdown of momentum for a potential sell. If not, I will look for a continuation to buy up higher. But being close to this area over here is scary. Let's put it like that. It's just a little bit scary. Anyway, let's carry on. So the trading view plan that you have with the trading view option basically is just the standard standard one. I'm not entirely sure what you need to do in order to get the, let's say, essential or the pro version of trading view. Myself, I don't trade with trading view. I don't find it very intuitive. I'm not a very big fan of it, but that's just me. But what I can say is reach out to help@the5ers.com and then see if they can provide you with some information on maybe how you can have your either your essential or your pro version of trading view be the one that you can trade off of. Just reach out to them, because if I were to help you, I would probably lie to you because I don't have all of that information. Pratik is saying my trade is activated, hold for buy side. Are you in a NASDAQ, Pratik, or are you in a gold? Gold is looking good. We're having a bit of a slowdown now. 11 more minutes. We have yet to reach the Tokyo highs, which is over here. Morning, love. Today we started early as the market did with volume. Yes. So this is now the 5er stream is now going to be from the London Open. So for the moment this candle over here opens up, we're going to be live as well. So early morning sessions with myself. Will is currently traveling, so he will be back again tomorrow. But this morning so far you have me. Kai, what's up? All good. I received it. Awesome. Happy to hear that. Where is EU likely to move to today if you enter a buy trade, and what would be the safest take profit? So EU, like I said earlier, was quite a bit more bullish. So the idea that I had was if I was going to be taking a trade, I would have wanted to get into the zone that we marked up earlier. Let's go over to the hourly. Let's just give it some time. Yeah, so it was basically the highs of the 16th of June. So if we were going to take a buy, I would have targeted for this area over here. Now, what we need to see now is whether or not this area remains an area of resistance, or if price is going to try and break through. If it remains an area of resistance, then I would not be looking for a buy at all. Because to me, price moves from one zone to another and then reacts in those zones. So in this case, we had a zone down here where price reacted off of, pushing up. We've coming into this area, or we've come into this area quite strongly, maybe because of the news that we've received, pushing the dollar a little bit lower, causing EU to push up a little bit. But now we want to see a reaction. What reaction do we want to see? There's a few scenarios. First and foremost is this acts as what it acted previously. So it acts as a area to try and push price lower from. Okay, so what do we want to see? We want to see price fail to break through higher, first and foremost. We want to potentially see price try and consolidate and then start to get a bit of a pullback. With that, I would want to see us try and get back down to the zone over here. If we can get to here and react bullishly from there, then I'll want buys. I'll want a buy to try and push price up again. But if price keeps on pushing lower and it eventually disrespects this zone that we have here and wants to try and break lower, I would not be looking for buys at all. So that's the first idea. get a bit of consolidation, a bit of slow movement, and then a potential attempt to push lower. I would not want to sell less than the zone. I would not want to sell lower than that. Okay. Secondary thing is we have a bit of a reaction and it fails to reach down here. And instead of creating a new downward push, we have an attempt to try and push price up higher. Then I'd look to buy, but I would not try and buy higher than the top end of that box, effectively. It gives you, I don't know, maybe 20 pips at most, but I probably would not try and buy higher than that because it's still a higher time frame area of resistance. So price has already once reacted off of that area. This is the first time that we're coming into it, so I want to see us react. Oh, so we have Mr. Jerk in the background. He's just sitting up.
Yo, what's up, boy?
Hello, Herr Dark.
Hello, hello. How's it
How
going?
are you?
Pretty good.
Much better this week. Much better.
At least you have internet again, yeah? And electricity.
Indeed. Indeed. I have internet, I have power, I have it all.
Now you just need the markets.
I already had the markets.
Oh, yeah?
I already had a buy this morning. A 1 to 2, which was magnifique.
Nice, nice. Still in that one, or take profits taken out already?
Already out. In and out.
Oh, beautiful.
Yes.
So you must have gotten this last night already, or this morning?
It was this morning. So I was up early this morning.
Oh, sorry,
very keen.
I'm looking at gold right now, not the NASDAQ. Oh, you must have gotten the ones around here. What in the future, like 30,270-ish.
My entry was on CFD, was 30,152.
Wow.
Yeah, and my take profit was at 32.32.
Wow. Nice. Very nice.
Very nice. Quick trade this morning. Like I said, I missed out last week. I missed out quite a bit because of the way that my strategy works. Tuesday, Wednesday, Thursday, and Friday would have been very good days for me.
How come it's like always Murphy's Law, you know, when something like this happens, this is the week where everything would perfectly have worked out. I hate that. It's for me always when I deploy new automatic strategies, the strategies, it feels like 90% of the time they start immediately in drawdown. So I always have to go through the valley of tears first until, you know.
It reminds me of Harry Potter with Neville Longbottom having all of the worst stuff happen to him, and his first thing that he says is, "Why is it always me?"
Yeah,
and that's. I feel like it's like the market humbling you. It's like don't let anything get too far away from you. I can at any point in time just screw you.
It's really like this.
Yeah.
But I mean, it was kind of good because it made me, like, the last time that happened, like, check again, hey, did I do everything right on my side, you know? And I actually found like a little piece where I screwed up in the back test, where I, for whatever reason, always assumed I get like half a pip better into the trade than in reality. And interestingly enough, this half pit over time brought the strategy then down from a profit factor of 1.9 to 1.05, which, you know, basically doesn't make it worth investing your money in anymore. So at least, you know, there's like a shimmer of hope within this. Otherwise, it probably would have taken me half a year to find that out.
I mean, it's like that diamond in the rough.
Yeah, it is.
Where if that didn't happen, you probably would, you know, have thought that this was the best thing ever since sliced bread, and then you realize, I missed something. It's the same thing with last week. It's just, it's one of those moments where it's a call to action for me. So I'm looking at getting an office now outside of my home.
Yeah.
So an office that has backup power and backup internet and that kind of like stuff. So it was a bit of a call to action for me. So yeah, we're in the process of looking for office space, and then I'll probably be moving my setup there. Still have to try and figure out if it's going to be worth it to have my whole PC set up there, or if I just have to go and get myself a laptop and then just have a few extra screens.
If I can give you one recommendation from my personal experience, when I first started, you know, being my own boss, I had my office at home also because I thought, like, you know, what the heck, you know, can save some money. We have the extra room.
Yeah.
And then I noticed like that I get distracted very easy. So I rented an office a couple of years ago. And lucky around here, office space is pretty good. I got my own internet fiber optics line there because I don't want to share that with others. Because I need a lot of what is it called?
Bandwidth.
Bandwidth, thank you. And I noticed, like, for me on a psychological level, it's very good because once I arrive in office, it's work time. I don't do anything else.
Yeah.
I'm not distracted. I work, work, work. Once I'm outside of office, it's family time. That doesn't mean that, like, in the evening sometimes or early morning, I still sit on my laptop at home and do stuff. But it's not as blurred in as it was when I was working from home, especially, when you have a little kid. My daughter then tended to come in like, Daddy, what are you doing, and up to the point where sometimes I would like throw a bit of temper on her because like she disturbed me, my chain of thought. I was recording something, which of course is not good and not fair. I mean, what you expect. A little kid, of course, always wants to see their parents. And so anyway, since I moved a couple of years ago now into an office, like on a psychological level, this is much, much better.
Yeah, I'm hoping that that's going to be the same effect for me as well. Mainly for me, it's about the backup. It's about the electricity and stuff like that. So that causes me way more stress and anxiety than trading and any of that. So, yeah, just call to action. So I think that's kind of like one way of saying, like, if you have like these downtrending periods in your life, they're learning opportunities, or they're call to actions. There's stuff that's happening in your life that requires you to make a decision and maybe change your habits or something like that. In this case, this was one of those moments.
And the nice thing is with what we're doing is nobody forces you that you need to spend like thousands of dollars of rent, except maybe you live somewhere, I don't know, lower downtown Manhattan or in the heart of Singapore or something like this, then of course you need to shell out. But there is usually also office space available that is enough, to put on a bit of furniture, your table. Like in my case, I have my servers here in the background, most of them running. And then, the only issue I have is really on hot days, I need an aircon here. Otherwise, it's crazy. And that one is so loud, I cannot stream then.
I mean, the ones that we're looking at in general is quite kitted. The office spaces almost always have bathrooms. They almost always have like a kitchenette or some sort. I mean, get yourself a little bar fridge just for like lunches and maybe some milk, and you have a coffee station, all of that kind of like stuff. That doesn't cost an arm and a leg. The thing that usually costs more is the actual space itself. Renting the space can be quite expensive, depending on where you get it and the amenities that comes along with it. But yeah, like now we're going to definitely go and look for that. I did want to answer this one question because I'm going to probably be hopping off very soon. And the Trade Monastery was asking, hey, Rich, how do you get the 4-hour chart to show up on the right? It's very simple. You have this indicator here called TLM, higher time frame candles. And then basically what it does is it gives you multiple time frames that you can select and the amount of them that you want to show. So in this case, I have the 15-minute, the 1 hour, and the 4 hour, and I want to see 8 15-minute candles. So you can see them here, 1, 2, 3, 4, 5, 6, 7, 8. It shows you the last 8 ones. You can set this as much as you want. You can go down and you can change up these candle bodies. I have them exactly the same as my normal candles, so the same theme is playing out. There's a bunch of stuff here where it shows you the where is it, like you can have the fair value gaps indicated to you, volume imbalance, add some trade lines like the high, open, and close. It'll show you these ones here is the swings. It's just showing you where that previous candle was swept. So there's a bunch of stuff. I purely use it as a visual reference point because I trade the 5-minute. I've already done my analysis daily, 4 hour, 1 hour, and so on going down. So I just have it as a reference point. Just very quickly see, oh, okay, cool. We're rejecting maybe on the 15-minute. You can obviously see that, okay, yes, 1, 2, 3, 4, 5-minute candles is obviously going to be a 15-minute candle. But it's taking away that like, I wouldn't say guesswork, but like the mental arithmetic that goes around it. Yo, what's up, LJ?
Good morning. How are we doing? Happy Monday to everyone.
Nice jersey you got there. Lavender.
Thank you. It's blue, actually. It's like a sky blue, but the color might be off.
That's true. One day Dirk will come out of the shower and unmute his microphone.
Damn it. I said
I'm just seeing you going like this in the background.
we are like color-wise in the same direction today. It's like the new outfit for Monday mornings now.
Yeah.
I don't know what color this is. It's like a grayish blue, like a grayish green.
Definitely
Yeah,
not
grayish
gray.
green.
Yeah, like a grayish green blue mix. I don't know. It's one of those colors. How are you guys? How's LJ today, and how is Dirk otherwise?
Doing well. Gave myself a bit of a haircut on the weekend, bit of a trim. Sort of changed it up a bit. And then just been knocking through things. Pretty good day. Been busy today, but it's been really good. Still got this autoimmune thing with these like blotches popping up, but it's just so irritating. It's like itchy.
But you look more healthy than last
doing
week
better
already, I have to say.
Oh yeah, it's definitely gotten better. Thankfully, I tried to get some good quality sleep and that kind of thing on the weekend. Definitely a bit better. I went to the doctor and stuff, so on the mend now.
Plus
Feel much better.
no more murder attempts from your apartment complex, I hope.
I hope not. That's the other thing. I've been looking for places, booking inspections and stuff as well. So I'm going to be out of here very soon. So.
Nice. There was a question earlier over here. I did mark it. Guys, what was your best aha moment in trading? LJ, can you share your experience? This was just as we opened up the stream, so I wanted to get to it, but then if you guys want to, you can answer that one. I'll probably come back I will be back in a little bit, in a few hours or so. Just Dirk and LJ, we are having some issues with the streaming platform. You'll notice that a lot of our files are gone.
What?
Yes.
Really?
Yeah, so like videos, all of that kind of like stuff, we have no access to it whatsoever. So it's all disappeared. We did get a few of the things working again, like the banners downstairs at the bottom. I'm saying downstairs. The banners down here is working now again, but we've got no outro, and we're gonna have a half an hour break after your 2-hour segment. But we don't have any of the videos for it. So. We'll have Remy just put up the little thing that says we'll be back in 30 minutes. Guys, it's just temporary.
I thought we can have LJ just like half hour doing the dance.
Yeah, just dancing. But okay, guys, I'm going to see you guys a little bit later. This is the London session. The London session, all about London. Obviously, I know LJ and Dirk are going to want to talk about potential US-related stuff later in the day. You are more than welcome to do that. But for everybody else, I will see you guys in the pre-New York session, which is going to be at 10:30 GMT. All right, guys. If we can, I'll change over to Dirk's screen. Where is Dirk's screen? I think it's over there.
Do that. See you later, Rich. Oh yeah, the transition is also gone. Yeah. I know.
Yeah, everything is gone.
Oh man.
So yeah, it's you should have seen me yesterday, because I went through everything yesterday and I was like, what the hell? Everything was 404. This can't be found. That can't be found. So I don't know.
I bet at EVMAX somebody changed the API to instead of reaching proper IP addresses, all goes to localhost now.
Yeah. Anyway, so we'll see. We'll see if this gets fixed. I have a bunch of emails that I need to send now. Anyway, gentlemen, I will see you guys.
Our way anyway.
Yeah.
See you, Richard.
I'll see you guys in the pre-New York session. All right, guys, have a good one.
Cheers, Richard.
Alrighty. Good. Maybe I quickly start with a quick overview. I've not been very busy this morning in terms of trading. Actually, just entered just now, like 5 minutes ago, a little short on Bitcoin, perpetual future, simply due to the fact that we got this nice setup that we had This is marked by the orange phase here. We had short positions on Binance being liquidated. And whenever you see this and this goes on for a while, and then the next bar where it is not happening anymore, so that was this one here, is a red candle. This indicator gives a sell signal because that means it's normally price is going to push further in the direction. It's like the phenomenon, all of us have had probably throughout the life, that we get stopped out and then, oh no, suddenly the market continues in our original direction again, simply because everybody, wants to go through the same narrow door at the same time. So that one just fresh, have a stop loss just over the last highs here. Risk reward ratio as always 2. So let's see if we get a little bit action in Bitcoin. Bitcoin not very volatile at the moment, typical for the phase we're in right now. Other than that, last week gold wonderful, 3 trades, 3 winners, so up 6% on gold, minus a little bit of fees, so 5.5%. Lost 2 trades on NASDAQ, only one. I didn't save the other one, but 2 trades. So net something up around 4.2, 4.3% overall. Pretty good week with low leverage, so only risked 1% there. I missed this little pullback on the gold future, but I mean, for what it's worth, I was sleeping this morning, still there. And this one we saw earlier, the last time we had this zone of demand here, I didn't think it was like far enough from where our 0 sigma is at the moment for standard deviation. I might actually look into getting into this trade should we see prices down around 431 during the session. Yeah, Richard added. Going long, yeah. And good that you don't agree. I can see off your face already.
No, I'm in longs.
Oh, you're in longs. Okay.
So I do agree. Yeah.
It makes me even more happy then. I think this gold trade, the last one, that was the one we took also live on Wednesday.
Yes, yeah.
No, that was Thursday, sorry.
Thursday, yeah, with
this
PPR.
one on Monday that was. Oh yeah, Thursday I was on as well. I forgot, for 1 hour. So NASDAQ, Richard already banged a very nice trade. For me, I don't want to buy at these levels currently, honestly speaking, intraday. Should we see, which probably we are not seeing, I mean, the next really what I would call support here, dominant support just from order footprints is down here all the way. That would be in the CFD probably around 30,000, 30,050 on the futures. It might be interesting should we see a pullback somewhere into this area today. So this one looks pretty solid as well. But as always, I would monitor there first. Are we like seeing sell pressure being absorbed by buy limit orders that have been around that area for a while? So nothing to do there, a little bit in waiting mode. So the only trade open is the Bitcoin trade, plus, of course, the still ongoing longer term gold trade that I've been sitting in for a while now as well. Still looking good, a bit of consolidation around the bear market support band. So I'm still waiting for this push over 4,500, over the 200 days moving average. That would be nice. Stop loss is not down here anymore, so the re-stop loss, but I cannot show this with TradingView, is sitting around about 1,150. So no matter what comes there, except we get like a crazy candle to the downside because of whatever, should all be fine and secured. So I don't have any risk in that trade anymore. How about you? What have you been trading?
Beautiful. Okay, let me jump over. So I've got NASDAQ up here, so first of all, we can go through that. I will preface, my throat is still a little bit hairy, just so you guys know.
Good.
So apologies for that. Hopefully I don't sound too
I chose
too
to not
hoarse.
shave today as well.
Yeah.
Oh, you mean your voice? Sorry.
No, my voice, yeah. So it's a little bit rough, but yeah, apologies, guys. So in that NASDAQ trade, just like you were highlighting, Rich got in earlier through today. I saw when we had this break, and we did actually break last Friday's highs, I did decide to get in on that on the pullback. This is also like the longer term trend line. I think we were talking about this again
Yeah.
in the both last week and in the Discord on Friday. So we broke that, came up, retested it right there, and I'm just looking for a little bit of a scoot higher, up to about 30,290 at the moment. So I've got a pivot point. I don't know if this one shows a little bit different. I haven't found, I might have to code it up myself. I think because of the time offset, the pivot points calculation is a little bit different on TradingView. I found at least from this one that I use.
You can select your different time zone though on TradingView down there. Right now you have UTC plus 10, so you can put it like to New York time or whatever.
Yeah, I'll have to have a look. I think I'm not sure.
Or you can do it coding.
What it is. I'll have to find out. Yeah, because I was having a look before and it should be the same, but for some reason it's not. I don't know if the actual indicator is.
I'm happy to see that your struggle is like this time zone thing as well.
Yeah.
Really puts a
honestly, time zones are so annoying with coding. Time zones are one of the most irritating things. Yeah.
Especially on the Fiverr server, they changed 2 years ago the server time. And that took me a while, and really a while of trial and error and backtest to find this out.
Yeah, exactly. And then, I mean, is when's daylight savings? What, 6 weeks?
Sorry?
October?
Huh?
Daylight savings?
Oh, yeah, that's coming up again as well.
Yeah, like 6 weeks.
Yeah.
Again, another pain. But yeah, anyway, guys, so yeah, I've got a TP target just below 30,300, that kind of round number up through here. We'll see if we get that momentum continuing. Otherwise, if we start to just stall out here and, pull back, like I'll just close it for a very small profit or break even. This is the gold trade I'm currently in. So looking for a push up towards 4,042 is where I've got the TP right now. That'll be TP1 though, because I can see us actually pushing on towards 65.70. Up beyond there. So unfortunately I didn't get in on the earlier drive today during Asia. I didn't look at markets today during Asia. Had to do some other stuff, but I quite like this. I know you were looking for a pullback a bit further down. I don't know if we get that. If we did get that, I would probably exit the trade.
Yeah,
altogether.
I understand that.
Yeah.
Like first one, 30,200 on the future. What is that, like 150 on the CFD probably? And so that's basically what you see there from really the early Asian session, where we first had this little bit of a side move before we started breaking out to the upside on the 50-minute chart. I am right now.
Yeah.
So,
Sorry, I'm just trying to shuffle some of these things.
Yeah.
Because last Friday we were talking about when we're in this like little cluster through here, either we hit these moving averages, fail below some of these, candle closes and reopens, or we actually drive higher to the top side target that I had, which was a 161% fib extension from Friday's Asia high to the low coming into mid Asia, I guess. So that was basically towards market open around Australia, and then to when Japan opened. So we did end up getting that. We've held up through here coming into Monday. So we didn't get the push down, we did get the push up. And so hence buying into that. That looked pretty nice. I would have loved to buy that this morning.
Yeah.
But yeah, missed it. So
Nonetheless, a really brave trade. Nice one, really. That you entered on the retest. Quite good one. I don't think I would have done that even if I would have seen this morning.
I think, well, the other factor to take into account, I've got like some other stuff to go through later on, but like we're into European summer markets, right? So you tend to get those like melt up, melt down style of trading. We saw that a lot last week, right? We didn't have these great impulses, even off, CPI, PPI, like this inflation stuff, Fed rate hikes and all that has been talked about so much. We got those weak prints, and we had the knee jerk, and then just kind of wafted off, right? But nothing, no aggressive pullback or just wafting off, and then the next day wafted back up. You know, it's
Yeah.
a very gradual, sort of melt up, melt down type scenario.
Isn't
Sorry, go on.
isn't that funny? Like how just 1 week of data last week really is proving our point already that we've made for
Yes.
months now.
Exactly.
Yeah.
I'm very happy to see it.
Yeah.
Like, you know, it's very nice when you see everything actually come all together. So this was another trade I had on the euro just here earlier on through today. Actually, that would have been too early. It was on this cluster just up here on the break. Because it was late Asia. There we go. So I'm out of that now. I got out at 116.095. I can see height beyond that to about 116.20, where those pivots are. The pivots do work better on currencies. It's on the NASDAQ, like on indices, that it's like skewed. It's like off for some reason. Final trade was the Aussie here as well. I got in on this break. After we had that tap, we pulled back, started driving higher. I saw that, and I got out just here at 19.5. So yeah, I didn't look at markets this morning like we had some of these earlier drives, but I've caught a good portion of it coming into late Asia into London, so I'm pretty happy with that.
Once again, the Asian session tends to be the nicer one probably than the London session, amazingly. Quick comment here, I always normalize time zones to UTC plus null before I do anything, just to make sure I work from the same baseline with whatever I do in coding. Absolutely, I do that as well. But of course, that doesn't help you if you code that and then, you know, like at some point suddenly your broker switches their servers to another time zone, like from UTC to New York Eastern time or whatever. And so that can be a trap, and it like shows really, you know, how important it is to look at time zones, because otherwise, at least in automated trading or when you're backtesting strategies, you very quickly have a look ahead bias. You know, that the code thinks like, oh, you know, I'm entering at this time, which is like a totally different price when in reality, very mean, very hard to detect. So I've made myself a habit right now. If like one of the outcomes of my automated backtest, especially out of sample, is something like, oh, this strategy has a Sharpe ratio of 2.5 and a profit factor of 18, I'm exaggerating now a little bit, then I know already this cannot be true. This cannot be true, you know. And so I want to be a little bit more careful and look into the details. But these are always, you know, lessons learned in a hard way. Back then in a hard way, now in a way that my max risk is like an evaluation account that I shelled out, I don't know, anything between 20 and maybe $500. So the downside is much more attractive now.
Yeah, much more. I like the 18.
Yeah.
That's good.
This one is going to make you a billionaire in 3 months. You're basically going to own all the money in the world.
Yeah.
You're not making the market, you're making the world.
Unless your name is Leopold, once again. Is that like 22, factor of 22 or whatever? You know,
I mean,
come on,
Lehman
man.
Brothers, 1 to 10.
Yeah.
It's amazing, no? Such a smart guy, but being smart doesn't
he's
protect you against doing stupid risk stuff.
definitely smart, and you got to give kudos to what he did. Like, yeah, right timing, did very well. Still insane returns regardless. Even after getting washed out, it's still a really, really, really good return.
Yeah. And, I mean, I want
At
to
least
do
for
something
him.
like this and still be able to raise the next round of billions of dollars in funding from your investors. I think
Yeah.
the biggest deal was, I think Citadel bought up his books for
Yeah, they
scraps,
did.
really, you know? I think we talked about this last week as well, which is like, they made the deal of a lifetime. Because the very next day already, things were up 10% again.
Yeah, and where the NASDAQ is now,
Yeah.
I'm pretty sure most of those trades are up 50, 60 plus
Sure.
percent.
Sure.
Like Leopold would have been able to recover probably back to 80, 90% of the fund at this point, you know, close to. Anyway, you know, but that's what you got. You have to survive to fight another day. And he got killed on the battlefield that day. Now he's resurrecting, coming back. I'm sure he'll do very well. Yeah, smart guy. Just yeah,
You don't know. Maybe he's going to revenge trade now.
yeah. Either a revenge trade or he could come back better because he'll learn and protect himself against that. I don't know. But honestly, like where he bought in was probably like it's probably going to be a while until we see that kind of a run again because that was the majority of the juice.
Fair enough. Yeah.
There's still more juice to be had, but now there's more risk accompanied with it. So we did have this, sorry, Dirk, from Rahul just earlier. So
Go on.
LJ, please start with New Zealand dollar analysis. Sorry, man, I just saw this scrolling up just now. So New Zealand dollar analysis is going to be pretty similar to my Aussie dollar positions. We've definitely had this run higher, doing pretty well overall. There's not much else to say. Like the Aussie dollar and New Zealand dollar have been bogged down a little bit. That's been in due part with the there's been concerns around the growth and trajectory of the local central banks and such. And whilst the euro has recovered nicely, the pound has recovered nicely. Aussie also got, and same with New Zealand dollar, got hit extra hard when we did have that drop in the NASDAQ and the S&P. And we're kind of seeing that belated recovery, right? So we're coming up quite nice. I would also say there's a portion of it coming through from the carry trade type situation where since the dollar yen carry trade is getting washed out, particularly with Australia, we have quite high interest rates now relative to everyone else. So AUD yen is going to be a very favorable carry trade. It's going to be, reliable. The central bank here is probably not going to reduce rates anytime soon. They're not going to lift them again, but we're probably going to be on hold for quite some time. So that's got a lot of legs in a further carry trade, a bit of a swap over. And then the thing with the New Zealand dollar, it tends to basically just end up moving in line with that, so long as there's no other major macroeconomic shifts going on underneath. So everything's pretty good. Development's pretty good. There's also a bunch now where we're getting more interest in Australia as well in general for funding and other bits and pieces. I know Google put out, they're issuing a bond issuance for AI funding in Australia now. So obviously wanting to tap our pension funds, superannuation, that kind of thing. So I think people are just looking at Australia and New Zealand as a very solid place to invest and where you'd want to buy in at the moment. So we've just had a very technical drive higher when you look across the board. Plus NASDAQ, S&P, that risk on element, they're driving right higher. When they ride higher, we've broken new all-time highs on various bits and pieces of them. NASDAQ's still behind, but getting there. So we've had this push higher. As far as analysis for today, first of all, let me know if you're in a trade. Let me know where you're at, and I'll give you a bit of coverage on that. I do think we can get a touch higher for NASDAQ, for the New Zealand dollar intraday. Same with the Aussie. I'm eyeing just above here. Almost got there. There's a level that's going to be the first point of resistance at about 71.30 through here, and then 71.45 up top where this R3 is definitely the port of call for the Aussie, and New Zealand dollar is basically going to go in tandem with that. If we zoom out, that level comes into this break point where we had this fall through here, tried to find some support, and then absolutely collapsed. This was with the indices falling off back through that period. So we've got this pretty clear breakthrough here, got a lot of momentum to the upside. This next order block, cluster of wicks and candle closes would be the port of call to find resistance up there. So yeah, still bullish. I think we'll get a bit of a grind up. Today we have had some movement. We definitely get reduced movement overall through this period, but we do get this bubble up, melt up type situation like I was saying before. The New Zealand dollar is pretty similar. This is an older level that I have from some months and months and months ago. about 59.40. So that would be a similar cross point for the New Zealand dollar to reach through there. So we've got another 20 pips or so in it.
Yeah, Paul, I saw you asking, I think one time before already about dollar CAD. You're in a short, which is the good side to be in right now when it comes to dollar CAD. If we see a bounce, you actually want to be a little bit careful around this level right now in dollar CAD, because this is exactly, we're trading exactly at the 200 days moving average. So should we get a bounce back, it's probably going to be around this area right now. So that's the only thing, honestly speaking, I have to say about this. It's not a currency pair I look very much at intraday, because it tends to be, with not very much volatility. But you might really want to monitor here on the lower time frames now what is going on, simply due to the fact that on the daily chart, we're exactly now at the 200 days moving average. That doesn't mean, we bounce off it or we go through a way, but you'll very quickly see volatility getting a bit more exaggerated. So last time, look at this, we had quite a bit up and down until it decided, I want to continue to the upside. And if you're trading this on an intraday level, there is always the danger that you get wicked out of this stop-wise. So either you have a quite large, I don't know the time frame you're on trading this, but I suppose it's a bit of intraday trading you are doing that, and not a swing trade. So you want to be careful if, depending on where you entered, if you entered, up here somewhere at 139.09 or 139 even, actually, for me, that would be a good target zone right now to get out of a trade. If you entered like 15 pips ago or something, it's a whole different story, of course. That's what I have to say. By the way, I'm using a ladder, a LJ and Richard ladder on my Bitcoin trade today. So my first take profit would be around this area, second here, third here. When my second take profit would be hit, I would put my stop loss to break even, by the way. So let's see how this plays out during the session already. And I try to make beautiful drawings like Picasso, aka the real void. And you are muted.
I am. Dude, this is beautiful. It looks great.
Beautiful, no?
I just realized I've still got the real void thing.
You do?
I didn't even realize that.
Echoes of last week.
Yeah, no, this looks perfect. This looks beautiful. I think this is a work of art right here. I think this will go for quite a lot of money, right? A lot of Benjamins right here.
Yeah.
So, however many Benjamin's TP3 is, I think we'll get that for this print.
Let's hope so.
It's beautiful.
If we do, I'm just going to quit for this week again.
Yeah. There was so just following up on Rahul's piece, and also on the back of dollar CAD as well. Okay, so in Euro NZD, I actually like this a lot better. Even I'd like to know what point you got in, but I think this is very nice. Like, we've had this run up here, a failure, a pretty hefty drop back, found some kind of support, buying pressure, another attempt, failed to get those highs, ran into the 200 moving average on the 4 hour, come right off again, just as aggressive. This is clearly a pretty firm rejection area right there. Then you've got this overall descending, lower lows coming through here on a higher time frame, and also the lower highs up through here. So that's going all the way back to April. So I very much like this. I think depending if you're looking at intraday or like a swing trade, I'd be holding this right down to somewhere around 1.9420 or so, and potentially like a further break. I think you'd find some kind of support here. These currencies don't tend to just like fall out of bed when you get this back and forth. You'll tend to get another back and forth move and then resell from somewhere in that top cluster. Only if we break that area. Otherwise it'd be something like this, down through here, up, another failure lower, and then a deep break. But yeah, overall, I really like this. This looks really good. So my first portions would be pretty much where the bottom wicks are here, and you can see on the pivot points, S1, that would be my TP1 for today, 1.9555, I'd say, just a hair above them. But
55.
if we, 55. If we get there, I'd say we probably continue pushing through, especially with the direction on the Aussie and New Zealand dollar. They are a lot of the way through the move today already, so you could get that impulse where they top out, pull back, and then therefore the exotic sort of tangential pairs, cross pairs, start to also pull back. So you could see this come back up from here first and then drop lower. But I'd definitely be targeting this lower band about 194.70 or so down here before considering any kind of pause. And then depending when we get there on the day, whatever else is going on, you might get the impulse to actually drive a touch lower, or this becomes the first portion. Drive up there, or it's here, drive up there, and then down. But yeah, I like this a lot.
Scarlett got into... oh, you're waiting for a correction to enter long. I actually just 1 minute ago got into long on the gold future. Let me show you why I did that. A bit more risky trade, but confluence lines up nicely, in my opinion. So we're coming down. We failed this up here, but I think we're later going to break through. We have a little bit of a demand zone. We have a bearish divergence on the Z-score normalized MACD indicator, my version of it at least, which this always lags a little bit because it needs to confirm pivot highs and pivot lows, which only is, of course, possible a couple of bars later, so it doesn't print in real time. But we are continuing in this direction of a divergence on the MACD. So that's a layer of confluence. We're trading at a -1 sigma level in what is considered by standard deviation uptrend. So I got in there. It's really a very, very tight stop loss on this one. So on the future, my stop loss is sitting around, it's sitting at 4442. Let me quickly look here, 75. Take profit, 4483.5. Trade maybe I normally wouldn't take, but I like trading gold on live stream. Was very, very good last week. So yeah, let's see how that one plays out. Somehow I have a feeling we are not going to see that much of a correction in the London session for gold.
No, and commodities in general have been up through this past period. The same reason why New Zealand dollar, Aussie dollar, CAD are all up as well. So we've had a broad commodity correction move higher as the whole rate pressure situation has come off the boil. So gold's up, copper's up, iron ore's up, everything's up, right? And then hence why you're seeing Aussie, New Zealand dollar, and CAD being stronger. Very commodity, heavily linked currencies, and so we're seeing that persistent strength go through them as well.
But
if you,
just to mention very quickly, just because I did this right now, Scarlett, please, it doesn't mean you have to follow me right now. I know, not particularly you maybe, but some people here are always looking like, oh, are they going to trade something? I'm going to copy trade them. Please don't do that. It's just because I did this here. It's not a guaranteed win by all means, especially if we're talking about Dirk and scalping day trading. You should listen to LJ though. No, just kidding.
Hey, well, last week I think we both cleaned up on gold.
Gold was insane.
Very nicely.
Plus 6% on gold, really. 5.5 net. Lost 2 NASDAQ trades, so still 4.5 up for the week. Amazing.
Yeah, it was very good. I ran through the 200K account last week as well, mostly with gold.
You passed the evaluation, or?
Yep.
Nice.
Yeah.
Here we go.
First phase, so on to second phase. Yeah.
Good one. Yeah. That was quick, man. What did we like 7 days, 5 days, or how fast was that?
I think it was like 2 days.
Come on. That is ridiculous.
I can show you it after. If you let me just jump on.
I made like net 4.5%. And then comes LJ, past evaluation. So many funded accounts, I don't know where to put the money anymore. That keeps pouring in. I'm just going to buy Australia.
yeah. Look, I'll show you after if you want. I'm just gonna jump up, get like a soother thing.
Yeah, sure. Do that.
Just being a bit razor blades again.
Do that.
So yeah, give me a sec.
That's karma, by the way. No, just kidding. Here we go. And yes, welcome. Who was the new one here? Rumi Rike. Maybe you are from Scandinavia somewhere. Rumi Rike. Welcome to our live streams here. Welcome to the 5ers family. Happy to see you on board. And seeking for long from 4378. I think that's more what LJ was looking at as well. Bear in mind, I'm always nowadays looking on the future here because gold is nice with order footprints, at least for me to trade on, and I don't get that necessarily on the CFD, but you can translate, of course, trades like this to a CFD as well. You're probably going to have what is that price difference right now? Trading 456 on the future, CFD is 4. So it's around, you have to deduct maybe $50, $55 always if you're trading the CFD, that is. I was just thinking about you, actually. I was just thinking like, I need to talk to LJ how we can get the trading account to Frank. Let us wait until LJ is back, and then we're going to work something out as well. Well, when it gets to accounts being funded, LJ is the guy to talk about. And I mean, basically, he shows everything he does always live here. So again, not saying you should copy him, but you can get like into his head a little bit. And of course, to me, he's one of the most gifted traders out there when it comes to trading in a discretionary way. Like when not, automating everything like I mostly do. That's also my experiment right now, to trade gold in a discretionary way. The only thing I don't like about trading discretionary at my age, at least anymore, because it forces me to concentrate on one thing, like for 10 or 12 hours. But I'm somebody, trading is not my only business. I have other business and companies running as well that need my time. I don't mean this as any excuse, but I don't like sitting in front of charts, really staring at them for 10 to 12 hours. When I was younger, different story. Now not anymore, but most of the trades I took in gold here were actually done during our live streaming. So yeah, maybe that's what I should continue. I also started, by the way, LJ, you'll be happy to hear that, utilizing my Black Arrow account.
Yeah.
Finally. The only thing I do not like about it is that on the normal future, like the minimum lot size 1 is too high for 20K account because you have like $10, of per pip. Then you have like something in between. I don't remember the
mini.
Yeah, the mini where it's $1, which is either if I want to risk 1%, I always end up like either I have to risk 0.7% or 1.4%. And then there's a micro one where there's absolutely no liquidity. At least like when I try to load this onto my chart, it shows me nothing basically. But can be me as a user, I'm doing something wrong. So I still have to find my way around that.
Yeah, there's a bit of tinkering you have to do with the platform to get it all set up properly. You'll have to play around with it and try and use like the sim one so that you don't mess up your other account, if you're tinkering with things.
When I try, things, of course.
Yeah.
There are a couple of things that are a bit inconvenient. Also, the order functions are a bit like, I know the control and the shift one, for your predefined short and long ones, but I don't have predefined ones. It's always a bit different, where my stop loss is, where my take profit is. So I was like looking into integrating something like the position sizer we have on the MetaTrader 5, which is like doing exactly what we want, but you cannot do that because bless you, the order types or the way they process orders, it's not meant for this. I'm looking right now into something because I read online you can connect through NinjaTrader, maybe also to that platform. which would like make it better for me, because Ninja Trader right now is something I'm learning heavily.
Yeah, I have had similar troubles. Like some things work really well, and other things have a few, I don't know, tinkering issues or just So yeah, I think if you can get hooked up that way, definitely better. I know they are looking at another platform, I think, as well to add. So I'm not sure what's going on there, but yeah, play around with it, see how you go. I'll send you some stuff around that as well.
Yeah, please do. And then, by the way, when you were gone, righteously so, Frank Kennedy asked where his reward is. What did we agree on?
I have no idea. That's what I can't
was
remember.
Was it a 5K account, if I'm not mistaken? Two-step 5K account?
I think it might have been.
I think it was, no?
Yeah. And I think though as well, didn't you get cooked on one of them? Because I said to Frank the other day, I was like, oh, I think Dirk's gonna send you a bill. Because didn't you hold one of the trades further into news and then it got taken out?
Yeah, I did.
Yeah. Because I exited earlier.
But it's okay.
I think you kept
I want to stand by my word. Of course, I just need to find. If I tell now, send like your credentials to this email, I know like I'm going to get 100 emails, 99 of them being fake, and I cannot differentiate which one is your email.
We can do that. We'll get Frank. I'll talk to you, Frank.
Frank, maybe if it's okay for you, I'm going to ask like support for your email address. I'm going to write an email then to you, and then we'll just take it from there.
Yeah, we can do that. There we go.
Yeah,
awesome.
And you must have at least win like a couple of $100,000 on that trade.
Dude, these things are saving my life right now. For my throat. Like the anesthetic portion in it.
Funny enough, we have those in Germany too. They are called differently, but the package looks the same.
Yeah. They're called something different? Is that because it's in German or?
No. They have some kind of medication in Germany always has Latin names.
Oh, really?
Yeah.
Okay.
Because it maybe sounds more advanced, So you're never going to see like, super powerful mega throat soothers. It's going to be whatever that is in Latin.
Fair. Ours are always some like random scientific name that you're like, how did someone... It's like they put in like a random word generator and then said, mess up all the letters and see what it sounds like. Make it phonetic.
ChatGPT, create a medication for me, crack that genome, and then give me a nice name for that.
Yeah, exactly.
Frank, let me just make a note here into my journal, my daily journal, that I don't forget about you later on.
Mm-hmm. Yeah, no worries, Frank. No worries.
Okay.
Let me just scroll up while you're doing that. Make sure I didn't miss anything. By the way, guys, throw anything you want at us just now. I think we've got some other sort of directional points to talk about, maybe with the market in the next little bit. But if there's some more stuff right now for London Open and such that you guys are interested in or wondering on direction, etc., toss it at the both of us.
Pardon me.
Henry saying dollar yen short on 1 hour time frame. That's an interesting one. Have you been entertaining dollar yen, or are we still waiting for this?
I'm waiting. My price trigger is at 59.80. Where are my?
This is looking pretty.
Where are my trades from last time? Wait. I need to reload this chart. My skulls and successes are all gone here. What do I call this one? 5ers overview, I think. Here we go, that one. Ah, luckily I saved them all. So my failures and successes are still documented here. So yeah, I'm waiting right now, like last week, for another chance to have a short entry. I have my limit at 59.80, so we came close a couple of times. I thought on the weekend, like, oh my God, they are going to intervene already very early on Monday morning. But seems like now the market is quiet. I might miss out on this trade, but due to the lack of alternatives, we might as well see people re-entering the carry trade here. Although I have to say, like you were pointing out last week, there has been a lot of a carry trade unwinding already. So of course it's to question: are people really going to re-enter? Are institutions going to re-enter this one? It's I don't know about the lower time frame. If there's really something to look at, do you have that? A view on that, LJ?
Let me jump over. So, I gotta say, I think we might be starting to roll over now. So, this is my okay. That was a this was obviously an arrow drawn on the high time frame, which on the lower time frame it looks all messed up, I guess. But it was basically this: we'd come up through here, either hold this or crack a bit higher into that 164 zone, which we did perfectly. That did hold. That 163.80 to 164. We got just a hair below 164, came back down, and then we'd have a bit of a doop-de-doop, and then right down lower.
I like what you do with the kind of saucer shaped thingy there, the red one you are drawing.
Oh, this one.
This exhaustion pattern a bit.
This one here, or
yeah, that one. No, that one.
Yeah. So I mean, overall, yeah, we had that port of call coming right down to this support down around those 155s. That's a clear level to break for the dollar yen, and this is also that bottom edge of the channel that has been running through here and held us tight for quite some time. So we basically tapped into the base of that, and also right by the, what do you want to call it, order block or wick lows or whatever support from the previous intervention. Bounced off that, we're now curling over through here, and I would like to see us crack through that level again and then right back down to 150. I think this is pretty nice. Now going back to the saucer helmet type thing, the rounding out. Whenever you see this pattern, this is a very nice indication that you've kind of rounded price out and you are heading lower. I think we saw this on gold as well, Dirk. This was the same thing I highlighted here on gold when we got that.
On the other side, yeah, on the downside.
On the downside. And then that we created that saucer pattern, and then you tend to run higher, right? So we're kind of seeing the same thing on the dollar yen just here. We're getting that saucer pattern and then run lower. Plus, on top of that, we've now had the triple whammy of CPI, PPI, retail sales came lower, jobs numbers lower, all the revisions have been quite high. The Fed seems to be coming off the boil. The market itself seems to be starting to come around to that fact that we're not going to get Fed rate hikes. When we saw the data prints that we had last week, saw the initial movement, we did see the dollar come off, that easing of expectations for Fed rate hikes. We then saw a bit of a rebound in the sense that, like say euro dollar, for instance, ran up, it then retraced. That was due to the bond market again. Short end yields reacted and held in line with the news. The long end, so 10 to 30 year, reacted initially, then pulled back again. So that would indicate that the long end of the yields is sort of going off more of a Fed credibility, some long-term jitters around the Hormuz situation and how that leads into financing for the US debt, it seems. Like a bit of more of a bond vigilante, call the bluff type situation on the long end of the yield curve. And I also wouldn't be surprised if some of that also comes down to the factor with the dollar yen. Obviously, if Japan has to this doesn't really work. They get in a distressed state. They have to put more and more pressure on, sell more US government debt. Then that's going to drive yields higher, which is why, obviously, the US jumped in to join the intervention last time, because the US doesn't want Japan to sell US government debt, because that drives the yields higher, makes interest expense for the US much more expensive. So, however, with that, like I think this is again one of these temporary anomalies. It's still dragging out. It's lasting a bit longer, just like we've seen with this inflation scaries type thing. And eventually, the market comes round to it that that's not happening. Everything comes back off. So I think it's just a matter of time for the longer end of the yield curve to actually start to recede, or at least stop increasing, start to level off, and then gradually drip lower.
Yep.
So I think we've got a perfect situation with this for dollar yen to come down. I can't see the impulse that would drive us back higher to get some kind of higher entry to short again. So I think this might be some of the final cluster through here to actually get a good shorting level.
That's the thing also. I like that you mentioned that actually. It's the thing most people don't see, that this joint intervention is not because, the USA want to be like great dudes, we're helping out a friend or something. Of course, there's like personal interest, and the personal interest, like Algey just laid out, is, we don't want the yields higher in an environment where we have this large debt to GDP ratio already, where we need to refinance debt that was initially like issued around 0% and now needs to be refinanced at 4% or 3.5%, depending on the maturity, of course, or 5%, almost if we look at the 10 years and above. Of course, you don't want to have that if you're already under pressure when it comes to a high debt to GDP ratio, because we are quickly going to end up at the point where Japan has been for the past 30, 35 years now, where you have kind of this deflationary environment, low interest rates, but not really a lot of growth. In modern markets, that means like other superpowers out there are going to absolutely outgrow you. So think of China on steroids. What China has been doing the past 25 years is amazing anyway already. So that's the thought behind that. Of course, like from a European perspective, I could now complain about, why did they sell euros to do that? And which, of course, they do that. I mean,
of course, yeah, because that's the only secondary liquid market outside of dollar that's large enough to sustain it, and also selling euros already. Weak. It wouldn't be so bad that the euro comes up a touch in tangential.
Which is
like it's not going to hurt the ECB, right?
Exactly, which it has already. I mean, we've seen the last days quite a nice move, of course, from euro, which is also like I think a little bit catching up on the reality we see in risk-on assets. Like the euro, in my opinion, has been lagging a bit behind that. Very quickly, just one update quickly. The Bitcoin trade, which has reached TP1 now, so 1/3 of it chips are off the table right now. Should we see TP2 during this session, I would move my stop loss to break even, but we are 1/3 through the trade already. Then I quickly want to answer a question from traders. I manually copied 8 trades between 2 bootcamps accounts unknowingly. Support says risk team reviews only after passing. If I stop now, could there still be a compliance issue? Just going to answer this now based on my experience with the 5ers. First of all, it's good that you proactively reached out to support. That's very important, that you didn't play the card like, I hope they don't notice this, because they will notice stuff like this. Then, you have to see, of course, by the end of the day, did you do like, let's say like 500 or 700 trades to pass pass the evaluation, or did you do 10 trades to pass the evaluation? 10 trades, of course, probably the answer would be like, hey, you cannot do that. If it's like a low percentage of 500 trades, so 8 out of 500 trades, the story is like totally different, of course. So this is really reviewed on a one-to-one basis, at least from my experience, you know. But the thing here is really what I very much like is that you proactively reached out. That is very important from my experience. It happened to me as well before. You know, can happen like if you're trading many evaluation accounts, prop accounts, maybe across a lot of prop trading companies at the same time. Stuff like this can happen sometimes. You know, depends really on, was that like a total of 10 trades and 8 trades violated this, or are we talking about later on 500 trades in a row? At least from my experience, maybe you can correct me, LJ, if I'm wrong here, if there's like a hard rule for something like this I don't know about.
Yeah, no, it won't be a hard rule. Like, if you've noticed that you've already contacted support, just like Dirk said, I mean, that's always the best thing to do. If you make a mistake, you know, then you've got, you've sent that email, you've got that sort of paper trail. You can say, hey, look, I recognize what I was doing. I realized it was just a mistake, it was an accident. And then since then, I've deviated from that and gone back to how it's supposed to be aligned with the rules. Now, especially 8 trades, that should be fine. Normally with most of the rules as well, there are outside of like where you're explicitly doing something, egregious like tick arbitrage and this kind of like weird, you know, kind of stuff. You know, people make mistakes, and so long as it's not like you're doing that perpetually in a habit type manner, if you've made an error or it's been a couple of times or it's taking a little bit of time to realize and then you did realize and then you stopped, they're going to see that you stopped. So it's a pattern that they're looking for. So if you stop, no problem, trade it as normal, they'll see that there's no issue. You can continue on, no problems whatsoever. Duck disappeared, that's fine. Yeah, so you shouldn't have any issue. So especially, you know, it's only 8 trades, like you've surely not obviously passed all 3 phases through it with just 8 trades across the 2 accounts. So yeah, just trade them individually now and you'll be completely fine going through. So hence, just like, you know, the risk team takes reviews only after passing. If you then go through the next like 2 or the second and the third phase or whatever, or if you're still on the first one, they'll see that, yeah, you might have had that for a bit, but then you realized and all the rest of the trades have been independent. So it shouldn't be an issue at all. But definitely the big takeaway is that, yes, you jumped out to support, reached out. That's the important thing.
I don't understand this question here. How does an order market move when no one is currently allowed to place orders, gentlemen? Ties into what you wrote first. Tune in to pre-market movement, and technically it should be happening in an equal opportunity free open market where everyone has the same limited access. I try to understand what you want to hint at. If you are saying like, okay, we are trading futures here or CFDs on a market that is not open, like New York Stock Exchange, I mean, those CFDs and are trading, or the futures or also are trading like 24/5, you know, Mondays to Fridays. So there is a market. We are not trading on data that is somehow made up. This is...
Yeah, so are you talking about like when the like stock markets are closed? How does that work? Because basically there's derivative markets, right? Say futures, you got options and things going on. And so hence that will impute a derivative price for the actual stock market. So when the market, the actual stock market opens, where you can buy and sell shares at the actual market open, you might see like a gap if you look on just that pure market and not on like a futures feed or something like that. That's because people have been trading in the background on an implied price, where people are willing to bid up through derivative contracts, which then have a follow through to the actual market, and then price will jump. But so yeah, it's basically through derivatives overall. The same way that like trading a like CFD is like a derivative. You're not trading like direct FX, for instance. But then the market makers, the brokers, your liquidity providers go to the real market. They have their whole book where they balance that out. Yeah. And then once markets are open, they deploy those trades and balance it all. But they try and provide an offering, a service for you that you can trade regularly without those sort of hard restrictions, and they manage that other difficult stuff on their own end, and that's their entire business, right?
And
hence why you pay commission and spread and all that kind of stuff for that service.
The derivative market, especially the futures market, is also far larger nowadays than the spot market. So if you trade like the NASDAQ future or gold future, that's a far larger market than the spot market. Nowadays, usually the spot market is like, I don't want to say following what the future market is doing, but the trend is done by the future markets, and when there's a very fast hedge funds out there or quants out there, market maker companies especially, they are going to trade the spot market of what is happening on the futures market. You saw that a long time ago in Bitcoin, happening with a clear edge actually that everybody could exploit. You cannot do this nowadays anymore because we have the spot ETFs right now, but just because the official market is closed, that you cannot physically buy, I don't know, Nvidia shares, doesn't mean, there are pre-markets, especially when we talk about US stocks, where you have multiple market-making data centers that also allow you to trade pre-market and post-market.
Yeah, correct. So what's the total size of US stock markets? Like 70... Google, at least Google says 75 trillion. I think it's a bit higher than this. We got close to 90 trillion at peak, I think. But an example of, I think all derivative markets in total add up to 5 quadrillion. It's somewhere between, there's a plus minus of 4 and 5 quadrillion. So no one knows if there's a missing 1 quadrillion of exchange between people. So that is on both sides of just people making transactions between each other, which is based off a derivative underlying asset, and then you got another derivative and another and another and another, and it goes down, down, down. And it's kind of like you got the top of the pyramid, which is straight stocks, shares, straight exposure, and then you've got other markets created off that, and it goes in this big pyramid like that and expands. So that goes for FX, bond markets, commodities, stocks, literally everything out there that you can trade overall.
Sure. Google wants how large the bond market is, just that we can see that in comparison, because I think US bonds, and because I don't think most people realize how enormous that is.
130 trillion? And then US is 50 to 51. According to, I guess, Gemini, whatever. But yeah, anyway, it's massive. It's way bigger than the stock market.
Maybe you can, just by this, see the reasoning why LJ and I sometimes like to talk about the bond markets, because, it's if you have, the heavyweight champion sumo ringer being in the in the ring, you might want to pay more attention to him than the middleweight champion, which would translate to the stock market right now. What a stupid and silly comparison I just made. Anyway.
No, that's totally fair. It's saying NASDAQ is about 50. I think this bond market data is wrong, because the bond market is more than 2. Yeah, it's way, way bigger. It's 2.5 times bigger than the stock market, at least. Even mortgage-backed security, like mortgage bonds, for housing is as big as the stock market. US.
Okay, but this is market capitalization, I think, right now you were looking at, no? 54 billion.
Yeah. I don't know, maybe I got to prompt better to Google. Yeah, I probably have to prompt, because now we've got, so anyway, there's all the derivatives and that kind of stuff,
The thing is about bonds also, about currencies, also there's a lot of OTC trading on, but you cannot track, really, where you have direct trading between banks, we have direct trading between companies and banks, like Apple calling JP Morgan saying, we want to issue a bond of 100 million, 100 trillion or whatever. This size usually, of course, goes into the market and you see data about this. But the shadow market especially nowadays when it comes to credit. We had this last week, when we talked about new loans being taken out to build up AI data centers in the vicinity of 500 billion US dollars. This all goes through private credit companies. This is not going to appear somewhere in the official statistics of bonds traded on the NASDAQ. Yeah, thank you. It's more the vicinity of it. Yeah, 257 trillion.
Yeah. Which is
that's
big.
It's insane. What is the deficit? What is the total amount of debt right now? Like of a US, like 30 or 35 trillion, or what is that? $40 trillion already. So that market is like, what is that? 5-6 times larger than. Oh, we can watch it live going to 40 trillion here soon. Like when the whole US national debt is crazy. Oh my God. I still remember like in 2008 or after 2008 when we were talking about something like 8 trillion or 5 trillion or something like this. And people were already like, oh my God. However,
look, Dirk, I had a few good gold trades. This is my brokerage account right here. As you guys can see, it's ticking up pretty nicely.
This is just his automated strategies.
Yeah.
He has basically ChatGPT running from household to household.
Yeah.
Buying gold.
I hacked into every single Tesla and like EV car on the planet. They also run a server personally for me, and it links up to Starlink. Plus everyone's computers. You guys are probably infected watching the stream as well. You've got a bot on your computer.
To be fair, underneath it says your chair is only $119,000.
Ah, damn it. That's all I get. At least it's increasing by $63 a day. That's actually pretty wild to look at.
Pretty wild, no? Really.
If you think about, every US citizen, your debt portion is increasing by $63 a day.
So you gotta earn more than that, to help paying the bills.
But I think if you look at average income and then you strip out taxes, that's not far away from what everyone earns each day, obviously.
You know what the problem is with what you're showing us? The number is red, so actually this is the drawdown on your account.
Oh, no. Yeah, that's true, because we got down here, it's plus 21, so that's a plus 21, that's like drawdown. I guess August 12th, I had a good day, I had minus 28 billion, so I reduced the debt right there. We were doing pretty well. I had a bad week on the 11th, apparently, plus 50 billion. Yeah.
Man, I just want to get the kickbacks you get on your trading volume for this.
Oh, man. So there were a couple other questions. So Mr. RS, we had this before. So I think we can kick into some macro stuff in a second.
Let's do it, yeah.
First of all, there was another piece here from Africa Tech. And we also didn't address the one from Africa Tech that Rich brought up before. What was your biggest aha moment coming into trading? So I guess we can combine these two together. And then after that, my chart is lagging out massively. I might just reset real quick after we answer this, and then we'll go into macro stuff.
Sure.
And I'll bring up some of the things that I had through here. So first of all, I'll start with the biggest aha moment. I think I, as you guys know, had a pretty good time beginning trading, hence why I sort of decided to just commit to it. So that was just out of me sort of flexing my general curiosity for things, which I very much think is how I got to the macro standpoint as well. Like when I was trading, I wasn't trying to trade. I was trying to figure out the economics of why I should buy something or sell something, right? Is this actually a good investment Should I hold this and it's going to be worth more in the future? Or is this something that looks kind of good, it's peaked out, and I want to get rid of it? And if you go back to me as a kid as well, it's probably been something inherent in me. I have Pokemon cards and that kind of thing that I've held on to, used to play with, but I keep them in pristine condition. I've still got a Batman from when I was like 4 years old in the box, where I got it, for my birthday.
Wow.
But I found out that you could invest or hold on to things and they gain value in the future. And I literally found that out. I got this Batman. I was like, oh, this Batman's really cool. Me at 4 years old, I'm like, oh, it's definitely going to be worth way more in the future because I was 4 years old and thought it's cool. Now, funnily enough, obviously, it actually is today, but that was just literally like, I think this is cool, so therefore someone else is going to think it's even cooler in the future, and apparently this is a thing. So I had that inherent point, and so that's how I started trading and such, and then just decided to look at certain things that are overvalued or overcooked or appropriate or expanding, and either sell or buy it on that basis. Now from there, at that standpoint, I was still looking at like making money, making dollars per se, back then, because I started out with very little money, was just happy if I made a couple $100 or $1,000. I think the aha moment for me then, when I did start making that kind of money, like consistently, like 100, 200, 150, 100, 100, then it was compounding. I was like, okay, I can do the same thing, but have it compound. And then once I figured that out, and I was like, how did I not, I mean, I was only like 6 weeks in, but I was like, how did I not think about this from the start? So obvious. I was like, okay, cool, this is the way to go. And then that just took off. And then that's when I was like, all right, I'm out. Because I started, instead of being like a static level, just printing like an income, or like thinking about like an hourly wage when you're like 19. You're like, I'm comparing it to like what other jobs if I go work in retail or something. So if I'm going to get paid, back then it was like $18 an hour in retail. I just made $50 in 45 minutes or sometimes 2 hours or whatever, but you average that out. Okay, cool. Then I can compound that. The compounding was the aha moment. And then obviously you draw that out for a couple of years and everything just grows. And you don't actually need a huge amount of money. That was the big thing, because the compounding thing takes care of itself. So you can start from like a small base and just let it grow and grow and grow. And then all you have to do is be consistent on your approach to the markets, your activity, all that kind of thing. Not mess it up, and it will just take off. So I'd say that's the biggest one for me overall.
Very interesting. Yeah.
Outside of, I guess, finding out that somehow how I think aligns itself very much with markets. So I stumbled onto it, and then for the longest period, like, stuff was working, and I was doubting myself, going like, oh, is this just like a good run, or am I lucky, or like what's going on? And then over time I found that I do have some kind of, I don't know, construction in my brain that works well with figuring out these this sort of problem solving of markets, economics stuff in general, I guess.
Very interesting.
I don't know. What about you, Doug?
Well, for me, honestly speaking, it was like I'm the second child, much younger than my brother. My brother's 9.5 years older than me, so I was always feeling like I had two fathers, in a positive way, in a negative way. Also, that my opinion didn't count very much within decision making, which I carried through the earlier days of my career as well. That I emphasized too much on the opinion of others who I thought were smarter than me, or like more street smart when it comes to trading, in a sense. And that took me so in my early days was very often, that I had like a fundamental idea, which was actually good, that this or that would be happening. But I very quickly was convinced by somebody else or a news article that I read online, that I'm wrong about this. And once I realized that actually the way at least long-term trading I approach is much, much better than anything you find out there, at least like for as free resources. That was kind of an aha effect when I trusted
Yeah.
into myself. When I thought like, yeah, everybody is saying X is going to happen, but I think Y is going to happen. So in a sense, like, this saying, I don't know where it originated from, buy when there's blood on the streets, when in reality, everybody's going to panic then. And I saw that proven the last time, again, during COVID, or in the aftermath of COVID, when we saw inflation rate going up to 9%, where I had, and this is still on video, guys, if you try to find this out there, you will find this, where I said, if we are over a threshold of inflation of 6%, and then we have the first time inflation coming down again, that's almost always the bottom of the stock market. And I went through this with this, and of course nobody believed me back then. And this was the last time I was like, I mean, I've been proven right there a couple of times before, but that time it was like, I mean, come on. This is obvious. How can you not see this? Yeah, Strait of Hormuz, another one. What we're talking about right now, about interest rates. It's like for us, it seems so obvious because we have the self-consciousness, to stand our point. Because we know we research our point very well, and the fact that we are a little bit an outlier of what is priced in real time or what is especially stated by public media, the clickbaity type of action there, actually makes me more self-confident about this. That, plus the fact, honestly speaking, that I'm good at data science and I can very quickly find out what works and what doesn't work, just based on my own coding skills, plus nowadays, of course, topping that up and making things easier if I use something like Claude Code in the Faber model, for example. What I'm still struggling with, and what I've been saying this last week already, what I've been working on very heavy is this, when it comes to day trading, the discretionary part of trading. So the one where you are like super, super good in earning your money right now. This is why I like to stream with you so much, because I know I can learn there a lot, still. That I took profits too early, that I was like, didn't really know, how can I quantize this? How can I translate this into an automated strategy? That's also why I always do these live gold trades, for example, now, because first of all, I want them to be documented. I want to put myself under pressure, and I want to get to the same level, which I think I've reached now, honestly speaking, where I know I'm confident about what I'm doing there. That doesn't mean I win every trade, of course, but together with my risk management, my 1 to 2R, I'm trading there. This is going to earn me money long term. And that's the beautiful thing about trading. You always, I know you are very interested in the automated side of trading, LJ. I mean, I told you before, I don't think you should go down that road because I'm afraid you're going to lose your natural verve when it comes to trading. And but it's don't let me get too philosophical and talk about that it's just this giant puzzle that nobody can solve. You can just get close to solving it for a period of time until you need to reinvent yourself as a trader once again. That being said, Bart, welcome.
Yes, thank you, Dirk. Yeah, I was just listening to your beautiful story here. I think everybody was.
How's it going? Doing well?
Yeah, it's going well. I see on, I think it's your screen. I see also.
Yeah, it's my screen.
Yeah,
that's my screen. I was saying to Dirk before, I will probably try and reset shortly in a sec, just after we run through this stuff, because it's starting to lag out. But I did want to, and maybe, Bart, you can answer this after as well. So we were talking about what was your aha moment in trading, and then also we had the follow-up with that of what's the biggest mistake you see traders make when attempting a prop challenge, right? Now, first of all, to back up what you were saying, Dirk, as well, that was definitely one of the early pleasures I think I have talked about before, I'm pretty sure in the past as well. especially when I was trying to learn at the same time as doing things. But I'd watch things like CNBC, Bloomberg, Fox Business stuff, like all the financial markets, news entities and that kind of stuff. And then often see them talking about something. And I'd be, doing my own research on markets and learning things. Like, it doesn't make any sense.
Exactly.
I used to have it on, and literally as soon as some pundit, some talking head comes on and he talks about something, he says like long this or long that or whatever's going to happen, I'm just like, pull up my, imagine this is my computer, I'm like, yep, short. And I cleaned up doing that. It was so good. It's like the inverse Jim Cramer type thing. But yeah, I used to do that to test my own ideas and own thinking and hear what other people are saying. And I'm like, okay, well, that doesn't make sense because of this, that. And so when I was just doing it by myself, didn't have anyone else to bounce ideas off, I'd use those kind of financial media to present those kind of talking points or whatever. And then I would systematically go through it and debunk it and then either take the trade or not take the trade if it's worthy, right? So those are probably the big aha moments for me. I know for a lot of traders, it's like trying to get around the whole not trying to use trading as like a making money thing, right? Most traders are trying to just get the big bucks. They risk too much. They get scared in taking profit when they do have a winning trade. Those kind of more management things. I never got into trading for the reason of money directly, more out of curiosity, and I was trying to be sensible with my money. So it was more just like, this is sensible in what you should do. I wasn't trying to like make a boatload or whatever. So I definitely started from a different standpoint. Whereas most people are doing something else, get into trading as a side thing to make extra money. So they're focused on the making money part rather than the actual trading and curating the craft per se component overall. But yeah, with that said, I'll let Bart give his rundown, and then we can go into the second portion after. I'll just restart my PC and stuff.
Yeah, if you also excuse me for 5 minutes, Bart, I'm going to be back then.
Yeah, that's fine.
Bart.
No worries. I can do this.
Be on your own for a second. You can run the ship and run through your trades. My computer's about to. Yeah, that's
no worries.
That's good.
I will see you guys.
I can hang around until Dirk comes back. My computer might just freeze up and crash at some point. That's the only point. It does that every time when this happens. So.
Yeah, no worries. But yeah, it was like about the moment when it finally clicked, I think. Where you understand. Yeah, I think for me the point was first I already did some trading for about a year or something, and sometimes I was making a few weeks, a few thousand bucks, and then I was a few losing weeks, and I thought, yeah, my strategy is not good enough. But eventually I finally realized that even if you're a good trader, you can still have like drawdowns. So I thought also like by the internet that you need to make money every week, every month, so on. And I did not make that. So I thought, yeah, I'm not good, or the strategy is not good, and I can do it, and I need help and everything. But eventually, because I did like programming and a little bit more of math and like more backtesting, I eventually saw that I have a good strategy, but it's normal to have just a few weeks or months in drawdown. And because of that, I got like, I trusted myself and the strategy more. So if I'm in a few weeks drawdown, I thought, yeah, it's fine, it's okay. And what I also had, I had like one strategy, and it was only good in like sidewards markets, and when it was not a sideways market, I didn't make a lot of money. So that was also the point that I was making other strategies for like the long market or the bearish market. So that was like the two things what really got me that aha point. I know it now. And yeah, as example, let's see, maybe I can go
So
to my
learning
5 steps.
to have that confidence in your approach, even when it's not like it's had some success, then it's pulled back for a bit, but then committing to it, and then also within those periods where it has like a brief pullback or something, developing alternatives, right? So you can still have that exposure to the market, but you've now got a new approach where you can tackle the current regime, per se. Rather than trying to beat your head against a wall when it's not working, realizing that the market does change its sort of character regularly, if that makes sense.
Yeah,
Yeah.
yeah, that's right. Maybe I can go to my one account of me. It's a little bit slow always when I'm in the live stream, a bit laggy. But what you can see here is like on my 100K account, the top was on like March. Then I got a really big drop, and then I got like months of slowly getting up again, and eventually like getting a payout back again. So this is like 4 or 5 months of a drawdown.
Yeah.
But yeah, so I think some people think if they're in a drawdown for 3 weeks, they will say, yeah, I can trade, I'm not good. But yeah, still, if you got months in drawdown, I still know that I'm a profitable trader. And yeah, on this account, I focus a lot more on like gold breakouts. And then I know from, yeah, the last months we didn't have like big breakouts of gold. And that's why it took like months to get there. And then everything pays back for the last few months. So I think a lot of people just need to, yeah, just chill and don't want to make a lot of money in a short period of time. I think that's the most important part.
Yeah. Persistent and
Nice.
don't give up. That kind of thing. Yeah. All right. Let me jump out now that you're back, Dirk.
Yeah, sorry, yeah.
Because my audio is starting to freeze, that kind of stuff. So give me a second, guys. I'll be
Sure.
back.
Yeah,
Yeah.
that's a nice thing, and it shows like resilience. It's like you gotta trust into your own skills. You gotta, if you have a lot of data points, like that this is something that can happen along the line. So it doesn't mean the whole strategy is worthless. If you are just relying, on what your last 2, 3, 4, 5 trades were, of course you're going to get into the psychological prison of doubting yourself, of thinking, oh, I need to amend my strategy now because my last trade, could have reached my take profit if I just like tweak this and that and so on. That's the beauty I like about automated trading, honestly speaking.
Yeah, yeah, I agree. And also some little bit about the chat. I say the good morning part. Good morning, guys. Yes, I'm 21 years old, if you're asking. I see a lot of the same names in the chat, like Unbiased Trader and Usam. There are every week, I think.
But you can see here, no? Just because you are only 21 doesn't mean you cannot have a funded account, as Bart just is proving here.
Yeah, that's right. What were your average number of trades in a day? I think. Can I see that also on the dashboard? I don't look there. I think
think
it was like. If it's loading. Biggest loss? Not really. But I think like one a day or one trade 2 days.
That's your
Or in a
long
month.
only strategy, right?
Yeah, I did like more longs, as you can see here. Buy, 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 sell, buy, buy, buy. So it's a long of buy orders. Yeah. So I think like one day. Now I'm in 4 together, and then sometimes just a few days nothing, and I get like this now a few trades a day. I would say, what's the best approach if you want consistency payouts? That's a good one. That's
Be
tough.
profitable.
Yeah, just be profitable, and having a lot of different strategies, and don't risk too much, I would say. Because you can also do like high risk and blow a lot of accounts, but get a lot of payouts and big payouts. So that's also a strategy what you could do. But I think if you want to get it consistent, I think you need to chill a little bit more. And maybe have like different accounts. So maybe on one account you do like breaking to the upside strategies, and on the other account you do like short strategies. So then you also always you have one account making money, so you can switch on the accounts to getting payouts. I feel
Maybe just this one very quickly from UVGH8I. I failed to trust my strategy and myself, but now I'm restarting everything from start. Any tips or suggestion? Like I just laid out, from my own story of how I became profitable long term, at least that is for trading, is like that at one point you need to start trusting yourself. And I think it's easier to start trusting yourself nowadays if you do something like I am doing right now with my half discretionary gold trading system, where I pick my trades not off support and resistance lines that I draw, but more of order footprint. Support and resistant lines. So everything you see here is done half discretionary. There's like an underlying like systematic to it, but the trade entry itself is highly discretionary. And what you can do is why can't I remove offline? Probably Remy and I clicked at the same time. Doesn't matter. Like once, maybe you do that, and you do that on an evaluation account, and then you do 100, 150 trades like this. Doesn't matter how long that is, But then, after that amount of trades, you can like statistically make an evaluation on your trading behavior. Meaning, like, first of all, is this profitable? Are there things that you are doing in good, like sticking to your targets, for example, picking the right stop loss, picking the right take profit levels? Are there things you can improve on? And once you, for example, see like, well, I've got like 100, 200 trades, 300 trades under my belt now. The account is up. I didn't lose money. I maybe won a bit, or maybe I won a lot also, depending on your risk management. This will automatically make you more confident. For me also, this is why I love these evaluation accounts nowadays so much, especially on the The5ers, is just the fact, that my downside is limited. If I buy like a 25K two-step account, what is that, like $100, $200? I don't know. Correct me if I'm wrong here, $194 or something like this. This is my max drawdown on this. If I try this right away on an account where I deposit 25K of my own money, and I feel my drawdown is probably going to be much higher. I'm probably going to lose like 3, 4, or 5K, or maybe even more, depending on how much I risk per trade, until I find out this is not working, really. So that's exceptional. To be in this position nowadays, I would have killed for something like this just 10 or 15 years ago. And you gotta get out of your head that you need to win every position. Place your stop loss, place your take profit, and then just let it run. Don't touch it anymore. This is for me over the last year, what I've tried to train myself on to try to copy what I'm successfully doing on a fundamental level with long-term trades, with long-term positioning, to try to translate this also into day trading, scalping, to some extent also swing trading. You gotta, if I summarize it, in order to become profitable, I think this is the occupation where you permanently need to be willing to step outside of your comfort zone, to do things that don't feel natural to you, that you don't want to do, but you need to do that. You constantly need to retrain yourself. And you constantly need to be prepared to that what you're doing today might actually not work tomorrow anymore because the market has changed.
Yeah, that's right. I also see Yusam in the chat saying that he is doing like 5 daily trades a day, tight stops, a lot of risk. It is possible. You can do like small days, day trading, a lot of trades, everything. But the thing is, I think that is the most difficult thing in trading. And there are traders that can do very good at scalping, day trading, a lot of trades just on their feeling. But that is like so difficult that I would not recommend to do it. But it is possible. But I would say, just chill out a bit more. Just trade only like the perfect positions. 1 trade a day is more than enough, I would say. Sometimes if it's not there, I would just go loose. And also with the tight as well, I know maybe you draw down like where the liquidity is and you put your SL like a little bit below. But maybe try something to just get a wider stop loss, because sometimes it just breaks beyond that and it just goes back on a random point. So I also do that, like having like big stop losses. That's, I think, can also help very well. And I'm also searching for like bigger positions on and not like a little bit like on the gold chart where it's like $20 up. I think that's not enough. I think it's better to search for like the big trades.
Yeah, definitely. Yeah, definitely. Todorov asking, Dirk, I've started using the Aurora V2 indicator and I would want to know a little bit more about how you're using it in order to place a trade. I watched the video on your channel already. So first of all, thank you that you watched the video and that you're using the indicator. What he's referring to is what you see here, like the parallel lines. So the purple one here, the green ones, which mark what I call heat shelves. So these are areas where we saw pressure to one side. So for example, to the upside here, we had basically a strong buying section, mostly by market orders, if you see it trending like this. And then it eventually faced sell orders that were sitting there for quite some time. So you have limit sell orders that absorb the market buy volume orders, so to say. And these are normally zones where price at least likes to struggle a little bit. But you should not just rely on those. Because the way I traded this, and I think like the today live example of me entering a trade is a perfect example of that, is that I don't want to trust just one thing. I don't just want to trust like, we have like a support level or resistance level, so price needs to bounce off of it right now. I think that's very silly, honestly speaking, to do that. That is like something you would have done in the 1990s or 1980s, where stuff like this still worked, because the majority of traders out there wouldn't have the same information. So what I try to do is I try to align this, for example, with a lot of discretionary elements with what the market is actually telling me. So the reason for this trade I entered earlier is a good example for this. First of all, we have a good area of support here. We are in an uptrend, which means I naturally want to look for long entries. I don't want to trade against the trend. Uptrend, for me, a prominent uptrend, which this is, You see this by the standard deviation channel. It's really pointing up. Means I don't want to act against the market. Most beginner traders would like to look for contrarian trades there, meaning like, oh, I want to short the market because I think it's oversold or whatever. It doesn't work like this. You can do that if the trend, if we're in a ranging market. So if the standard deviation channel, for example, goes sideways. So I look for, we're coming back into a zone underneath the standard deviation, which shows like, okay, we have an area here where we have resting limit orders that are absorbing volume as a sell pressure right now. I have my MACD, which is my personal version of a MACD, also available on TradingView for free and open source, by the way, called Modern Adaptive MACD, if I'm not completely wrong right now. That is showing me we have a series of bearish divergences. So I have 1, 2, and 3 layers of confluence adding up. I have the proof because of the limit orders that were nesting, that were resting, that were ready to absorb sell volume. That's a good support. You know, somebody is willing to buy there again, and somebody has been willing to buy there for a little bit of time already. Then we have the direction of a trade into the direction of the overall trend, which is upwards. And I like to display this with a standard deviation channel. You can, of course, draw this yourself as well. I just try to automate it as long as possible because I don't want to spend so much time, drawing lines and redrawing lines myself. So it's an easy card. Arguably, probably there's a way to do this better. But it works for me. Plus, then we have a third layer of confluence, like a number of bearish divergences on the MACD, on my modern adaptive MACD. That means why adaptive? Because it automatically adapts to what the current regime is, with a little bit of lag, of course. No indicator can adapt in real time. So 3 layers of confluence make me think like, yeah, this is a long trade I should take. I have a very, very narrow stop loss here because I think if we break below this, if we are trading these lows here, arguably you could put this a little bit lower, but this is hindsight, of course, always. This is the discretionary part. I want to get out of this trade, but and on the upside, I want to earn. For me, the sweet pocket is always I want to earn twice as much as I risk. This is all I did. Like these trades, exactly that I did last week, were all based on this. No difference in this. And last week, arguably, they worked out beautifully. That doesn't mean this is a guarantee this trade is going to work out as well, because you can see we are struggling a little bit right now. So this trade might go to stop loss. But then the risk-reward ratio comes into play there. I know these patterns tend to play out quite good. And if I don't play out quite good, I'm only going to lose 1%, if that is like the amount of money I risk, which I do here in this case. But if they turn out to be good, I'm going to earn 2%. And this is the nice thing, if I earn 2% on this trade, for example, then the next trade is already almost a free trade. Because even if I lose this trade right now, the next trade, I'm still going to be up 0.5%, right? 1%, of course, mathematics, and so it's for me it's like as it seems right now, and as I tell you over and over again, I'm still in the momentum of try to become a profitable, somewhat discretionary trader on lower time frames. That you need these layers of confluence plus a good risk management strategy. So you can only automate it somewhat, so to say, because there's also this element in there sometimes where I say like, I don't want to take this trade right now because I have a feeling the regime is going to change right now. So I don't want to be on the wrong end of a thing. This is also the dangerous part if you are a beginner trader, because you can trick yourself into thinking on every trade entry, the regime is going to change. I need to take my profit early. I need to not trade this trade because I'm afraid of losing money, for example. So on top of like the basic layout of how my logic is on taking these trades, there's a deep psychological layer underneath this. I think I mentioned this last week that I was in contact with somebody who was like a client of a company I worked with, who was actually very good in picking his entries, but he always take profit too early because he couldn't bear being in the trade. He couldn't bear like, oh, I'm up $100 now and things are moving against me again. I need to get out of this trade, which makes him always exit the trade at the worst possible moment. So you gotta train a little bit if that is something you're struggling with. Not everybody is. Clearly, Bart and LJ are not struggling since the beginning with something like this. But if you are, you have an area where you need to work on. So maybe you could consult somebody like Rich from the 5ers, for example, who's an expert in trading psychology to help you to become a better trader or to get rid of those weaknesses.
Indeed. I agree. I don't know what I missed, but what you said, Dirk?
Everything.
Amazing.
I don't know what you said, but it was amazing.
yeah. Only thing, like, you don't want to draw those block levels.
No, I'm not. This one, I'm not
Picasso.
taking.
Come on,
I'm not taking a ladder TT here.
Picasso.
We are in the very beginning of this trading strategy. We are like 20 trades in right now. I can optimize that later on. I don't want to.
You got to draw them manually, Dirk. All right, that's how you learn. All right, you got to take out the canvas. You got to paint yourself.
I'm not a Picasso like you.
One thing I will ask about: what is it that you actually like about the MACD?
Nothing except the divergences.
Okay, because I've always found the MACD a bit.
Yeah, it's a stupid indicator.
Yeah.
So what I did here is this is why I'm not using the classic MACD, because the classic MACD is telling you you should have 12, 26, and 9 on all markets. This indicator was created when markets were trading like 5 hours a day. So totally different markets, of course. So what I do here is I make it adaptive. I cycle tune the periods, and especially I normalize it over the price scale, because a MACD with this settings 12, 26, and 9 on the price on Bitcoin means something different than on the price of gold. If you take because it's just based on absolute numbers, so you cannot really compare it. And if you base it on something on a z-score, which normalizes numbers between 0 and 100, it will. You can make it comparable throughout assets. And so this is what I'm using, and I'm really just looking here. I don't care like, is it like trading down here or up there? I'm looking for divergences. So I'm looking for this one, this one, this one. Like I mentioned earlier, we are still in the territory of divergences, because I noticed that sooner or later price likes to go up, and there's no guarantee, And of course, there are always things that can screw things up. I maybe have my stop loss placed too tight, going to get wicked out, and then it's going into my direction. But for me, this is additional layer of confluence that tends from my feeling. I don't have like true numbers on this yet, but it tends to work into my direction.
Okay, I like that. Yeah, fair enough.
You could do the same probably with, I don't know, RSI divergences or stochastic divergences.
I like a stochastic the best.
Stochastic, slow stochastic.
Three sort of classic momentum, whatever, pieces,
The important thing is you cannot rely on this solely. And you cannot like take like a classic indicator and think you're going to earn money with this one. You're not, because everybody know that. Maybe that was successful like 40 years ago, but it's not nowadays, because you're going to get arbitraged away, front run by algos, by quants, solely on the fact that they can enter the market in under 1 millisecond while you are still thinking of clicking your mouse. So they've executed 100 trades between that. So don't rely on this. The edge I think we retail traders have nowadays is building up confluence. Like not looking at just one thing, but looking at 1, 2, 3, 4, 5, 6 things, which makes it difficult because that means you're often going to miss out on trades that in hindsight were like profitable trades, which tempts you to know like, oh, I should get rid of this. I should just concentrate in with one indicator because the last 2 times it was spot on. When in reality, over 100, 200, 300 trades, this is not true.
Yeah, yeah. Yeah, you don't want to overfit on a sample, right? So, because that becomes like cherry picking.
Yeah.
You know? If you do that too much, yeah, no good. But yeah, exactly like you were saying with the other ones, like it's same with every single broker out there. You know, they'll give you like, oh, here's how to use the MACD, RSI, stochastic, all 3 together, and it'll give you perfect trading signals. You know, it's every broker and their grandma.
Then you should do like 500 leverage.
You know.
Deposit 100 euro or dollars, and then you do like 1 billion of trading volume.
Yeah.
We are going to be rich after this, but not you.
If you do, we'll give you 3 trades, no commission, and like a $5 deposit bonus or something. Yeah.
But you cannot withdraw that one until you trade 1 billion times the $5 volume, you know?
Yeah.
Wins are going to add up. Wins and losses are just going to be on your bonus. No, losses on your income, on your base deposit, losses on your base deposit, wins only on your bonus, which you cannot withdraw.
Yeah, exactly. Until another like 20 trades later. And then you got to invite one friend.
Yeah, that's true. Yeah.
And then they have to place 20 trades themselves, and then you can get it, you know, that kind of thing.
And in theory, you can earn $1 million per month then, but non-withdrawable.
Yeah. Anyway.
Oh man, yeah. Sadly, the truth of the Forex industry out there.
It's definitely not as bad as it used to be, at least.
Yeah, it has become a little bit more regulated, luckily. Yeah. But still, you know, I got like 2 weeks ago contacted by a broker who told me like, oh, you know, we are super large, we are regulated in Australia. And when I looked into the detail, I said like, yeah, but outside of Australia, you are onboarding clients under a Vanuatu license. You know,
what broker was this?
I'm not going to blame
Can you
and change.
message it to me?
I can message it to you. Yeah.
Okay. All
And then he sent me like all kinds of
I'm curious.
documents, you know, that like, oh yeah, but still they are secured, you know, under this license up to 500K per client. And it's I mean, I know how these games are going to play out. It's just who's going to, if you don't get your money back, who's going through the trouble of suing you on Vanuatu? How's that even going to be processed? How do you find a lawyer to do that? You know, it's just silly.
And then on top of that, it costs you further money out of pocket.
Exactly.
And then there's no guarantee that you get that back, because it actually has to follow through and you get something returned and it makes sense. And now, even what you paid to get that back, depending on how you get fees from the other side or something, or what, you know, it's you've got massive risk of pretty much doubling your loss.
Yeah, exactly.
Of what you had lost. And maybe you get like 15 cents on the dollar back.
Exactly that.
Like that's, you know, yeah.
It's like for me, I lost money with Bitmart, who are winding down, who are not letting me log into my account anymore. Yeah, and I have like 25K with them as well. I can write those off. I know that already. It's like the same like FTX. They're just doing that in a smarter way because they accidentally, you know, by coincidence, their CEO was let go like a week before that. They decided to wind down. And then they said, oh, you do KYC and then you will process your withdrawal request and order. They're not processing anything. I cannot even log into anymore. And makes me sad and angry at the same time. But this is the kind of thing you need to have in the back of your mind that with not just crypto exchanges, of the more brokers you trade with, especially on those weird regulation outside of anything that you would deem like serious. So I'm talking about the Seychelles, Mauritius, Vanuatu, and so on. You're eventually going to be in a situation where you're going to lose money, where they're just going to run away with your money. Doesn't make it less painful, but in my internal calculation, I account for something like this to happen.
Yeah, no, that's a very good point. Yeah, you always have to think about counterparty risk in general. So that goes for a broker, a bank, a prop firm, all that kind of stuff. So whatever you guys are doing, regardless, even if these are massively trusted entities, things can go wrong, or you've got maybe some protected stuff. This one looks pretty good, but it can go wrong, even though they look really good. So just don't park your entire exposure, all your eggs, or overexpose yourself to something going wrong, because that is when stuff does tend to go wrong somehow, Murphy's Law, whatever, and then you can get cleaned up and just destroy everything you've been working on. And it's not even your fault, which is the worst thing. It sucks because it's some other counterparty that has done you wrong, and you've actually been diligent and, to a degree, doing your things. So yeah, that's definitely a point of consideration. I think anytime you're trading with anyone, Q, GFC, even Lehman Brothers. Yeah, my money's safe. Oh, never mind.
CoinKite cold card when it comes to like offline storage of Bitcoin, where like what was it, like 80 million of Bitcoin were stolen because they had compromised software on the hardware wallets. Probably an inside job there. I got lucky because this was the hardware wallet I trusted. I had a lot of money stored on them, which is now not anymore because I sold most of my Bitcoins when we were around $93,000 last year. But still, I heard like stories of people who had like 20, 25 Bitcoins stored on an air-gapped hardware wallet. And now it's gone because an inside job, they made like the dice rolls for entropy, like being forecastable, and now it's gone all. It's horrible, And yeah, this is like counterpart risk is probably for most traders the one that's the most not on their screen.
Yeah, I've had it done to me before with a broker. That was early when I started trading, actually. Not long after. It was within the first 2 years. And similar deal. Took stuff overseas. There were a few of the directors that funneled stuff out, and then they sold the company, had the sale for the company, which then the other firm acquiring them bought it up. They already took the money. Then there was no money left, and I lost 220 grand. That was within my first year and a half with that. Of, stuff like I didn't lose it trading. It was just gone. I couldn't get it.
1.5. Back. And it's gone. 1.5 years into trading, and you are already getting the full spectrum and the roller coaster of trading.
Exactly. And then that was definitely a big aha moment, I guess, for me as well. Because I did not expect that at all. But I think one of the other big things from that, my reaction was just, do I go through some legal procedure and try and get this back? Or do I just, I started a year and a half ago with this much. It's going to take me at least that much time to get anywhere. Then it's probably another year and a half, 2 years. Plus, this is multi-jurisdictional, like overseas, that kind of thing.
Not
this
going
is like
to see
4 or 5 year thing. Yeah, and I had people, family, friends, whatever around me saying like, nah, sue them, this kind. I was like, I literally just went, who cares? Like, I'll just start again. I was like, I didn't expect to get here at all. In a year and a half. Like,
it's like in a way like money.
Something good. Start again.
Money investing into learning stuff like.
Yeah.
It's like back when I was in Singapore, like the principal of a family office I was working for, he was like in beef with the main client of a family office. Like it was also like a bill of like $200,000 or $300,000 that was still owed, and the client of a family office basically just said like, yeah, sue me. I have more money than you. We can do that a long time. Let's see how long you can last with the lawyer fees. And it's it like makes my blood boil, something like this. But
believe me, God. Yeah, God, dude, I have too many lawyers around me. Dad was a solicitor. You know, I'm dating a solicitor. I've got my best mate's a solicitor as well. Like, I just know so many lawyers, and that is the one part of the law that I absolutely hate, where you can just bury someone out of just financial drag, right? Which
Exactly, yeah.
sucks because it's the antithesis to the entire point of the system, right? You know, but
Yeah.
that's how it is. So, anyway, I was going to say, final stuff, final cleanup for you guys. I know we are taking a half-hour break for the stream from now. So, anything else from you, Bart, Dirk? Anything you guys want to say, or clean up with final trade positions or anything else, or?
For me, no. I mean, everything is set in stone here. Let's see how later on the New York session plays out. Pretty low volatility right now. Nothing to do. Can go on lunch break.
Yeah.
Yeah.
What do you reckon, Bart?
Yeah, I have the same. Yeah, I have in a few positions. I have trust in. Only I'm gold. I'm not sure what's gonna do. I think it's just waiting before the. Yeah, there was. I see my screen
I
now.
think
There
we
was
are
like on the.
pretty much in the same trade there.
Yeah, we're all.
Yeah.
Or is
Let's
this
see.
NASDAQ? This is
Yes,
NASDAQ.
the
Isn't it?
Oh,
NASDAQ. Yeah, I saw it
Yeah.
on the LJ screen, but it was like we're breaking the last, all the last highs, so that's why I got
Yeah.
in. It's a little bit of the same.
I was going to say I'm in the same trade. So, what do you have on gold? Are you in anything on gold?
Yes, I'm clicking on it, but it's always a little bit low. So I was entering the trade like when the markets open tonight, so it was a little bit late for me. It got up really good, but it's now just little bit slowing down, and yeah, it's going down a bit. I'm not sure what I want to do. Maybe I think, yeah, I want to get out of position, but I see the chance that we're getting up when the New York opening is coming. So I think I'm just waiting for that now. And let's see, I also that position where we talked about a week ago with you guys. If I go to the 1 day and it's still running, it was like on the Nikkei, so on the Japan stock market, where we just rolled this, and it was just breaking out. So now it's still going, and let's see where it goes. I think.
That's a very nice trade, actually. I like that. It's
Yeah,
really good.
only like the costs are high because it's like a few days in the trade, and also over the weekend and everything. So the swap costs are not nice, but yeah, I think just riding it, and also with this one strategy I use so many times. The last like Friday was a really red day, and what I do is I buy when the markets open. So I got in here, so a little bit of win slash almost nothing, and then yeah, we'll see what's gonna happen. But the biggest position for me is in gold, so I hope gold is gonna do it the best. I know.
Let's go.
Yeah, I gotta say, I think we do it. Overall, I think we do get higher on gold. I'm gonna keep holding it. I would have loved to get in on that early entry where you did. I was saying that to Dirk earlier. I wasn't up. I was awake that early, my time, but I wasn't on the charts, wasn't on the market early today for the Monday sort of opening. So I got in a bit later, but I'm happy to hold this. I'm happy to pull the drawdown a bit lower if I have to. I've got room to do so. I've picked up some other trades through today. NASDAQ is probably the only one that I'm less certain about, but I think we still do get that tiny push higher. And yeah, I think New York's the place to go. We'll get this push on. I did take another, this is the Aussie trade actually. I did re-enter this as well. So that was where I exited before. We had this cluster through here. We're holding up through here above 71.20. So we might just be going towards that 71.40. That comes in the same theme of gold going higher up through here, and the NASDAQ as well, continuing to push on. Only thing is, these are all very highly correlated to a degree. It's all very much risk-on kind of flows, but I've got them distributed. They have been moving somewhat independently, so that's me.
That's why I don't want to take the NASDAQ trade right now, as I'm
Yeah,
a gold one. But anyway, guys, we are going on a break right now, like LJ said earlier, for half hour, or to be more precise, 24 minutes now. We're going to be back with, who's going to be back? Let me quickly peek here with Richard Butler, Buyu, and Victor, and Sami. And so, get some lunch intake. Don't forget to leave a like, subscribe to the channel if you haven't done so already. And we're going to see you again in 24 minutes. Take care, everybody.
Beautiful.
Hello, hello, hello. Welcome back, traders.
Yo, what's up, Buyu?
What's up? How's your weekend?
My weekend was a nice. After the week I had, my weekend was nice. Let's just put it like that. I got to do some homely stuff where I
Okay.
was replacing the curtain railing.
Oh, I did a bit of that as well.
Yeah, so I did a few of them, and then replacing lights and stuff like that, just like typical homely things over the weekend. So yeah, how was yours?
Yeah, mine was good. Did a bit of reading. I'm actually reading like a book at the moment. I'm not sure I can say too much about the book I'm reading because I think
Are
you know
we
what I'm
reading the
talking
same
about.
book?
We are reading the same book.
We're reading the
Yeah,
same book. We can't talk about it.
can't talk
We
about
can't
it.
talk about it. But we can't allude to it either. But what we can do is we can say that this book, the author of the book, I have a meeting with him on Friday. So we'll see.
Yeah,
We'll
yeah.
see.
We'll see. We'll see.
See.
Very hush hush, top secret stuff.
Shh, shh, shh. Shush. Mention it.
All right. Yes. Do you want to get into some charts? Anything you're looking at in particular?
I already had a NASDAQ trade this morning. Right now, it seems as though I think we just had news.
I didn't even realize there was news.
We
Well,
just did.
real
We
news
did.
happening this week.
Yeah, we literally just had news. Uh,
Oh, hello.
we just had Al Arabiya sources reports indicate an agreement to extend the 30-day period between Iran and the US.
Finally, some good news on Iran. I was expecting it. Like I've been saying for the last few weeks. Hey, I reckon we're winding down. I don't think we're going to escalate. I think escalation will be boots on the ground. I think Trump will want to get this wrapped up before the midterms. Would you know, 60 days from now is the midterms. Oh, oh,
Who would
what
have
a
thunk?
surprise. Who would have thought?
Who would have? He's probably there in that meeting, like, all right, guys. So it's about to go into midterms. Can we just, sort this shit out by then? Can we
Yeah.
get, win the midterms? Horrible impression of Trump. Not about voices. Can't do Trump. I do quality voices. I don't do Trump.
Yeah, I think the Kermit is far better than the Trump.
I 100% agree. 100% agree. So I think that this little tidbit that we've just received now has led to this tidbit. This is
on.
US tech. Let's look at gold. Gold.
Oh, what?
Same bit of volatility. AUD should have had a spike. Okay, at least AUD, like comparatively to what we've seen throughout the day, is still the same. EU did exactly what I thought it was going to do. Wow, exactly to the midpoint as well. Same kind of like this has not changed much on EU and AUD. Maybe GU, not really much has changed either. Very, very typical reactions throughout the day. It's almost as if it was a non-factor. But gold, it's had a little bit more volatility. NASDAQ also definitely quite a bit more volatility.
That is
Anyway.
not a nice candle.
Anyway, welcome back to everybody, back from the little break that we've had. I was just telling Buyu before we jumped back on again, we were supposed to have like a bunch of like videos to show you guys, like some interviews and stuff like that during the break, but our streaming platform, it seems as though there is a issue with it where all of the stuff that we've uploaded this whole year is gone, all of it. So it seems as though we've lost access to our cloud for our streaming platform. So yeah, the stuff that like even the transitions, like when we're transitioning to other people's screens, you'll see it goes blue screen and then it, is the other person's screen. Like all of that stuff is just gone. So we have to like re-upload all of that stuff, which is going to take some time because it's a lot of things. Just we're not, we're not an unprofessional bunch. It's just that we've been having technical difficulties like crazy recently. So this was just another one on the list. Anyway. Just wanted to put that out there. So, Buyu, what have you been looking at, my friend? Like, obviously, you being a swing trader, you don't really hold your trades over weekends unless there's like a really good reason to do so. Do you have any trades that you held over the weekend, or are you currently in a trade?
I do. I tend to actually hold my trades over the weekend on Forex, at least. Other pairs, I might be a bit cautious on, depending on the swap fees. But I have been USD bearish for a while. Last week was tough for me because the market basically ranged in the NFP candle or thereabouts, and CPI didn't do anything. But, we've had a great start to the week so far. All of my USD pairs are now up and in profit. So I'm going to have a quick rundown of what I'm in at the moment, starting from the top with BTC. This is one I actually got into this morning. So after the weekend. Nice rejection from the equal lows here. I was kind of like half expecting a rejection, from there. It's also rejected from those lower equal lows. So I'm hoping we could get a push up. In my head, I ideally want to see it to push up to here at least. But, I'm going to move my stop as soon as it gets to there. And then once it gets there, I'll move this and then change my stop loss and so on. And for those who don't know, I trade the rejection from equal lows. What does that mean? It means when an equal low is formed, which is this blue line here, or the same for equal highs, I then look for the last swing high. So here we have a low, high, lower low. And then I look for the invalidation of that swing high. So that's just in the fair value gap or thereabouts there. So ideally, I would have got in here at 63,326, a little bit late to the trade, but not majorly. And then obviously I target the opposing equal highs depending on which way I'm going. So I could target the equal highs or equal lows depending on which way I'm going. So that is my BTC trade. NASDAQ, actually you need to start that. I have also been long for a while on. I got in, I believe, shortly after CPI, or what day was CPI?
Friday.
Well, CPI wasn't Friday. Was it Wednesday? No, it was Wednesday. So the day after CPI, we had a breakthrough these equal highs here, which was great for me because it meant that, okay, the next equal highs are up here, so no resistance in the way. So I jumped in on a rejection from this equal low here. So I'm currently holding up to this high. This is actually a little bit of a confusing one because I was actually in this before, but I closed the trade and then reopened it with an even bigger RR. So I believe originally I had like a stop. I got in around here and the stop was like 600 roughly.
So what?
Whereas
600 points.
Yeah, 600 points. So now it's 350. So I basically doubled my risk that I had on. So I closed the previous trade, reopened it as soon as we had a new signal to go long. So, I closed my original trade at a profit, got back in with an even bigger trade because that's what I like to do. I don't like to add in. I like to close and then restart, if that makes sense. So I'm always risking 0.5% 1R. And I can always make sure that I've got that on the table. So jumped back into NASDAQ longs and I'm targeting these highs up here. So the old former highs. I'm hoping that American news does help us push towards that target. Next on the list.
I mean, we're above the highs that we had on the 15th, the 10th, and the 6th of July. And when we had our retracement, your entry is basically the break retest continuation. So, of those triple highs that we had, quadruple highs effectively.
Yeah, so these
Yeah,
highs
those ones.
here, yeah. So once it broke through them, I was like, cool. The top of the FBG. That's where I was like, sweet, I can get in now. Those highs are no longer, and now I can aim for the next lot of highs, equal highs. So yeah, that's why I was
Yeah.
like, okay, I'm going to put in a bit more risk, especially now that we've got that whole bunch of resistance out of the way. Yeah, good.
Yeah, so I agree with you. I'm saying this because I agree. I honestly think that the way that we've been moving now recently, taking into consideration CPI, taking into consideration let's call it the potential end of this US-Iran conflict, I think that NASDAQ is going to start looking at all-time highs again. Don't know if it's going to be today, though.
Yeah.
Don't think necessarily it's going to be this week either. But I don't think it's outside the realm of possibility that we can start making our way higher up towards those previous all-time highs. At least we'll have a break of 33.22, I think. Opinion. So which is the high that we had on the 30th of June, because we're on our way there. Like just this one over here, and then what we do after that comes into play either later in the week or next week, where we potentially start looking at these highs, this double high that we had up here, which was the 22nd of January and the 22nd of June and the 16th of June.
Yeah.
Yeah.
Yeah, those are the zones I'm targeting as well, yeah.
Yeah. So I think at least a few more days before we reach that point, because from where we are right now to get to that is 438 points, which isn't, once again, it's not outside the realm of possibility. You just need that little bit of a runner, and then you're good. But we still have this area over here with this order block just to the left of it as well. So you can see the order block very nicely. Outside bar, engulfing candle, this whole section here, which previously acted as a strong resistance level, pushing price lower. We're getting closer to that, and that push itself eventually led to us breaking these lows here with that movement, even lower lows, breaking those with these ones, and so on. So high area of resistance right up over here, 30,300, 30,387 in my opinion. That's the area that I think is going to be in view for NASDAQ first and foremost. Before these ones.
Yeah, I reckon
That's my
like
reasoning.
I will be watching that closely as well. It looks like there's a nice little wick there, and if it does create a wick as it's going up, I'll be moving my stop loss into profit. If it gets that level and decides to make a little wick there. So yeah.
Nice.
Right. For me next on my list, I've got AUD/USD.
Let's bring yours up. Ooh, this one's almost at take profit. You do 1 to 2s, right?
I don't use take profits. I just move. It's just a target zone for me to move my stop loss, and then I do a stop and reversal. Basically, if it starts to reverse that level. So once it hits here, I'll go down to the 15-minute. I'll then look at the last major swing high or swing low in this case, and then I'll move my stop loss under there. And then if it gets taken out, then I know it's a stop and reversal. At the moment, for me, the clear swing low, and I'm hoping it forms another clearer swing low, because at the moment we've got high, low, and then higher high. I've decided I'm going to try and look more at the bodies in terms of determining the swing highs and swing lows, because I find they're more reliable. So even though we have a mini one here, I don't want to use it. I would use it if I was scared and wanted to be very cautious. But I'm not, and I reckon we could have a more clear, hopefully, swing low created. And yeah, I just prefer this. This is so much clearer of a swing low than this little blip here. So
I mean,
we'll see what happens when it reaches this level.
I take the full movement, whether it's a candle close or a wick as a swing point, just in general. But like in terms of whether or not it breaks it, whether or not it has follow through, to me is always the candle close. We need to close above or close below a swing. If you can have a wick, and that could just be a sweep. You're just sweeping that area, but there's no confirmation in my eyes to say that it's definitely going in the direction. Because the general difference between a wick and a candle body is that all of that price action that you have in that time frame, that is where the movement was. There was buyers and sellers at every single one of those points, right? But if you have a large wick above a candle body, no, let's candle bodies like this and the wick is like that. It just means that when price did reach that point, there were a lot of sellers sitting in wait, in limbo, trying to push price lower again. So a wick just breaking a previous high swing or a previous low swing with a wick as well, I see that as a bit of a rejection, waiting for confirmation. Not a we've rejected entirely, or we've just swept it. I wait for that follow-up to see, okay, maybe we have a bit more of a pullback, and then it starts picking up again. And if it picks up, then I'm like, okay, great. That was just that preemptive few sellers that were sitting in wait there. They couldn't take control. Buyers continued. So I think there isn't a one glove fits all kind of like approach here.
Yeah, that's fair. And by the way, just that you know, this was one of the trades that I was getting very frustrated with last week. So I don't know if you can see, I jumped in on just shortly after NFP. So I had been sat in this trade all week. You know, we had let me see if I can clear this up a little bit. Right, so this is the NFP candle back on that Friday, 7th of August, 1:30. You know, waited a few minutes, saw that we had broken, given us that nice low, high, lower low kind of pattern that I like to see get broken for the longs. So wait till after the NP was done, jumped in long, and then sat in it for an entire week. An entire week, waiting for it to move.
I know that feeling. That's why I don't do it anymore. I don't swing trade. No, thank you.
Yeah. Now, technically, I could have probably, you know, jumped out and jumped back in with a higher trade, but I have been a little bit naughty. I've got more trades open than I should, but I've justified that by the fact that some of these trades, I've reduced the loss on them, so it gives me more room to add more trades in. Technically, so like for instance, if I were to take a loss on this, it will be half an hour loss, less than that even. So that for me means if I have two trades that I can take half an hour loss on, I can add in another trade.
Nice.
Technically, I don't usually trade like that, but I was getting a bit frustrated. So I'm only human. I'm gonna admit I'm human. I'm being a bit cheeky right now.
I mean, last week I had one of the most frustrating weeks I've ever had, and it basically led to me waking up this morning super excited to get to the charts so I could take a trade. Because I looked, so Tuesday and Wednesday I had no power, and no power equaled no opportunity to trade because I don't have a laptop. I'm going to get myself a laptop to trade off of. And then so that was Monday and Tuesday, and then when we finally got power back, I had no internet because they broke our fiber line as they were fixing the electrical cables. All right. So the whole grid, basically, our whole town basically did not have fiber. So that was for 2 days. I only got fiber back on the Friday. So on Tuesday and Wednesday, I see the trades because I'm on my phone or I'm on a laptop, my wife's laptop, but I haven't got anything installed, so I'm not trading it. And the internet was horrible at that point, and I just see all of the trades. I was like, I would have taken this trade, and then you just there it goes to your profit. You're like, okay, and then you wait a little bit later, and then you see all of the ones that form exactly how you would have traded. You just miss it.
Yeah.
And then the 2 days I didn't have fiber, I also just look at it and I was like, come on, you bastards. Why? So I think I lost out on something like, I don't know, a 6 to 7 hour week last week.
Okay.
Taking, let's say, 0.25% or 0.5% trades in general, and then seeing, okay, 1 to 2, yeah, that would have hit 1 to 2. Oh, this one would have been a loss, that's fine. Oh, another 1 to 2, another 1 to 2, and you're just like, okay, 7R. I missed out on 7R. So this morning, when I got to the PC, the first thing I was looking for is I was just like, I'm looking for a trade right now. I didn't FOMO into any trade. It was more the idea of I'm ready. There was no point in thinking about it. Just like, okay, okay, cool, enter. Done.
Yeah.
So I got a 1 to 2 trade this morning on NASDAQ. And I don't know. I feel like sometimes you need to have that little bit of a break just away from the charts. So that when you come back, you're like, okay, last week didn't happen. Last week doesn't exist. Screw last week, new me, let's do this. And it's just like, let's pitch up, let's step up, let's just do it. And this morning when I took the trade, I go to my wife and I was like, okay, so we have all of this technical difficulties going on EVMux, and all of this stuff is not where we want it to be, but I had a really great trade. And I'm like going down the stairs to the kitchen to go and make myself a cup of coffee, kind of like every now and then breaking out in song. So I had like singing Tourette's this morning.
Yeah.
I don't know where I was going with it.
Well, you were telling us about how to deal with unfortunate circumstances, right? As a trader.
I mean, I think every person has their own variance of what they deem as challenges. What you deem as a challenge might not necessarily be to the same level of a challenge for myself. So I think it's important that every trader, regardless of where you are in your journey as a trader, you kind of find means to battle your own challenges. It's not to say, oh, I'm going to sit with this for forever. And it's not to say that, oh, I'm just going to change this one thing and then this challenge is going to be completely sorted out. It's just that it's important that you realize that it's temporary. Challenges are temporary. And if you want to change in what it is that's challenging you, you need to active that change. You need to be the active thing making a decision, saying, okay, cool. I don't want to have electrical issues again. What can I do? Can I just sit around and wait for the next time? No, I'm going to look for a office space that has backup energy, that kind of like stuff. So it's putting actionable steps in place when you're going through challenges. Identify what is challenging to you, and then look at ways that you can either reduce or completely remove that barrier that you have. And in this case, like even with yourself, where you go through a whole week where prices like, it looks like it's good, and then it just, it feels like a lost opportunity. It feels like you wasted a whole week, that kind of like stuff.
Yeah.
It's like the way that you view it, that could be a challenge in of itself. And then you need to kind of like put these little steps in place to say, all right, I had an idea, it didn't work out, so what? Let's move on to the next one, as a silly example. So everything that you're doing can be a challenge. It's how you approach the challenge. It's how you put steps in place, like just things that you can actively work on to try and challenge these, let's call it these blocks, these roadblocks that you have in your trading.
That is a very fair point.
I see we have a few questions. Not few
Trader
questions.
A. Ryan.
I'll get to that one first. Just want to do Poolies because he was He was in first. Anyone else having issues with Black Arrow not accepting trades on NQ? Puli, did you do me a favor? Just check MNQU. Is it MNQU6? Change it to MNQZ6. See whether or not the Z6 is the one that is currently active. I don't have my futures chart up at the moment, so I can't check that for you. But just check which one of the current futures contracts is active, because what happens sometimes is when it's no longer an active contract, where the contract is now expired, the old one becomes unable to be traded. So just have a look at that. I think it is still... So it's MNQU...
Yeah, MNQU, the September contract, has the biggest open interest. So that's the one you should be trading.
Yeah. So just check that if you're on the correct one. Yeah, U6.
And for those who trade futures and don't know what I did, you can on Black Arrow, I believe, they tell you which is the current contract. If you want to know before looking on Black Arrow, you can go to barchart.com, select a commodity, pick your commodity of choice. So let's say I want to know what the current contract is for S&P. It will come up with a list of different contracts here, and you want to look for the one with the greatest open interest. So for instance, the one for S&P would be ESU 26, the September contract. That one's got the greatest open interest.
Yeah, so basically what the September 26 is that the contract itself expires in September 2026. The following one is going to be ESZ 26, which is the December contract. So that is going to be the next one to come into play, and then that one will expire in December.
Yeah. For some reason,
So yeah.
Go ahead.
No. I just wanted to say to Puli, if that is not the issue, please reach out to the support team, help@the5ers.com, and then ask them either that, or you can go into the Discord. There is a ask a member section, or on the future side. Do you have access to the futures one? Okay. So in the futures one, there is a support team as well that you can just ask to have a look for you, Puli. Anyway, you were going to say, Buyu?
Yeah. By the way, I believe the futures Discord access works like the 5ers Discord access. You have to have an account. Once you have an account, you can then get the Discord link on your 5ers desktop, I believe. Or if you haven't got it there, then you ask the chat to say, hey, I want 5ers Discord access to the future side. Someone did just mention that apparently there is a Black Arrow issue they've mentioned on Discord. So thank you, Ren. I'm assuming that's probably been mentioned in the futures chat, maybe.
Okay, I will check the futures platform quickly. Yeah, there is an issue. It seems as though it is not accepting. It's not accepting any trades. Okay, they're busy working on it right now. The team is already in contact with Black Arrow to fix as soon as possible. Yeah, so that is the. Yeah. Okay, so there is a bit of an issue there. So Puli, for you then. Unfortunate, I guess you're gonna have to wait until they fix that. Unfortunately, what was I gonna say now? I had literally just I had a thought, and then that thought just went.
Because I just had thought as well. Because I just remembered looking at this quickly, the 5ers futures Discord, that they are doing something fairly interesting in summer battles. So they've got something going on this week coming up. Don't we have something coming up as well?
So their summer battles is the exact same as our 1v1s. So they have what makes us better, what makes the CFD side better, is the fact that we have two potential 100k accounts up for grabs. So 2 people go up against the hosts, where the future side only have one. They only have one person, you know, and they trade for 10 minutes. Come on, guys, we've got half an hour at least. So, yeah. But if you want to go and win, potentially win an account, first of all, you need to be subscribed to the Futures YouTube channel. Link is in the description box below. And then you need to go and, you know, the Google Forms that's there. It will be on their YouTube links as well, on their YouTube channel. You can get it there as well. And then you can go and try and beat Dave or Steve or Alejandra or Cesar or any of the hosts there. You can try and beat them to get yourself an account there by them.
Yeah. And we've also got, do we have trivia this week?
We do.
We do. Have we decided on a date?
Yeah, we do.
Okay. Trivia this week will be on what date? Drum roll, please.
I wish we could give you a drum roll. I wanted to quickly just upload the one video that we have, but trivia is going to be on Thursday. So
okay.
If anybody wanted to know, it's going to be on Thursday.
So that will mean you can take part in a 1v1 battle on a future side on Wednesday, and then come test your trivia with us on Thursday.
I just wanted to mention this. Justin won a 1v1 account last week. And he also won an account with the trivia. So correlation, you know, the more you know, the better trader you'll become. I don't know.
Yeah.
He won both. So kudos to him.
And for those who don't know, apart from the trivia and the 1v1 battle on the future side, we do have some other giveaways. We're currently going through our Traders Journey month. So we've got lots of activities going on in there. So if you head over to our Discord, press the start here button, join us there. Got Discord calls that we regularly give hub credits away on. And we have been giving away some accounts as well recently. I'm not going to guarantee that there's any accounts to give away today. I do know there will be hub credits. But, you know, join the Discord call and see. And yeah, apparently there's some special mentions for the weekly Traders Journey. If you also take part in that. Last week's challenge was a real easy one. It was literally to touch grass. So 3 people are being selected for 20k bootcamp accounts for just showing proof that they went outside. It's that easy.
I mean, Buyu even had a video of touching grass. Or grass adjacent.
Yeah, grass adjacent. Which everyone loves to remind me of. It's like, well, that bush isn't grass. It's close enough.
It's closer. That's nature. The intention was to touch nature. And then also, while we have all of this going on as well, we also still have our summer accounts as well. 100Ks and 200Ks in the link description box below, and Buyu's also brought it up for us as well. You can have up to $600,000 worth of allocation. You can have 6 100Ks or 4 100Ks and a 200K, or 2 200Ks and 2 100Ks for a total of 600K. You can have any one of those, and they are all copy tradable. So you can trade across all 6 of them. One strategy. You can copy trade them all. Lovely.
Oh, nice.
Yes. I have 4. I will be getting one more. I will be getting a 200K. But for now, I've got the 4 2 phases, 4 2 steps. Let's put it like that. All in profit.
Nice. I was going to ask how's the journey coming along.
So, well, excluding last week, because last week was supposed to be excluding that. The one 100K I have is up $2,073. The other one is $1,991, and then the ones of this morning is up 517 and 504.
Okay. And those are the 8%. Well, I'm guessing 2 are 8%, 2 are 10%.
The 2 that I got now yesterday are the 8%, 5% ones. So they're up 0.5%. That was with this morning's 0.25% trade. 1 to 2.
Sweet.
So yes. Going slowly, but going deliberately.
Slow and steady wins the race.
Yes, indeed it does. Indeed it does. There was another question here. Russell saying, don't put your faith in news releases about the conflict ending as long as the IRGC is still in power. It could just be a red herring. I treat every news release as if there is going to be a counterpoint to it. Or I treat every news release as if that's not the full story just yet. So, could be a red herring. Potentially. Alvin saying, good morning, Buyu and Richard. Trader Arian saying, you are the brilliant trader, bro. I'm assuming he's talking to Buyu. Can you tell me
one of us
what we should look for every trade? Okay, tell me about what we should look for. Every trade. Okay, I'm assuming what it is that you want us, what you think we should tell you is the kind of like, how do you trade and which trade are you looking for entries? For me, it's confluences. I have a very specific trade entry model that I follow, very specific risk to reward ratios, and a very specific risk management that I take along with it. Yourself, Buya?
I trade the rejections from equal highs and lows. I spoke a little bit about it earlier on during this stream. So if you want, you can like have a quick rewind to find out how I trade. And I can also talk you through some of the other trades I've been in. I was actually just in the process of doing that, and we can continue if you want. I can tell you about some other trades I've got. So Euro USD is another trade I'm long on, targeting these highs up here. Another one that I held, got in just after NFP, and got very annoyed by having to hold it for an entire week before it did anything. So yeah. Still, it's in profit now, so that's okay, all goody. And GBP USD is another one that I was in, I think, just after NFP. That has now reached my first target, which is great. So I'm now targeting the next one up here. But in terms of having a quick rundown of, I've also jumped into a gold trade, which I think I've missed out on. This is one that I jumped into a bit earlier, I think on Friday. I think I jumped into it on Friday and held it over the weekend. So yeah, I got into it about midday, 1:30 on Friday. So it's not been moving much. That being said, it looks like it's created a new equal low here. So this would be a perfect chance, for instance, to go over how I trade. So on the equal low here, you have, and it's not the nicest pattern, I would say, for me, because usually what I'd look for is a low. So for instance, I jumped into this one based on a low, high, lower low, and then that being invalidated. So that got invalidated there. In terms of this one, we've had kind of a low, high, equal low. I don't like those so much. So I wouldn't have necessarily jumped into this trade this morning, just on that basis that I view those as a little bit riskier trades. I really like clear, low, high, lower low, and then the rejection there. Or if you're going opposite way, the high, low, higher low, lower low.
Yeah. Highs, lower lows, higher lows.
Yeah. The swings, basically.
Swings and roundabouts. Yeah.
Yeah. So I am bullish on gold, and I imagine we'll also see something similar on silver. But
yeah. Silver and gold. Silver being maybe a little bit more volatile, but yeah.
Yeah.
Similar.
Silver, I'm not really seeing the setup necessarily that I would love to see to jump into a trade. So I'm not looking for any trades on this. Gold, I'm still in because I was in the week before, so that's good. S&P, this one, I would have loved to get in on the rejection from here. So the rejection Tuesday was when it hit that low. I'm just going to quickly remember that, or just draw a quick line so I can see on the lower time frame. Okay, blue may not have been the best color, but we had a low, high, lower low, and that was taken out around here. So on Thursday's candle, would I still get in? So the ideal entry would have been around here, 778, and the stop loss. So if I actually create this, and I'll go back to the 4 hour now. Could have moved the stop loss just below, or in fact at the bottom of FVG where this equal low is, and targeting highs. Well, there isn't any real target point, as it were, because we are already at all-time highs, basically. Would I still say it's a valid trade entry here? I would say yes, although you'd get a little bit of a lower RR if you were to jump in now. I ideally would actually wait until we're past this level, until we're past the FEG to jump in, if that was what you're looking for in terms of jumping into a trade. Although I would say for me, not the best setup because one, there's not a real target that we're aiming for. Two, we're already well past what my ideal entry point would be. So, I would ignore it, even though I am bullish on the S&P. I would ignore any entries on that trade that are taken now because we've had like a little bit of a pullback. If it were to come back to the ideal entry point, which was be here, yeah, I would have said go long there. But up here, you're not getting that great of a risk. Well, there is no risk to reward ratio, as it were. So it's hard to kind of measure and say, oh, hey, it's fair to jump in here because I reckon it's going to go to 8,000, for example. So that's a bit of a tougher sell for me. US 30, I imagine we may even be looking at shorts on this, but only we've got the low, high. So let's see what happened before. So it's kind of retested this area several times. And let's see what happened the last time it went. Well, the price action was the last time before it touched that line. So we had the high, low, higher high, and then that was broken through here. So I would actually have been jumped in short on US 30 if I was trading it by now. Although that being said, I'm not too sure how far it might fall. I'd be probably targeting. So you have the targets already marked up here. I'd be cautious around here because that's like a very obvious wick below. I reckon it could wick off of there and then come back higher. So that's what I'd probably aim for as my initial target, even though it's not there yet. Yeah, this is on the 4 hour.
Perfect base, that, in my opinion.
So that's what I'd be looking at as an initial target for my shorts, with a more ambitious target down here to the formerly established equal lows down there, which would give me like a 1 to 4, and over here it would give me a 1 to 1, 1 to 1.15. So I'd be short on US 30 just for the moment, just saying. That being said, the market is, and I'd be happy to take a loss on this, when the market is kind of, the price action is not that nice. It's just been consolidating, and we've had positive news on Iran, so yeah. I'd be willing to take the loss on it, but that's how I set up my trade.
On
Never
US
traded.
30, I don't think we'll go much lower than 53,230. So not quite reach that wick low, but if you go over to the hourly, for as they say, gigs. Yeah, there we go. If I almost did shits and giggles.
The S word, yeah.
If you zoom in on that wick candle on the left hand side, which was on the August 4th, yeah, that one. If you zoom in, the very last bearish candle
Yeah.
before you had that nice run up higher, I take that area. You'll see it on the 4 hour. It looks like a 4 hour bearish candle and then a run off. That is a base, in my opinion. So for me, the reaction that we had in that area, that's the last time the bears really attempted to break this new upward movement. And then that upward movement, that follow-up long position that we had, long movement, eventually broke previous high swings and stuff like that. So that to me is a much higher confluenced area of interest should price break lower than your double low that you have on the 1 hour right now, where your entry basically is. So I would not want to go lower than that, because the last time we were there, that's the reaction that we had. Very bullish, very strong. It could have been a news-related movement. Doesn't really matter. It's just that was the last time we had any sort of bearish attempt, which failed and was completely overwhelmed by the bulls. So in that case, 23,331 to 23,230. So that 100-point range, I would say, is the target point. Generally, it's on the upper end of that rather than the lower end. But that is what I would be aiming for if, something like that. If we get a bit of a break, that's what I would be looking for. If you go back to the 4 hour, you would see that base as well. So
Yeah.
and that last bearish candle, the whole candle effectively is the base. And if you were to drag it towards the left hand side, obviously you'll see that the alignment towards the highs of the 7th of July.
Yeah, July.
So,
yeah. So, glad we're in confluence. So shorts on US 30 is what I'd be looking at right now. For me, given the time as well, I don't know, it's one of those iffy situations where I'd be almost wanting to wait until US Open and then take the short. But that's just me. If I wasn't already in this, I'd be like, maybe I should wait till US Open. But either way, I reckon we're going short. And then if we hit that, then we could start looking at going higher again. But
I would definitely wait for New York Open. I wouldn't trade the US 30 just yet.
Yeah.
Yeah.
And for me, the only reason to wait for the New York Open, I wouldn't usually say, okay, I'm waiting for the New York Open. The only reason I want to see what New York Open does is, for me personally, because of this news. I want to know how the US markets are going to react to the fact that we've now got a 60-day extension period for this peace deal, ceasefire, however you want to frame it. I'd want to see what happens on that.
A memorandum of understanding. It is
MOU, yeah.
MOU. I agree. Even though I think that if you were to go down to the hourly or the 15-minute or so on, it does look like it really wants to potentially go lower. But like you said, the news event that came out, let's say this high impact tweet that came out, can impact what the US market wants to do.
Yeah.
So the decisions maybe on Friday is now going to be impacted by that. So we'll see now. So definitely showing a propensity to want to move a little bit lower, back in this area of resistance or support, basically, that we kind of like just consolidated in on US 30. So I want to see whether or not we can potentially try and pull up with New York Open and then start making our way lower, potentially to this area down here. I see this, misunderstanding. I see there's two comments here. One from Moe saying, Meneer Butler, advice as a Safa about the beginnings of your trading journey, what you were learning, and what truly helped you get to the level we are at now. Great question. And I think we can use this one question for Buyu as well. So what I started with was just straight up. I initially started my trading journey pre-COVID, like quite a while before COVID. I was trading stocks, so predominantly a stock trader. And after that, I basically went over to CFDs with the idea of trading support and resistance. That's where I started. So all of my, let's call it trading knowledge, stems from an area being tested and rejected. And then I started building slowly stuff like momentum onto that, adding candle characteristics, not the candle characteristics that you would have like a flag pattern, like these patterns that are building up. I'm talking about the relationship between a series of candles relative to the next series of candles. So that's what I mean by when I'm talking about candlestick characteristics. So when I started with trading, it was the idea of support and resistance. So your typical, all right, so let's go to any other pair. Let's go to a US pair GU as an example. Let me just clear all of the drawings here. So what I usually did was I would look for areas as just a rejection zone. So an area where price struggled to move above, and then I would try and see how price reacted around that area. And then I built my very first trading strategy on this. And I would say, okay, after I had a second rejection, so this was the first rejection candle, this was the second one. On that candle that rejected, I would place a sell. On that rejection candle, I would have my stop just above. I would go for a 1 to 1.5, and then I built my very first trading strategy around that. Obviously, this is New York session. I don't trade there, but you get the gist. That is what I built my very first trading strategy around, and it was purely on the idea of reactions on support and resistance and how price moves around that area. Afterwards, I realized that it can't just be that simple. There has to be some depth to it. You need to start looking at more confluenced information. It's not just support and resistance. Yes, support and resistance plays a massive role, but it's all of the extra stuff that goes on top of that. It's painting the picture, or painting your painting with more than just black and white colored ink. You paint it with reds and yellows, and you have to fill in a lot more detail. So I would say what helped me to get to where I am right now is taking a core concept and expanding on that core concept, building out, not trying to jump to different strategies, but take one idea and see how far you can take that idea before you just say, I'm going to give up on this. That was one thing. Another thing is I have a background in playing poker as well. So I understand risk and reward. I understand ratios quite well. So mathematically and on a from a logical standpoint, I built my idea of being a little bit more focused on risk rather than the greed of it or trying to make as much money as I can. I wanted to see how good I could get my risk management. That was my biggest focal point, was that. And I took a lot of my poker background and I brought it into trading as well, because there's a lot of similarities between it. Obviously, you can't just go into playing poker without having a strategy. Very simplistic way of thinking about it is that you're playing against other people and you're trying to outsmart them. You're trying to outplay them, regardless of what you have as your cards. You're trying to act as if you have a specific series of hands, or, in this case, you're not trying to outsmart the market. What you're trying to do is you're trying to make sure that when something happens, you yourself know that you have a plan and that you can adapt and then you can play on. So there's a bunch of similarities between that. But that's basically where I started. I started with that. And it's been since 2018, 2017, 2018 was when I started trading CFDs. And I would say it took me up until 2023, late 2023, maybe beginning 2024, before I feel like I really nailed down my trading. And then I went through a series of break-even months where I was a losing trader before then, had a series of break-even months, and then I started getting profitability, let's say in 2024, beginning of 2024, somewhere around there. And since then I've had peaks and valleys. I've lost profitability, I've gained profitability, lost profitability. It's just, going through a cycle. But I am leaps and bounds ahead now when compared to where I was like 5 years ago, as an example. So my down segments are not nearly as deep, and my peak sections are now higher as well. So I've always looked at it from the idea of it's a long journey, and you need to prepare yourself for the long journey. And you're not going to, Rome wasn't built in one day, so your trading shouldn't be in one day either. Anyway, Buyu, sorry, I ranted on for a long time there.
No, that's
Your
very
response to
informative.
this.
So my response is my trading has been a series of trial and error, but I think I realized one of the main things that I struggled with, and I imagine many people do, especially when you're in drawdown, is identifying why I'm in drawdown. And I think there's three options. There's one, strategy is not appropriate. The strategy is not working. It's not a long-term, consistently profitable strategy. Two, my behavior is not appropriate. So even if the strategy is good, I might be taking part in behaviors that are bad. Jumping in early or jumping out late, refusing to take the loss, moving my stop loss until I can't move it anymore because I'll lose the account, that kind of thing. Or three, whether I'm in drawdown because it's just a natural part of my strategy. So strategy is inappropriate, behavior is inappropriate, or I'm just in drawdown because I'm in drawdown. That was a really tough part for me when I first started trading. I think one of the things that helped me the most was at the weekends, especially when I had a really tough week, is I would then review my trades without the pressure, on me to be like, oh, I need to take this trade or whatever. So I've now removed any ongoing behavior stuff. It's the weekend. I'm not in any trades. I can then review it in the cold light of day and say, okay, let me review what happened with this trade. Okay, this trade, I didn't exactly follow my strategy. My behavior was wrong. I jumped in early, for instance, and look, it had this. I was able to group all of my trades together and say, is there any commonality between what's going on here? Is it the strategy isn't really working? And I'm seeing that every time this happens, I've taken a loss on my trades. So, I'd have in some cases where I would I'm trying to think of some of my older strategies of trading. And I can't think of them right now. But there were cases where I'd be like, okay, if I just make this little tweak, I reckon I'd be more profitable based on my strategy. There were some cases where I looked at what I'd done during the week and I was like, I'm an idiot. I have no idea why I really jumped into that trade. I remember feeling desperate on that day. I was annoyed about something and I just jumped into that trade. So that's a bad trade. Okay, I won't take that kind of trade again. At least I promised not to. And after a while, I was able to go, okay, well, these trades are taken because of bad trades. I'm feeling desperate or whatever. Why am I feeling desperate? Or why am I spiraling? And that led to me, for instance, changing the time frame I was looking at. I noticed, for instance, on the lower time frames, and I had this feeling during the time, I'd be stuck to the screen so focused that I didn't want to leave the screen alone. I'd even be like, can I go to the toilet? I'm on the 1 minute time frame. I don't know if I go to the toilet, if I'll miss a trade. I used to have trades where I'd be like, I jump in the shower, I come back down, and then all hell's broken loose apparently. And I'd be like, okay, no, I can't deal with this. I need to move to a higher time frame. I noticed that when I was trading with too much risk on, that I'd feel really, 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 really bad. So I'd have like a 1%, 2% risk on a trade, and everything became a nail biter, and it just wasn't comfortable for me, right?
Mm.
And that affected my behavior in trades. That meant, okay, well, I'm in a 1% trade and it's moving into profit a little bit. Maybe I'm just going to close it here. I'm just going to close it. I'm just going to take the win. But when it came to losses, I was like, oh well, this 1% trade, that's a lot of my account. Maybe the trade will turn around if I move my stop
Hope.
loss. hope
Hope.
I hope my trade will come back to break even, and then I can get out. And I'm just going to keep moving my stop loss until that happens. Bad behavior.
Yep.
So going, I'm not saying you should do this like every weekend or anything like that, but maybe have a period of time, maybe once a week or once a month, where you go over your trades and just analyze them. Cold hard truth. Okay, what went wrong with this trade, if anything did went wrong? Because some trades I did look at and I was like, you know what, I took the correct trade. There was nothing wrong with my setup. I did it appropriately. My behavior was good, and it just lost. Okay, it happens. There are trades that I take that I'm just like, that's a good trade, and my behavior and the strategy itself, I think the strategy is working, and I just take a loss. So I would say,
Yeah.
as a beginner trader, look to set some time, maybe once a week or once a month, to journal your trades and try and identify, am I taking losing trades because the strategy is wrong? And you should be able to spot if the strategy is repeatedly losing, but you're sticking to the strategy, but it's repeatedly losing. And if you've tested it out over a long period of time, you might be able to go, okay, it's not appropriate for this type of market, or it's just not appropriate at all.
Mm.
So, for instance, I've noticed with my strategy, for instance, I don't do well with ranging markets, but I do well with um, trending markets. So if the market's just going
Mm.
in one direction, great for me. You can kind of pick that up, especially by back testing. And I know back testing, some people say it's a scam, and I agree to a certain extent, because you can kind of see the answers in advance, especially, if you know how a certain asset has moved. So, for instance, if you're back testing on gold, gold has gone up. So if you were to look at all of last year's things, you probably just go, I have a bias to go long because gold right now is 4,000. So I know at some point it's gone up. But backtesting removes the behavior part and allows you to focus on, does my strategy
Agree.
work part.
Yeah. Yeah, that's
Once
what I
you
was going to mention. Yeah.
Yeah, once you figured out, does my strategy work part, then you move on to the behavior part, which you can do with forward testing. So either a demo account, I like to use competition accounts, for example. They're good because they're no risk. I don't have to pay anything. I don't have to pay a valuation fee. So you can then go, okay, now I can test out my behavior. Now I know that my strategy is right. And then I can start journaling to see, if I put those two together, hey, do I have the right behavior? Do I have the right strategy? And does my strategy last? And then go from there.
I would also just add this, that a few things that I did not mention, but that was a very big, let's call it, turning point in my trading, was I stopped looking at the value of money. I stopped putting my accounts on pedestals. Like, this is something I have to do. I disassociated from the importance of what this account could do for me. So I kept looking at it as if it was a demo account, with the idea that I'm learning as I'm going. So that helped me kind of like diminish the, let's say, the need to have to pass something, and more looked at it like, okay, if I'm going to pass this, how am I going to pass this account? Or if I'm going to be a good trader, what kind of habits do I need to have? So I disassociated from what monetary, so take away the tangibility from what these accounts can do for you. If you're trading prop firm as an example, don't look at it in the sense of, oh, I just lost, I don't know, a week's worth of wages, or I just gained, I don't know, my previous work's monthly salary with this one trade. Completely disassociate from that. Move away from that idea that you're going to make money. Move towards the idea of, I'm going to follow a process. And this process is inevitably going to either lead to me making money or it's going to lead to me losing money. So completely disassociate from the importance of money. Don't put any of your accounts on a pedestal. The second thing is be process orientated, not results orientated.
Yeah.
Yes, have a plan, but understand that that plan is going to go wrong, or that plan is not always going to achieve what you want it to achieve. So be willing to be wrong. So if you're taking a trade, don't feel like the market owes you something because you lost your previous trade. Just go into it with the same expectancy. And that's the third thing. Change your expectancy. When you look at the market and you see something happening and you're like, ooh, I could have had this or I could have had that, completely move away from that. Look at the idea of, I expect if I take a trade, based on what I've researched, based on what I've tested, based on what I have the ability to actively act upon, I can achieve this. And then give yourself an error margin above and below that. So if my expectancy is that for every trade that I take, I'm going to, I don't know, my expectancy is 0.2 as an example. That means for every trade that I take, I'm going to have 0.2 R increased on my account. But add an error margin to that of, let's say, 10%. 10% above and 10% below. And curb my expectation and say, look, in general, this is what I can achieve, but there's certain steps that I need to take in order to do that. If I take that step, this is what I can achieve. This is the upper end of my expectancy. If I have bad habits, this is the lower end of expectancy. And then see if that works for you. So I changed the way that I view the market. I stopped looking at trading, even though I traded for a living. I stopped looking at it from the sense of I need to take a trade. I need to make money. So I try to at least disassociate from the importance of money. And then the third thing was my expectancy. I tried to curb my expectancy. I don't care about the dollar value. I want to make sure that I achieve what I set out to achieve. And I can only do that by doing certain habits and sticking to those habits. So those are small little things that I've changed throughout the years, which I don't think I didn't jot them down. They were like you experience something and then you realize, oh, that was so dumb. Why did I do that? And then instead of saying, oh, I'm afraid now to do that thing again, I'm just going to say, you know what? I screwed up when I did that thing. Why did I screw up? Go and do a bit of journaling, go and write that stuff down. And then afterwards you're like, okay, I understand. I didn't sleep well. That's why if I haven't slept well, I don't trade at all. Because bad decisions lead to bad results. Good decisions lead to good results. And remember, a good and a bad result is not a profitable or not, a loss trade. That's not, good decision doesn't equal profitable, bad decision equals not profitable. That's not what I mean. I mean, a good decision is doing what is best for your trading long term. A bad decision is doing something that in the moment feels right, but is going to garner bad habits. It's going to create bad habits formation. That's bad decisions. Bad decision leads to horrible, negative outcomes. And profitability isn't one. Like winning a trade and losing a trade is not a bad decision. Let's put it like that. Or the outcome is not a bad decision. Did want to answer this because this was funny. Connor saying, Richard, question for Richard. Why don't you use your natural accent when you speak? South African to a fellow South African, local as lekker. So this is my actual accent.
Wait, do you say lekker or lekker?
Lekker.
Lekker. Oh, lekker. Oh.
Ja, it's lekker. Meaning it's nice.
Ja, het klinkt een beetje grapje, man.
Askies, wat zei je voor mij?
Het klinkt een beetje grapje als je zegt lekker, also.
Ook. ook, not also ook. And you have to say no as well, like a lot.
No. Okay.
Yeah, not no as in like now twice. It's a double now.
Okay.
Now
Double
now.
now.
Yeah, now. It is an undefined amount of time. It's a double now. No, Connor. This is my actual accent. So I can mimic like a proper, like Joburg English. It's not that pretty. We roll our R's quite a bit. Yeah, I can do that, but I have to force it.
Okay. I listened to I'm not going to say the name of the band, but the English version of their name would be The Answer. So I'm
The
guessing.
antwoord. The
Yeah.
antwoord.
Okay. I didn't want to say their name, but yeah. So yeah, it sounds very much like that. I know they're South Africans and
Yeah. They're very big in Germany, which is I've had this discussion with Dirk before. Like they're really well known in Germany, and the German bands like Rammstein is very popular in South Africa as well. So, but the antwoord, in my opinion, is crap. I hate their music. I hate it. I don't care if it's local as lekker. Like, I hate it. Like, I honestly think that there's way many better bands in South Africa than the Antwoord. I just think that the Antwoord is just a controversial band. They just do, they I don't know, they look different. They act different. I don't know. I think they're crap. It's just my opinion.
okay. Well, so we won't talk about the new upcoming album that they've got going on. Because my friend actually sent me like they have a whole feature film as a trailer for the album.
Really?
Yeah, like a mini docuseries. Well, I don't remember to call it a docuseries. It's meant to be like these reporters come to their house and some stuff kicks off, and that's their way of promoting their new album. This mini show that they created. I'll send it to you later.
Yeah, yeah. You can send it to me. I'm not gonna watch it. I'm gonna just tell you straight up. I could care two hoots about them. Yeah, I listen to rock and metal, and I listen to rock and metal from any country. I don't care where it's from. I don't listen to like Afri rap or whatever you want to call it. Like, nah.
Zeph side.
Yeah.
Whatever Zeph side is.
Yeah, like fail. It's dirty. Call it sif. Yeah. No. What language is this? It's Afrikaans. I don't know what Boeie was trying, but okay.
I was trying for Dutch.
Oh, yeah. Yeah, lekker. You could have had a discussion with Bart. He's from the Netherlands.
Yeah.
Yeah, like MGN is saying, only the Leo Moraccioli's metal covers of them. Yeah. There was another question here that I did see, but I think yeah, here it is. Usam asking, Rich and Buyu, how do you guys handle anxiousness in trading? For example, Mondays should be coming in slow and easy as opposed to several heavy positions and taking multiple losses. What's your go-to method for dealing with anxiety in trading?
So for me, I think the first thing is knowing what your limits are. For me, I found, and this is one of the reasons I use higher time frames, is I don't like taking lots of losses in a short period of time, hence why I trade the higher time frame. And so to avoid me feeling anxious, I change my approach to trading from the very start. I change my risk. I've changed the time frame I look like. So all of that means I can sleep easy. And when I'm in the market, I'm not anxious. I may get annoyed by lack of movement, but there is never a period of time where I'm like, oh, I need to sit at the charts and see this particular outcome. I'm not stuck at the charts all day, like hoping, oh, I hope this goes up, or anxious about what if this goes wrong. I know I have a set amount that I might lose, For me, I might lose if all four of my trades are open at once. Go to stop loss at the same time. I've lost 2%, but I'm happy with that because at that point, I might take a break. I've got enough time to take a break. I know I'm not rushing to get back into a trade because of my time frame, and I know that I'm definitely not losing the account due to the daily drawdown. And I think that for me was a historical point of anxiety for me, which was losing the account. And I know quite a few people lose the account due to, for instance, hitting the daily drawdown. So I wanted to take that off the table. Uh, Another point of anxiety is obviously if you're in drawdown and you're about to lose the account because you're about to hit the max drawdown, is potentially, reducing your risk. I don't necessarily like doing this anymore, but there was a time period where I was like, okay, I'm close to my maximum drawdown. I'm gonna say trade half of what I usually trade, just to give me some time to see, hey, is it do I have a long-term consistently profitable strategy? Because if I do, I naturally should be able to come back out of this drawdown. And if not, I get some feedback on whether or not this strategy is really working for me. Um, so I think one of the best ways to tackle anxiety is to see what is the source of anxiety if you're able to pinpoint it. Is it you're taking too much in a trade? Try reducing the amount you've got on the trade. Are you taking too many trades all at once? I think you mentioned taking several trades and
Yeah.
their heavy losses. Now, I know there's certain trading styles that encourage lower win rates but higher RR. For me, I get anxious trading like that, so I prefer a higher win rate because I know it makes me anxious. So if that's a point of anxiety for you, taking too many losses all at once, maybe you want to limit the amount of losses you take or see if there's a way you can increase your win rate so you get less anxious around what if I lose a trade? Because hopefully you should lose less trades. Um, and those are the kinds of things that I'd look at in terms of anxiety. In terms of what to do if you're already in a trade and you haven't done those things beforehand, hmm,
Out of sight, out of mind. Walk
yeah,
away.
take a breather, take a break,
Mm.
go to your nearest window, open it up, look at nature, or look at people watch um, for 10, 15 minutes
Look
if you
at
can afford.
people, follow them
Yeah.
around, talk to them a little bit as they're going to town,
Yeah, just wave out your window, hey,
randomly. Um,
randomly.
Anxiety comes in many shapes and sizes. Like it takes on many different forms. There's people that become anxious when there's nothing happening. So it's the fact that it's quiet. They believe that they should always be busy. There should always be something that's happening, and that causes them anxiety because now they're not doing anything. So, Usam, the first thing is pinpoint what's the trigger for your anxiety. That's the first thing that you need to do. Is you need to understand why do you feel that anxiety. Is it the fact that you are over leveraged? Is it the fact that you're over trading? Is it the fact that you are waiting for something to happen and it's not happening? Is it impatience? Is it the fact that you want to be ready? Like being ready, you're constantly sitting there like, okay, come on, I'm ready, happen. That is also a form of anxiety as well. So understand the anxiety first and foremost. Where is it coming from? You can't put any steps in place if you don't understand the source. So that's the first thing I would say. So your example was, for example, Monday should be coming in slow and easy as opposed to several heavy positions and taking multiple losses. Understand that it doesn't matter what you do in the market. The market's going to do what it wants to do. So one thing I can say about anxiety and trading is stop trying to control the market. So if you're in a trade and you see that you're in drawdown, it doesn't matter how much you pray or hope or any of that like please, pleading or anything like that. The trade's going to do what the trade's going to do. No amount of your input is going to change it, or your want for it to move is going to move it. None of that. Okay, so Curb your expectancy. Look at trading as, okay, if I can manage and control my trading style or manage and control my trading entries and let the rest be it. Resign yourself to the fact that whatever outcome is the outcome that you're going to receive, regardless if it is a drawdown, a win, a loss, it doesn't matter. Just say, I accept that I've taken this decision. I'm owning this decision. This decision to enter this trade, I'm taking it. Whether I take a loss or a win, it doesn't matter. I'm accepting it. Anxiety also comes from the unknown. Because you don't know what's going to happen, you feel anxious. You feel like it's out of your control. And that's why I'm saying, if you want control in the market, you're not going to get it from the market itself. You can get control from your decisions and what you choose to do at the market. I know I don't trade well when I haven't slept well. I take back control by deciding not to trade, and I own it. And I can write down, last week, Monday, I slept like crap. I am not taking trades today. Done. Doesn't matter if I miss an opportunity, there will be more. I know that I would have felt infinitely worse if I decided to act upon that negative feeling and still gone ahead and taken the trade. I disregarded it, because then I'm proving to myself that I'm not trustworthy. I cannot be trusted with my trading because I'm making impulsive decisions. The thing is, at the end of the day, you can't control the market. The market's going to do what it wants to do. And your anxiety is going to be built around the idea that I'm going to lose a lot of money because I'm making impulsive decisions. Or the market should be doing this and it's not doing that. Why is it not doing that? You're creating this narrative for yourself. Where at the end of the day, the things that you can control, you should try and control. The things that's outside of your control, just don't worry about it and accept the outcome. If the outcome is so far away from your expectancy, maybe you need to go and have a look at why. Why is it so far from your expectancy? Win rate's one thing. RR is another thing. Expectancy is a whole different thing in of itself. So that's what I would say. You gave an example, Buyu, if you're trading too much. I had this thing in the past that I used to use. I don't use it anymore. But now that I see Wesley, he reminded me of it now. In the past, I used to struggle with overtrading. And also, at the same time, also FOMOing in on trades. I created a system for myself called Best of 3. And it was very simple. There was one of 4 outcomes in a day that I could have. So I would take a maximum of 3 trades a day. After 2 wins, I would stop trading. After 2 losses, I would stop trading. So those are, one outcome is 2 wins and I'm done for the day. Second outcome is 2 losses. I'm done for the day. I don't trade anymore. And then there was a tiebreaker in the event where I had 1 win and 1 loss. And then of those 2, there was only 2 outcomes. You either have 2 wins and a loss, so 1 win, 1 loss, and then another win, or you have 2 losses and a win. So 1 win, 1 loss, and then another loss. So you have 1 of 4 outcomes. So I kept to that to prevent overtrading and to prevent FOMO. So whenever I looked at, and that was something I had control over, I controlled that narrative. So I take a trade, it was a loss. Don't worry, I'm going to have another opportunity later in the day to take another trade. And only if it's set up according to my strategy, I would take that trade. Take the next trade. Oh, it was a winner. Great. Happy. Now I have 1 win and 1 loss. I can choose to stop now. I don't have to force it. But if I do take another trade, I have to accept the outcome, whether it's a win or a loss. So I find another trade. I take the trade. It's a loss. Okay, I've got 2 losses. I'm done. I'm done for today. You're not going to overrun your account because you can only trade up to 3 trades a day. I limit the amount that I was allowed to risk to 0.5% or maximally 1%. So I can lose maximally 2% a day. Can't lose more than that. So there's no fear or anxiety that I'm going to lose the account by doing this. in one day. I'm never going to hit daily drawdown because I'm only trading 2 trades. I can only lose 2 trades a day is what I'm kind of like saying. So that was something that I used for those anxious moments where I was like, oh, I have to, I'm going to lose, blah, blah. Just set yourself some rules and stick to them. Just a simple example of that.
And hello, Harry. We had a question. What is this stream all about?
Where's that?
That's a more recent one we've had. Yeah.
Well, so the stream has different, there's different reasons why we stream. First and foremost, we want to be a community centered around learning. So the idea about the stream is to be an educational area for people who want to learn how to trade, okay? That's the first thing. The second thing is this stream is about psychology as well. It's about breaking habits, negative habits in trading that harms your profitability. All right. So the end of the day, we want to help people become profitable. And by doing that, we want to be educational and then also at the same time use the psychological side of things. Now, caveat, none of us are financial advisors. None of us are psychologists. But what we are people that have gone through this and have found methods to help break certain habits and lead to profitability. It's not a guarantee that everybody here is currently profitable, but there was profitability at a stage in their trading career and they're working their way back to it. And it's not to say just because we're talking about psychology that sorry, my phone's ringing, that we talk about psychology that every single day it's easy for us. So it's a community of people learning how to trade, talking about our issues and problems around trading, and trying to find ways to help each other come out of it on the other side, hopefully more profitable than we were before we entered into it. That is how I see the stream. That's why we're here. And then the stream also is about live trading as well when the opportunity presents. It's about doing giveaways. It's about enriching the community. It's about being a force of good in the field of trading, where there's a lot of bad actors. And we're trying to be a force of good in that field. So we rock up every single day to give you our insights, to get insights from you. We do live trading. Well, sometimes trying to, we're not trying to be a signal service. That's kind of like what I'm trying to get to. It's like, we don't want to be a signal service. I would much rather you learn how to trade and make your own decisions than you rely on my decisions for your trading. And that's basically what the stream is about. So we try and just have open discussions. We try and answer as many questions as we can, obviously from our point of view as well. So you're free to ask us absolutely any question, and then it's up to the host if they wish to answer that question. So if it's a very personal one, they can decide, I don't want to. So don't expect an answer to every question that you have, because sometimes it might be a personal one. So yeah, that's in my opinion what the stream is about and what we're striving to be. Yeah, this I think is a very good sentence. A community-driven service to create better traders from real-time examples and experiences. This is a very good example of what it is that we're looking for. And the thing is, the community doesn't just stop here. The community expands. We have a Discord community. We have different languages. We have a Hindi community. We have a Portuguese community. We have a Japanese community. We're building more communities and trying to reach out to more people. We have a futures Discord. We have a CFD Discord as well. So the idea is that we're trying to build and give back to community as well, to be a force of good. So yeah, that's why we are here. Maybe sometimes we'll give you a trade idea. Sometimes we don't. But at the end of the day, it's about what I mentioned. So. and a bit of everything as well. We've got fundamental traders, we've got technical traders, we have psychological traders, we have pattern traders, we have swing traders, scalping traders, we have everything. We have people that try to do investment only. We try and have a nice spread. The only thing that we need is we need a female trader.
Yeah, we had Anastasia.
Yeah, she's moved on to her own projects, and then we had Ashley, but yeah, I can't really talk on Ashley at the moment because we've got no contact with her at the moment. So yeah. Anyway.
Yeah. So I was seeing a few lovers and haters of the answered in the chat, which is entertaining. So for me, I know two prominent big artists from South Africa at the moment are Tyler and the Antwoord. Very different music. Tyler's obviously doing her thing worldwide. But if you know any other South African bands or musicians you like, feel free to add them in the chat. Or, if you want to show a bit of love for me as well, you can name your favorite Nigerian artists as well. For me, I'm listening to a lot of KK or Kayode. He's got a track called Amoye, which I have been listening to on repeat. I'm a big Wizkid fan as well. And I listened to a bit of Davido. So, hey. Oh, by the way, I completely forgot about this, but I was seeing the other day. I have to give a special happy belated Independence Day message to all the Indian traders.
Nice.
I actually had no idea that there was a separate live show for them as well.
Yeah.
Which I imagine was
on Sunday.
Cool. Yeah, so the 15th, that was Saturday?
Saturday.
Yeah.
Sorry.
Yeah. With our beloved Samir, who will be making
He's on the Futures channel today.
So okay, he won't be joining us today.
Yeah, you can catch him in an hour, give or take an half an hour to an hour in the Futures channel. He'll be there.
Yeah. So yeah, happy belated Independence Day to all the Indian traders out there. I'm not sure how many of you are in the chat. If you are in the chat, make yourselves known by hitting that like button, and we can all celebrate together. Because I've never been to India, but Nigerians, if you don't know, have a very special relationship with Bollywood, in that they are ridiculously big fans. In fact, the last Bollywood film I watched was something from like the 80s, 90s, just a few weeks ago, because my dad saw it was on television. It was like, I remember this from my childhood. It's called Sholay, I believe. It had Amitabh Bachchan. Let me see if I can get the spelling right. Just bear with me a second. And the last film I'd seen, I really need to get back into Bollywood, was Kabhi Khushi Gum. And I thought that was amazing. I do realize that Bollywood films aren't for everyone. A 3-hour...
They're larger than Hollywood, mate.
They are larger than Hollywood. The 3 hours is a long time to be in the cinema, but it's fun. And I love how over the top they could be sometimes.
Yeah, we have a very large Indian community in South Africa. We have the whole eastern coast, effectively, which was a lot of immigrants from India come there. So we have something called Durban curry. Durban is a city in the east coast of South Africa. So and we call it mother-in-law curry, but it's an Indian curry, effectively derived from a whole massive community of Indian immigrants coming to South Africa, and I love Indian food, love it. It's my favorite food class. Let's put it like that. Favorite flavor.
Okay. Yeah.
Is Indian food, well, I'm going to say Asian and like East Asian, Southeast Asian, and Asian cuisine. So, of which Indian cuisine is part of that. So, that Korean food, like Korean cuisines, all of that kind of like stuff. So, any curry that you can think of, I love curries. Anyway, the point that I was just trying to make is that I was never big into Bollywood. I was never big into Hollywood as a young kid as well either. Didn't really care too much about movies all that much. Even now today, I don't really care too much about it. But it's nice to reminisce on your past. It's really nice. I did want to bring up this question because the shiny yellow metal was asking about it earlier. I'm in a gold buy from 4390 to target for 430, looking good for Monday. Maybe. I'm not in gold, but Buyu is. So
Yes. I am in gold longs, so I generally agree with your analysis. I got in based on the rejection from these equal lows down here. So if I quickly draw out that line on a lower time frame and we hit the lower time frame, we had a nice high, low, low,
oh,
high, lower, low, and that's where it touched and created that equal low there. And then where it broke back through that level, that low, high, lower, low, I jumped in at the top of that FBG, targeting the longs to go higher. And this is ambitious. This is ambitious. Targeting all the way up here on the gold longs. I do realize we may run into a bit of trouble at these wicks here. So this wick here and potentially this wick here, it could bounce off of. Those aren't known in advance whether it all bounce off of. The only established equal high we have at the moment is this one. So that's why I've got my target set to there. The reason I point these out is because if we do reach these levels and then have a wick off of that, then that becomes a new equal high. In which case, I then move my 15-minute stop loss, on the 15-minute time frame, up into profit, hopefully, and see if it breaks through that. If it does, then we go the opposite way, and so on and so forth. So, yep, I'm in gold longs. I'm hoping we go a bit higher, especially with the news that did come out of this ceasefire. As mentioned earlier by Kawish, that it is potentially a bit of a red herring. We don't know if it will last or stick. I have been on I reckon we're coming towards the end of the war thing for a few weeks now, based on the fact that we've got midterms coming up and, the politics will want to shift around that, in my opinion. So I reckon this is positive news for this is bearish news for dollar. So, I reckon we're going up. I reckon the setup is there. So yeah, I'm with you on gold longs.
So what is your expectation for the New York session? Let's just ask that, because I know you're getting closer to potentially needing to drop off the stream, but give us your like predictions for New York.
So my predictions is we may see like an initial retracement. So initially come back a bit lower to then go higher. Or I don't think we're just going to go straight higher. I think we'll maybe see a bit of retracement, scare a few people out of the long positions, and then we head up towards their targets. Maybe hopeful thinking, but I think the general direction is upwards. And I think that for gold, I think that for BTC, I think that for NAS, and we discussed NAS a bit earlier. So, if you want to head back. And I think that for USD pairs, currently I'm in AUD USD, Euro USD, and GBP USD, all discussed earlier on in this stream. So, I reckon we're dollar short. I haven't actually looked at the other dollar pairs. So USD CAD, CHF, JPY is a DUSD. We can have a quick look at those, see if they're also supporting that dollar bearishness trend. So here we have the equal low. I imagine we did probably have a low, high, lower low that was validated. So we had a low, high, lower low. that was invalidated. Here, we invalidated that. I don't really. This one is an awkward one to look at. Yes, technically we did have a low, high, lower, low. Consolidation, I don't feel as confident on though because it did really consolidate. So even though technically we had a low, high, lower, low, this would be the safe low, high, lower, low for me. And yeah, we did blast through that. So I'd be long on NZD USD. What would we be looking at on USD CAD? Well, because I'm bearish on USD, we're going shorter on USD CAD, so that's a good sign. So all across the board, I think we are seeing dollar weakishness. This is a bit of a messy zone here, but CHF I imagine is weak because CHF is a safe haven asset. So if dollar's going down and we're also going risk on, then you'll see a bit tougher price action on those. Because they will also be bearish as well. So, we may, if you're not interested in looking at USD, you may want to pair it up with CHF pairs, because they may be showing some bearishness as well, or JPY pairs. But JPY, be careful on. We've discussed this previously. They are intervening, so yeah.
I mean, that CHF movement that we had this morning retraced all the way back to Friday's lows. So we'll see if we're going to have this continuation lower. So that was a low over there. This was this morning's push lower and the complete retracement of that back to the lows. So completely back to this point. If you look at the 4 hourly, we missed this section down here that I thought we could reach, but it's how it is. Anyway, if you have a look at the 4 hourly, we did end up closing a very strong 4 hourly candle all the way down when we came up here, and then the next, let's say, almost 3 hours and 10 minutes or so, we've slowly but surely kind of like wormed our way back up again. So over the last 3 hours, struggling a little bit. If I go back over to the 4 hour, we'll see that we're kind of still stuck between these two areas here. So waiting for a break. I don't know if we're going to have this upward tick, because it does feel like we have a slightly upward angled channel right now. It's a large channel, obviously, but it's still slightly upward moving as of right now. Maybe we'll see a continuation of the run up. I don't know. But yeah, I want to see if we can get to these zones here in general, previous established areas to test off of before we do anything else. But yeah, agree with you. Dollar, maybe, I don't know. The DXY did have a sell off and then it's retracing ever so slightly, but New York session might just continue lower. We'll see.
By the way, it seems that we do have some people who know. I was surprised that people know the film Cholet because it is so old. It's something my dad
how
watched when
old our viewers are.
Yeah, well, it was something my dad watched when he was a teenager. He was like, oh yeah, no, if you were naughty in school in Nigeria, they'd call you Gabba Singh, which was like one of. I don't really want to call him a bad guy in the film. But yeah.
Was he the antagonist?
No, he wasn't the main antagonist.
Oh, okay.
He wasn't the big bad guy.
Was he?
He was comic relief. Yeah.
Oh, okay. So he was the Joker. He was the class clown.
Yeah. Gabba Singh.
Nice. We finally got some of the videos back. So I want to quickly upload it. So I'm just going to do this for a second. So hopefully you guys don't see me.
Okay. Meanwhile, while he's doing that, I did have a quick question about giveaways. So for those who are just joining us, Raman Jane, forgive me, Raman, you asked if there's any giveaways. This week we have a trivia session coming up on Thursday where we are going to see how well you know your trading knowledge. I believe LJ gave some hints potentially on where you might want to look in terms of studying up for that. So you may want to have a look back over that live stream if you can. Um, and apart from that, we have our Traders Journey month. So this is a special month-long event with lots of activities and prizes in Discord. So make sure you get over to there if you're interested in giveaways. We also have our daily Discord call, which takes place at 3:45 UK time. So that's 2.5 hours from now, every day, where we give away hub credits. Hub credits are basically store credit for you to use at the Fivers. So we give away at least $10 in hub credits each session, um, and you can use those to buy accounts, or just use them as a discount. Basically, whatever you want to do, whether you want to do it on the future side or the CFD side, you can use them however you want. And we do tend to have, in some special cases, a challenger account also given away in those Discord sessions. So you might have a chance to win a bootcamp account or pro growth account or another account. And yeah, we have a special mentions as well as part of our weekly traders journey. So make sure you're active in the Discord. Make sure you're tuning in on Thursday if you want to take part in our giveaways. And if you're more interested in the future side are also having their own trading battle on Wednesday. So we, during the week, will be automatically stream closes. We change over to our future stream automatically. So make sure to stay over there for some trader battles if you're interested on Wednesday. LJ screaming, I have some trivia for you. He's going to be asking you the hard questions on Thursday, so make sure you're prepared for that.
Yeah, so the trivia on Thursday will be the London session, so the first 3-hour session of the stream. That is where we're going to have that. I can actually go ahead and just tell you what is in store for the rest of the week. So tomorrow we have Richard Wells that's going to be joining us during the London session, and he is going to be talking about all things golden nuggets of psychology and as well as the trading journey as well. And then the afternoon we will have the lovely Buyu, myself, and Griff that is going to be talking a little bit more about, just typical trading stuff. Wednesday, again, the morning session, we will have Dirk and LJ back. Obviously, LJ will be here tomorrow, but they will be talking a little bit more about the fundamental stuff. And then the afternoon, again, will be myself and Buyu going through what our expectations are for Wednesday afternoon. And then on Thursday morning, we have Rich back again, along with Pedro. No, Pedro is on leave at the moment. Pedro is going to be back in, I think, next month. Next month, Pedro will be back. And then we will be talking about more psychological quandaries and ways that you can, actionable things that you can do in trading to improve your trading profitability overall, or at least your approach. And then the afternoon, we will have Victor and Samir, as well as myself and Buyu, going through our expectations of New York. And that's basically what you can look forward to this week. So if you haven't already, please drop us a like, please drop us a subscribe. And yeah, that's what we've got in store for you.
Awesome.
Any giveaways? Not today. There will be a giveaway on Thursday, though.
And yeah, I think I was getting confused between. So Gava, this is just a side note. I was confused between Gava Singh, with the bandit leader, and there was a character who was in charge of the prison, who was comic relief, but not really a bad guy. But he, yeah, basically the film follows kind of two lovable rogues. So they're meant to be bad people. They get arrested for stealing stuff, but they're the lovable rogues who turn into the heroes by the end of the film. And there was a comic relief character with the prison guard, the head of the prison, and there was another character who like loved to lie a lot, and they'd always catch him. It was there was a lot during the film, and
Reminds me of
my
Kung Fu
mind.
Hustle.
But yeah, I'm going to move on. I'm going to move on from Chalet. And how do so many people know about who the characters in this film were?
I would think it's obvious, mate. They watched the film.
This is an old film.
They watched the film. They watched it. Unbiased Trader is 69, dude. He's like old. No, I'm joking.
Okay, so Ashrani was a jailer, and then there was another guy who kept lying. Yeah, it was weird, but he was meant to be comic relief. It was strange that they did that. Oh wow, okay.
I've seen Unbiased Trader. He looks really good for an 89-year-old. Really good. Yeah. Anyway, for the rest of today, I see that we started to get a little bit of movement now in NASDAQ, but I think this is all in preparation for the New York session. New York session obviously is going to be in about an hour and 8 minutes. So preparation for that, I don't really think that we're going to have too much movement just yet. This is all going to be preemptive, like positioning for the New York session. So as it stands right now, I don't quite know what I want to see happen on the NASDAQ. If I go over to the daily, obviously I would love for us to continue to try and get up to this zone up over here. That would be nice. So a bit of a pullback and then a continuation pushing up, but I don't know if we're going to have that just yet. Dollar weakness tends to lead to more purchasing into the NASDAQ. So the lower the price goes, the more people buy into NASDAQ, which in turn tries to push the price up. But then there's this kind of like lull where it kind of like slows down ever so slightly, where they kind of like balance out a bit, and then you start seeing a push up again afterwards. But as of right now, it seems as though we're kind of just sitting here in this London range right now, which if you look at what we had on Tokyo session as well, Tokyo initially had a bit of consolidation during this segment here, and then we had the breakout retest and then a push up. We haven't had that as yet on the London session. We have had a bit of consolidation across the segment here, breakout, just pushed back into that consolidation, consolidated again, pushed back down, consolidated, pushed back down, consolidated, had that wick on the news, did nothing with it whatsoever. So this is limbo for me. I'm just sitting and wait for the follow-up. This break that we had here, to me, does not signify anything as yet. We did sweep these lows that we had over here. We also, at the same time, with this break, swept those lows. So to me, this is that lie in wait. We're prepping. I think New York session with the NASDAQ, we're probably going to have a bit of a pullback. So we've already had a singular pullback into this area over here with this candle. I would want to see the following. When New York session opens up, I want to see whether or not we can come back down to try and fill the rest of the gap. We've already had a portion of the gap that was filled. So this top portion here, I want to see if the rest of the gap can be filled. But obviously, we also want to see whether or not the Tokyo session itself, the lows, are going to be broken as well. Because we had the gap this morning. The gap was all the way from there. We filled a portion of it. But when Tokyo session opened up twice, we failed to push back lower. So this bottom section here, I want to see us react off of this. So I want to see price come down into it with the New York Open, react off of this, potentially, like just go a little bit lower and then start pushing up. That's what I would love to see. Are we going to have that? I don't know. It's difficult to say immediately whether or not that's going to happen. If you look at the 1 hourly, we've kind of just been stuck. We've just been stuck in this segment here for the past 6 hours already. So it's just a waiting game. We've got an hour and a half left on the 4-hour candle. We've swept the previous high, we've swept the previous low, and we're just kind of sitting right there on the 4-hourly. So over the last 4 hours, we haven't done much. So this is all in wait for New York session. If we're going to go lower, then obviously we need to come all the way down here on the 4-hourly for this zone here, the one that I marked up, just to fill the gap. Then from there, we can decide whether or not we want to push up. If we don't, then the very logical next area is going to be this portion down here on the 4-hourly chart. So it's going to be Friday's lows. So this segment down here to potentially come and test. That's going to be the next area in question.
Okay, yeah, I can see that. Potentially perform an equal low there. By the way, wanted to give a quick warning. We do have news in 4 minutes on CAD. So CAD news in 4 minutes. I don't know if we've had any other news. I'm not seeing anything on Financial Juice. Something's just come in. Financial Juice. Senior Iranian official. Iran has decided to shift its policy from defensive to a fully offensive one. Why is this so annoying?
So that seems as though the reaction on the DXY so far is a little bit better for the dollar. So we should be seeing Euro trying to go down. Yep. GBP trying to go down. Yep. We're going to see NASDAQ try and go down. Yep. So, lovely. What's gold doing? Gold
is trying to come down a little bit.
Yeah, not great. I think Buyu is...
I think we're going to see a pullback, and then we're going to continue going higher. I'm still, even despite this news, taking that standpoint that this is just before we go higher that I mentioned earlier. The news has brought us down a little bit, but it's not major enough that I'm going to say, oh, no, my analysis was wrong. No, I reckon, like I said before, I'm going to have a little bit of a dip back, and then we're going to rocket higher. And then I'm going to be able to get out all of my trades, including the USD ones. All of them still looking good. Euro USD, for instance, here still hasn't touched this line yet. I want to see it touch that line and also make a nicer, because I think I mentioned earlier, a nicer high low than higher high before. Or I've forgotten, was it on AUD USD I mentioned that it wasn't as nice? Either way, it's just a little blip. I'm not seeing any move that will take me out of my trades at the moment. It was the AUD USD that I mentioned. This would be the nicer high, low, higher high, and I want to see another high, low, higher high going towards my target so that I can then move my stop loss a bit higher. So, yep, a bit of confusion over Iran as usual, because that's the game that they're choosing to play.
Once again, the information that we received from the previous announcement was completely undone. The follow-up announcement. So, 100% correct. It ended up being a little bit of a red herring. Because it's just another red folder event moving the market in opposite directions. One side says this, the other side says this.
Right. And we do have a bit of follow-up news on that one. So all Iranian entities will be prepared to escalate tensions in the Hormuz Strait and the region if diplomacy fails. And they're pressuring the US. Stop moving down. Okay, we've just had the Canadian move. That's why my
CPI as
down.
well.
Yeah, Canadian CPI.
Stop moving. Stop updating.
So they're pressuring the US or relying on mediators to reach a long-lasting peace is not realistic. So it looks like, I don't know, they're trying to. Oh, we're tough. We're tough. We're not going to be bullied by the US. Is what's going on at the moment. So quickly switching
Yep.
over to Canadian CPI. It's coming bullish for CAD. So you were looking at CAD, USD CAD, Richard. Do you wanna?
I was earlier looking at CAD. So if we go over to my screen,
Yeah.
having a look at it earlier, we did have this downdraft the whole of today so far, and then I think on the news event that we had earlier, we started to slowly creep up a little bit, and the news that just came out now, the previous news event was this, and this is now the CPI news, which came out for that. So good for CAD. So in this case, we'll see it look like it wants to push a little bit lower as of right now. So something on my screen. I thought it was like a drawing on the screen. I was like, no, there's like a... I don't know if it was a bug or whatever. But yeah, so we're just continuing this downward movement that we had. Hello, Victor.
Hello.
Hello, the two of you, Buyu, Richard, and everyone watching. How is everyone doing today? It is a lovely day where the chart is not stopping from moving. Yes, I was trying that as well last week. It just can't stop moving while the market is open. Didn't understand why that was happening.
How could it? How could it do such a thing? I wanted to pause. Stop moving.
How are you guys doing?
Good, good. We were just talking about the CAD news that has just come out, and also the latest on the Iran news, which has just come out, which kind of was against the previous Iran news that we had earlier today, which
Yes.
was the approval to
extension.
extend the 6-day period.
Yeah. That was. You know, it's such a smoke screen all the time between the two of them, especially Iran, but I mean the U.S. as well. Sometimes they say something, you're not sure if they're trying to say what they want us to hear or they're actually reflecting reality. And from the Iranian side, it's even worse. They keep saying things, and I'm sure, huh? Is that really said today, given the context of the current situation, or was that, a month ago? Because it doesn't seem to reflect the reality. But anyways, but that's the kind of conflict we're in, and it seems like I don't see a clear way how they have to come with a solution, and they will, I guess. But I don't. It's not that clear. I mean, Trump seems like way beyond his impatience tolerance level with them, right?
Yes.
Yeah.
Agreed.
Agreed.
I thought you were going to carry on.
Yeah. No,
Victor,
that's why I invited you guys to say something after that, right? But and on the other side, it seems like the deal isn't good enough for Iran either, because otherwise they would have said, that's they would have accepted something already, but it seems like they kind of squeezing the lemon to get the last few drops of the juice out. And so I don't know. It's I think it's gonna take a longer time, much longer than everyone expects. That's what we've been seeing so far, and I think that's gonna be a pattern where it's going to be longer than expected. But the market is, on the equity side, is I mean, we just hit recently all-time high again, so the market is already calculating that risk and continuing forward.
just bringing your screen up.
Yes,
Victor,
I
you
noticed.
may not be aware of this, but we can't access any of our like video files or anything on EVMux. So you'll notice that the transition itself goes to purple and then to your screen. So our transition is gone.
I see. I see. No problem. We can handle that. We can. I'm sure the viewers um, will be able to tolerate that for. I
Yeah,
mean,
just for a little bit.
whatever, just a little
Yeah.
bit until EVMAX get their ducks in a row.
So many ducks.
Yeah, so many ducks. Yes. You guys were talking about a dollar CAD, and I think it is quite nice to look back for at least from the monthly time frame. There isn't anything specific other than that the market broke some supplies from before, but that we're past that long time ago. And on the weekly time frame, we did leave. We did come back and retest that level. We took out the high of the previous swing high. I mean, not these, but I mean the biggest one since we left the order block. And if you look at from the daily time frame, actually it was a beautiful setup where the market came back. This is the neckline, the head, the left shoulder. It went up, breaks the line, comes back, retests with one candle, clean entry, and it goes back to the top of the previous candle, previous swing high. Beautiful price action, if you ask me. And on the weekly time frame, we can see there's a little seller here waiting for us to be reacted upon. Not us, the market, of course. The price, EU, not EU, dollar CAD, that's on the weekly time frame. And I think that's where we're heading. I don't know what you guys are thinking about this pair. We just had that CPI coming out, Canadian CPI, 7 minutes ago.
Yeah,
And it looks,
that was
well,
nicely bullish.
yeah, this is a weekly time frame, so there's plenty of this is not around the corner, but on the weekly time frame there isn't enough anything. 42 pips, and if you look on the daily time frame, we're talking about that's not the right one. Let me get that out. The when you think about it, the let's get it in, and let me get this out like so. All right, so on the daily time frame, you can see that the current level, we don't need the graph, just the number here. The current candle, currently the ATR is about 52, while the distance to that level is actually 74. So it is a little bit outside of 100% of a daily move distance. So with a little stretch, it could be reached today. But if not, then it will be something for tomorrow, perhaps, or thereafter. But the market is clearly dollar CAD. It is clearly it has a downtrend. We can further analyze that. Let's see very quickly on the 4-hour time frame. Where are the levels? We could be looking to go short. If it has a little pop, that will be that level. And on the hourly, I don't see anything. Actually, we just had it already. We can see
And it
that
already
a couple of-
reacted off of it, it would seem.
Yep, that's
Yeah.
one. And that's the second retest, actually. And this is the first retest of that order block. So it seems like we already had it. And maybe if I can go to the lower time frames, we can spot perhaps a quasi. What else would it be? A quasi, of course. Let me check. We have this would be the 5-minute entry order block. And is this very quickly for our viewers? How has been the reception of the new schedule, Richard? How is the audience? You guys let us know what you think about it if you haven't done so yet. But how was the reception so far, Richard?
I think it's good. I think it's good so far. Obviously, I think a lot of people didn't know that we were starting a bit earlier, so we had a slower influx this morning, and then obviously because of the technical issues that we've had with the streaming platform, we couldn't do the break that we wanted to have.
I see.
We'll see once all of those videos are uploaded and in place whether or not it's still nice.
I see.
As
As always,
you, Buyu. Sorry, Victor. Buyu,
Go ahead.
did you need to head out?
Yes, I will need to head out. So I'm just gonna love and leave you guys. Bless and hope you have a great day trading. Do I have anything to say as I'm leaving off stream? Not much. Make sure to check out our Discord calls with the main man Victor down there in about 2 hours' time from now. And if you don't know how to get onto Discord, go to the hub on your Fivers and click the Discord link. And if you're not sure what to do or you don't have the Discord link, then open up a chat. But the Discord access is for those who have an account with Fivers or have had an account in the past. So yeah, make sure you check out our Discord calls. Make sure to leave a like on the stream, and if you like the new times and you know a couple of London traders or want people who want to get London analysis or pre-New York analysis, make sure to invite them to the stream. Get them to subscribe. We might do a special giveaway once we reach 120k subscribers. Who knows? Who knows? Right, and with that said, I'm out.
Take care, Buyu.
Cheers,
Thank you
Buyu.
very, very much
Cheers.
for those announcements. We certainly want our viewers to be informed of the possibilities, the giveaways. I mean, which trader wouldn't be interested in giveaways? Of course, you guys are.
Yeah.
So keep on tuning, liking, subscribing, because that's what's going to happen. Sooner or later, we will have more giveaways. Just like the one we have those battles as well. The 1v1 battles. Those are a lot of fun to
The
watch.
next one will be the 25th.
25th. Okay. First or fifth?
Next week. 5th. 5th.
Fifth. Okay.
No. That's
All right.
25th.
Perfect. We can see that actually the structure that I was looking for already happened, or it may be just happening right now. That's the uptrend, the established uptrend within a hourly level, which is not visible as a level here, but it is on, of course, on the hourly. There are two order blocks right there. This would be the better order block to be hit, even though it's the secondary task, because there are two. You want to be taking the one that's more to the extreme. And if you go to the 5 minute, you can see that the market has that uptrend established. Actually, it's a little bit, it's actually like that because it's a bearish candle. So let me put it like this, right? So this is the move. You can take it from before as well. It doesn't really matter. You come to the same conclusion. An established uptrend, it goes back to the order block and seems to be reacting to it. You wait for it to confirm that, and then you get in, put your stop either above the level that you think it reacted upon, or perhaps the whole structure, and then you target something that makes sense for the holding period that you envision to be holding that trade. That might be a little bit too ambitious, but you get the point. The point is you put it where it makes sense to you and you leave it. All right, unless something else happens in the meantime. I think we have a question here by Justin Gem Body. Yeah, Rich. Nice.
Yes.
NES short. Similar analysis to what you were seeing on the daily time frame. All right. It wasn't a question, it was more of an agreement with your analysis. An observation, yes. A comment. Yeah. Nice. Nice of you, Justin.
Very nice, Justin. Very nice. Yes, hoping to see NAS come and fill the gap of this morning. We've struggled to really continue pushing higher on NASDAQ. We did have this nice attempt at a rally, and then we kind of got stuck in this zone ever so slightly. This reaction that we had here now actually had follow through. So let's remove that before I make something phallic on the stream. We don't want that. So yeah, the idea was that price could potentially come and fill this gap here prior to either the New York session or as we were heading into the New York session to try and push a little bit lower. And then we would see whether or not we would garner some sort of long position from there. This was a news event candle, and then this candle over here was also a news event candle. So not high impact news, but a tweet event, let's put it like this. And even with this, we had no follow through. Price did not try and push higher from that we actually started gaining a little bit more momentum towards the downside from here. So to me, it was a bit preemptive, a little bit earlier than I anticipated. But then again, I don't try and predict the market. I just try and react to it. So this area here is getting a little bit too close to the New York session. So I try not to trade it, because then I tend to be in a trade for too long, and then there's undue volatility pushing price up and down, and then I can get wicked out of a movement, and then eventually prices goes in my direction. So I tend to not trade during this last, let's say, hour and a half before the New York session. So even if this is exactly as I would have wanted to react, you have a low over here that got swept. You had the high that basically produced some lower highs, and then as you break through this previous low, you close below it, you try to push back up, and then you start producing lower. I would have wanted to be on a sell in this case, but not here. If that happened here, as an example, I would have wanted to be in. But that's just the difference between my trading style and letting some of these movements go. So this is the reversal that we had from this upward moving price action. This is the reversal. It's happened right here. So to me, this is one of those that just I can't take it. It's outside of my rules to take them, so I won't.
Nice. I see that. The market did have a very beautiful breakout on Thursday, and we had a retest on Friday on the NAS, on NQ, that is. So to me, we already had the retest of these levels, right? The levels we broke through very powerfully on Thursday, right? This move that was unstoppable for the time it was going. We already had the retest. This is the level from the left that we broke through. There was another level here as well, and a smaller one. Maybe I should zoom in a little bit. But there were a couple of levels, horizontal levels, that were broken, and all of them, not just one. We had a level, like a very level just before. This was just in the before the open, and that level went on to break not one. That movement price action didn't go on to break not just one, but multiple levels, 1, 2, and all the way to the highest point in that whole consolidation complex. And we came back to retest the first level, and not the second one. And I'm not too sure if that's even going to happen because of that breakout. It tells us the market, break, came back and retest, and now it's getting back in. But the question is, will it retest the same level? Will it start, changing direction before it does so, or will it have to take something maybe a little bit lower to get some more liquidity before it continues that uptrend, or that follow through on that breakout? Meaning getting on one of these levels perhaps retested. We'll have to see if it needs something deeper before continuing higher. Continuing higher is, the most reasonable expectation to have, because that's what the market has been doing. It's been breaking these previous high, retesting them, and likely to continue in that same direction. If we go to the weekly time frame, we also broke a supply zone last week. That's another reason to expect price to continue to go higher. Maybe not right away, maybe come back to retest that border, maybe a little bit deeper, but eventually after maybe this week or maybe next week to be going higher into higher levels. So this order block is already invalidated. I do like to keep those levels on because it is a recently invalidated level, and that can be retested after it's been invalidated, which is, let me put this as a weekly level.
Yeah, I do the same with my bases as well. Just because a base wasn't reacted from the way that I anticipated doesn't mean it's not going to be reacted upon in a different way. So if it was maybe going to act as a support when it breaks through, it may be reacted from as a resistance. So I tend to do the same thing in that regard as well. just keep it up there. Even though if I have no intention of trading, I just kind of want to see how
Exactly.
it
You can use that as a target because they have that flip flop kind of a character. It's not positive, but then it's going to be negative. If it's not positive, it can still be negative, or the other way
Yeah.
around, bullish bearish.
Still a
And
zone.
so
Still an interest area.
it is a zone, just a different direction. But it's still the same levels still apply. So I keep them on. Same thing with this entry order block on that H1 quasi. If we do get to if I get a trade in, I don't want to be targeting much lower because I know here might be the level it might bounce off, and I want to be if I can get in a short, I want to be out by then. I don't want to have that reaction as a risk for my trade. But on the
Victor,
go ahead.
there was a question very early this morning. I just remembered it now. I also want to pose it to you, but once you're done with your analysis on NQ, I would like to pose that question to you and kind of just get your feedback.
Sure. I was just about ready. On the weekly time frame, we broke the level. It tells us that the market is breaking to the upside. That's obvious, but that's what it's telling us. If we measure the level, the order block we were having before we go to the, this is the next level. This is the first retest. Actually, it's not the first retest. It's the immediate retest that doesn't count as the first retest. And if we measure if this level is still fresh, we can go ahead and measure it's 7. So we can still expect some kind of reaction off of that level, but it's still wide. And so it doesn't, we still need the daily to tell us it's there, and the daily is not doing that. So this is the next level, the one that we took off the screen is already invalidated, but this is the next level that we should be looking for the daily time frame to have some kind of reaction if we are going to have that reversal sometime in the near future. And if not, then perhaps we're going to be, as long as the daily doesn't create those bearish structures, those supply zone, then, very simply said, the market will eventually continue to go higher. That's the daily. The 4-hour, I would be looking for longs because of this breakout. I would be looking for price to get nearer either to the breakout level or to that swing low and start looking for longs. And currently, there's no reason to go long here, even though the posture or the market structure is to go higher. If I look at this swing low, it does not convince me. That's not an H4 level. Not on the H2, and there is something there on the H1. That would be something, but because it doesn't have H4, then I would not be, ready to take a main strategy entry there. I would just consider it as a level. If I get a short, I would target that, but since we have a level before it, I will target the level instead. And if I can get a scalp long from that level. And that's it. We also have another level actually that I didn't mention, or maybe I did, which is that H2 right here. So we could expect some kind of a reaction from that level as well. You can see it on the H1. It's actually much tighter. When it is tighter, I like to use the tighter one, which is the H1 right here. So we could expect some kind of a push. Eventually, I don't know if that's enough, but eventually, the market will probably continue to go lower. We'll have to see that on the entry until it chooses the direction, right? At the open, the market pushes on both sides, usually until one of those two gets to be the winner, and that's the direction that the market will likely continue for a couple of hours and sometimes even the rest of the day. So we're going to see that in about 35 minutes. And on NQ, I think that's it. So I'm actually looking to go long from these levels with my stop, something like that, after it sweeps that low or already has a reversal. And by reversal, I mean something like a quasi. That would be, if it does something like this, after hitting either the broken line or the level before, I wouldn't need the sweep. But if it doesn't create that reversal pattern, then I'll wait for the sweep to get in and go long on it because I think that's the next level, right? The current level is current leg is to the downside, may or may not continue lower. We're at a little demand zone there, an H1 demand zone. But eventually, I expect, if we do not reverse earlier, that we will have some kind of at least a reaction. I wouldn't say reversal, at least a reaction from that level before market decides, do we want to continue? Do we want to change direction and continue bullish? Yeah, that's NQ. So what was the question, Richard?
It was this, guys. When was your best aha moment in trading?
It was a couple of years ago. I tried different strategies, looking for that holy grail, just as majority of you guys out there. And I thought, the more complex the strategy is, the better it is. The more bells and whistles it has, the more complex looking on the chart it is, then the better it is, because it must be more refined. It must be elaborate. It cannot be that simple, I thought always. And I thought that was where the edge was, by putting in as much as, things and filters as possible. And I started, but I wasn't getting consistency. I was getting, profitability sparingly. And then I thought I would just dive deep into backtesting. And I backtested for hours, hundreds, I think thousands of hours. I haven't counted them, but many, many hours for a very long time. And when I looked back, the opposite was true. It was the simpler you had the strategy, the more likely you were to be able to get an edge and to be able to execute that edge. And the other thing that I watched was that, you could, if you have enough data and you did your homework well, there is, the ROI on finding other new additions isn't as high as improving what you already have. Meaning, you shouldn't be looking to add things necessarily, but look at the finding out where that strategy, if you've seen some kind of profitability, look where that, under which conditions does that edge get expressed more often. And I didn't, I could have thought of it, I could have gotten to that conclusion, but the fact that, it was a revelation to me. Once you have a strategy that has some kind of edge, and the conclusion was that I didn't need to necessarily look for new things to add before I actually optimize what I already have, meaning the filters, not more filters, but fine tuning them, knowing what market conditions the strategy works well. And that made a huge difference to me. And that changed how up to that moment, how I looked at backtesting. Backtesting is so fundamental for me since that moment. So to me, that's the aha moment. It's not about looking outward necessarily for new stuff. It's to look inwards to the data you already have, if you have good data. That was the aha moment for me.
I like that. I think a lot of people do look for more is better, kind of like approach. More assets to trade, more time frames, more time in front of the chart. And I know LJ would kind of like challenge this idea, but only the wording. I think in concept he agrees with it, but it's the idea that simpler is better, or simplify as much as you can. But like I know LJ would say, simplify to the point where there's benefit for simplification. If there's no more benefit to simplification, it's a problem.
It is a bell curve, yes.
Yeah.
There is a limit to the simplification you can go. Certain moment you cannot strip everything away, but the optimum, the peak in that, if you have a scale, the X the x-axis being simplicity, or actually, let me put it on the chart.
Draw
If
us a word picture.
all right, so if this is if the axis, this is the complexity of the strategy, and on the other side you have you know, profitability, right? The normally we would think that the more complex you make it, the more profitable it becomes, and
That
that's
it's a
not true.
linear curve, yeah.
Or linear, or in any case that the peak will be hit the more complex you make the strategy. But in reality, there is a peak, and then it becomes something like that, where and we seem to look for this area to get the highest return, but it's actually making it simpler, where you get the optimum for this curve.
Yeah.
And that to me was the aha moment. You don't have to add on continuously. You actually have to go back and see which part are making, which components have a predictive value for profit, and stick to those and strip away everything else that doesn't have a predictive value, meaning it does not help you. I mean, with or without that filter or component or test or whatever it is on your checkbox, with or without it, it doesn't affect your profitability much. And if that's the case, then you're better off just taking it off, making it simpler, and you will see that in majority of the time that your profits will go up. And that was the of course, not continually. If you go keeping making it, just very, very simple, you will strip away those components that also have predictive value. So you don't want to do that. But the curve is definitely not, closer to the simpler side of the spectrum than you would think.
Yeah. I like that. I would have thought that your aha moment was Quasimodo's. That's what I was going to say.
Actually,
The day I found my Quasi. Woo!
Yeah, that was as well. But I think the other one is more universal. It applies to everything. Quasi was more.
The after effect
didn't.
of it.
Yeah, I didn't know how profitable it was until I did it myself, the Quasimodo. But anyways, that's another story.
I
On
digress.
EU, let's see on the chat if there's any questions.
No, we've just got Abdel saying hi, and we've got Widigo saying NQ bear money. Yes.
Nice. All right. We have, of course, we have while I'm getting ready to continue with our EU analysis, we have the summer plan going on. Richard, I know you know all about it. But
I do.
of course, for those who are not fully versed in our offerings, we have a summer plan that is, an offer you cannot refuse. I'm not trying to be a mafia boss here. It is an offer you cannot.
Make me an offer. Make me an offer I cannot refuse.
You will not be seeing any horse heads on your bed anytime.
What?
It will not happen.
That's a thing? No. No, we bring sweets and lovely
Yes.
tidings. No.
Yes,
Yes.
that is a for those who I mean, I'm pretty sure those cinephiles know exactly what I'm talking about. It's a benign comparison, benign reference to
Benign. Yes.
yeah, benign. All right, so the on EU we have let's take a look. All right, so on EU, we are on the level. We still haven't seen anything on the weekly time frame for the for the candles or the price action, the levels of the last two candles, the last 2 weeks, still pointing upwards. Still, in relative terms, the lower wick indicates that the market, in the end, net, they are still pushing higher. Not only because it's closing as a bullish candle, but also looking at the ratio between the lower wick and the rest of the range. We are in a level on a daily time frame. Let's measure if that's still fresh, and we can get an idea. It is on the 11th. To me, that is beyond its freshness limit. So you will probably see some kind of reaction, but I will not be using it as a daily structure. We already retested, so I'm not too impressed by that. The weekly time frame, as we are on the weekly still, the weekly time frame does not seem to have any reaction at all. So the market seems unfazed by the supply zone. And not only that, the last couple of days, we've been just pushing forward, breaking that order block on the daily time frame. If you go lower time frames, you will see that we broke it and came back, retested on Sunday before continuing higher, retesting that upper lower, this channel, the upper border or the upper extreme of the channel, the upwards channel, which is this one, already retested. The market is still pushing higher. Let's go to the two lower time frames. We did have an expansion of that channel. It looked like a breakdown. It actually looked very convincing at this point where we came back here. We did have let me zoom this further in. We did have a nice reaction here, and especially when we broke down after that bar coding, it looked as if we broke the level. It looked like we broke the trend line, broke it, and we were getting ready to push much lower, only for the market to use a smaller quasi. You can see it here quite beautifully. That's what I like about if you just follow whatever the rest is doing, right? The rest of the market. If the market is showing you quasis against a higher or other stuff, I would go with the quasi. This is the established downtrend, neckline, left shoulder, head, and you can see that little order there. I don't have it actually marked, but this was the entry order block on that area, and you can see how the market goes and change right before your eyes. Just like magic, comes there, retests the order block, the entry order block, and goes in the opposite direction. Even though, up to this point, it looked like it's going to go lower until you go to the lower time frames and you see that there is a pattern. It's the breadcrumb that the market leaves behind to let you know where to follow, where the market will lead in the following direction. Beautiful, beautiful quasi right there. And that was the best entry for your long. That happened at the end of the session on Thursday, and now we are in the upper channel of that upper limits or upper half of the channel that we were already in. In terms of the daily, I don't see anything. That's already. Let's measure this if it's still fresh. We already retested. I think I can already see from here that it's no longer fresh. Trading hour, slippage might affect your opportunity. Okay, let me answer this. How do you deal with opportunities that happen late in trading hours and the slippage might affect your setup because of late market has been, as of late market has been doing that? Anto, the analyst, thank you for the question. Anto, the analyst is a regular in our session here on YouTube as well on Discord. A round of applause for him for being such a nice member in our community. What I do is I go back to the data, and my data tells me the best moments are within my trading window. That's it. I just keep to my trading window, and so what I did was I traded this is a long time ago. I traded all the hours of the day, back testing, forward testing, and I put the data together without missing any trades, without missing any signals, and I broke it down into sessions, and to see which one has, which one I can be trading all the time, 24 hours. So I have to choose which is our mine, and I start with London and I finish with London. And so if it happens after the hour, and I did some to see where the cutoff time is to start and as well as to stop, and I start with London and close with London. And to me, that was the best time. There are trades, and I still have positive expectancy outside of that schedule or that window, but it's just a decision. I said I'm not going to be going after them because the majority, the best, the bigger meat chunk of the meat is in the window that I just, and it makes sense because that's the London Open with its follow-up movement. It is the New York London overlap, and then you have the rest of that New York push, and that's it. And without the second half of the New York, but with the overlap and a little bit extra, that's it. So I'd only trade those hours. And anything that happens on the Asian session, I know I can, but I just don't trade it. I stick to my, and it becomes a rule in my trade plan. So I don't trade those anymore. If I do it, it's because of a different reason, different strategy. But this strategy, which I checked, the time of the day is a huge thing. It can change all the statistics on the profitability, on where you put your stop, how far it can run, what are the chances of the market actually pushing in the direction you wanted after you entered. All of those things are heavily influenced by the time of the day. So you better know, it can make or break your system if you don't know when to use your strategy and to catch these phenomena in the market. Do not expect it to work all the time equally well, because I think it never does. So I just don't trade them. I go back to the data and let the data tell me what my cutoff time should be, Anto. And I recommend you to do so. I know it's not the easy answer, but in trading, nothing is easy, right? It's hard work. If you, it's not like I can give you a number or a strategy and say, will change your life forever. Apply this and you never have to do backtesting again. It doesn't work like that. You have to still, build your setup library, so to speak. You have to build up your data. How would you be confident in anything you do unless you've done and verified the data yourself? And not by a third party telling you to do anything. So, and I think that's, there's no substitute for hard work, putting in the hours to find out where the truth is for your strategy. But I would consult data. I would go back and break it down into different sections. You don't have to do one session at a time, because even within a session, it's not the same. The open is not the same as halfway in. It's not the same as the end. There's a complete different behavior of the market. You have the expansion at the beginning, at the open. Then you have these at midterm. You have the effect of lunchtime. And then at the end, you typically have fades, but not all the time. So it's completely different. So you also, within the session, actually should break it down into logical parts of the session. The first, the open, actually pre-open, the open, and then halfway in, and then the latter part of a session. And then if you do that with all the different sessions, you analyze according to that stratification, right? So you make them, you make different strata, breaking it down into equally into groups that combine a certain characteristics, in this case, time of the day. Then you can tell something, okay, you can say, after having enough data points, you can say, well, I know for a fact that between 12 and, 2, your local time, my edge, drops significant. And so my entries, I'll have to evaluate if it's still is worth my time and cost and spread and everything else. Maybe I should just have at the beginning and whatever other time during the day to trade, because those offer whatever market conditions your strategy necessitates. It could be volume, but I mean, it depends on the strategy you have. But
Yeah.
great question.
I agree. I agree with that, because I have the same thing with my trading as well. There's lull periods throughout the day that just it looks like it wants to do what I think it's going to do, but then it fakes out, or it doesn't quite give me the reversal that I'm looking for. So knowing when is the best time to trade and when not to trade is a very integral part of trading itself. Knowing you can't be awake 24/7. If I were to stay awake late into the evening trying to trade a little bit, maybe get that one extra trade, I'm going to be tired the next day, and that my next morning trade might be impacted because of the fact that I'm tired. So same idea. Window, stick in that window, and if it doesn't happen in that window, that's okay. You wait for your next window. You're gonna continue having these windows throughout the day and throughout the week. And just because you missed one now, that's okay. It's you can move on. You can move on to the next one. I did want to say this though. We're 14 minutes away from the New York Open, and also 14 minutes away from the end of the stream. So we open at the London session open, and we finish the stream at the New York session open as well. So once the stream is over, you will all be directed to the New York to the future session, where they continue with the New York session. So we kind of have this little hop skip movement going forward for that. Just wanted to mention that.
And the fun does not end with the end of this stream, because we have another stream lined up for your benefit.
Enjoyment.
Your
Benefit?
entertainment.
For your perusal.
Profit, whatever it is that your hit, if you're addicted to the market, as most traders are, then because we have the futures channel lined up, you would be automatically redirected, so you don't have to do anything. You can lay back in your sofa if you're watching us from a sofa, or your trading desk, and the stream will automatically take you to Dave and and the team of great traders on that side of the 5ers. On
Our sister
EU,
company.
yep. On EU, we do have the level that we talked about, and I can already see that that's not fresh anymore. So this order block is it's there. You may see some reaction of it, but it's not something that you should be wanting to trade. There is the break of the structure we just had right here. If price were to come back lower, you could be looking for a retest of that level, perhaps today or tomorrow. I don't think that might happen today, but maybe tomorrow. On the other time frames, or going lower time frames, we see that expanded basically a channel after that false breakout. And we do have a level that makes much more sense for price to come in back to, which is this H4. I'll be actively looking for price to come back and to see if we have alignment on the H1 and on the lower time frame to get a trade long, because can see the channel. It is meant to be taken as a long. What else do we have? This is the H4, and I don't see anything right here. This is the only area I would be looking for possible longs, putting my stop below the reversal pattern and looking for the market to go retest some highs it made before, and eventually leave something for the retouch of the upper limits of that channel again. Since there is no H4, I have no reasons to go to lower time frames. I could, and the market actually is already looking as if it wanted to retest that broken level, but it's a weak level because it's on H1. There is, however, I do see a level here. If I were to scalp, which I'm not currently wanting to scalp, this is a level I would want to scalp. Why is that? Because we have the impulsive move was to the upside. It broke through the previous swing high, and we came back and just shy of it had a reaction and it left an outside bar on the H1. That's a nice area for the lower time frames to go back and then push out of it. Doesn't mean it's going to go necessarily higher, but you can at least get a push back to the whatever high it did before that little reversal down. Meaning if it did something like this, if it went a little bit higher and it got back, I would look for a reversal pattern inside that H1 block and then target the high or something just before that high and that would be something for a couple of hours at most, something like that, and get my, I don't know, something like this. It's actually quite tight. That's only 4 pips, but that would be something that I would look for, because this is the fact that the outside bar happened, even though it didn't actually touch the level. That's the reaction. It just did the reaction perhaps a little bit earlier. And if it doesn't come back, then I'll just leave it go. I wouldn't enter here to go longer. Just want the reaction to happen. That would be something. Other than that, I'm on the sidelines for euro dollar. I'll wait for the market to actually touch the levels below, as indicated with that long trade indicator on. Let's see. We have 9 minutes for. How is the dollar yen doing?
The dollar yen went into a little bit of consolidation today. Just overall had a bit of a dip down, the dollar yen, and then a pick up again of that. So we're kind of just very close to where we started the day. So it's struggling ever so slightly to pick side.
Still in that reversal, in that fresh order block on the H4. Let's see what we have. Broke through that, so that doesn't count anymore. Do we have a reversal pattern? We don't. We don't have a reversal pattern. Yep, we don't. So that makes it, this is already used. This is also used. Is it? Actually, it is not. So this is the H4. And so we would be looking for a long within this area. And there would have been the entry for me, or at least looking for that entry right here. Right, so you have a H4 within an H2 within H4. And this is the conclusion. And then within that wick, which would have been... let me double check this. That would be from, starting the 11th time, my local time. If I go to the 5 minutes, see if there would be from this point on, but there isn't a quasi on that time frame. So maybe there wasn't anything for me to trade either. Let me check. All right, so there is this reversal pattern. Let me check. I'm having the vertical lines instead of the
horizontal ones.
Yep. So that's the neckline there, and nothing. No, I can see that it's way behind, but this is something that could still work out. I mean, price coming back, especially after the open. So we have one. Yep. We have just one. I don't think it's going to come back to that because that's the extreme. But if it does, it would be interesting. This one is no longer here because we can see, is it?
It was already below, I think.
Yep. It was already taken out. So this is the only area. So it's not great. It's at the head. You would want something to have something, not using the head, but I mean, the head is definitely tradable. It just... nerve, it takes a lot of nerve to take that, so it might not be the best one for, if you're new to the market to be trading. But I love trading the head as well. I mean, the reason that I like it because you get the entries right at the edge, and then it turns around when it works, and you can get a super tight entry.
Yeah. I mean, I probably, if I were to trade this, if you go back to the 5, I probably would have been in on the round about the neckline. So just
there.
the quasi, there on the close of that last bullish it is a bullish candle, but it's got a long wick. I would probably have been in on that as a buy, because you have the previous high swing being taken out, failure to push another low, so you have a higher low, and the previous high broken. So yeah, that roughly around that first one I would be in.
That's actually the classical entries, right, for breakouts. You wait for the reversal to happen, and then same thing with the head and shoulder, right? The head and shoulder, the classical entry is like this. For those who are, those on our, if you have this is the classical, I can adjust it further, right? So if you have this is the head and shoulder, not the Quasimodo. Head and shoulder. The way to trade this is when you have the break, that line is broken, you either preemptively get in because you see as it is breaking down, or you wait for it to break, and that's actually what you would have done, and wait for it to come back to the level, and then you get your entry. Either a little bit inside, or as it already reacted, you get in on the entry. And then you would put your stop above either the right shoulder, which is one of the classical entries, or above that little swing you had before. It eventually went back, crossing that line again, and you target the height from the base to the head, which is the measured move from the breakout. And so you target this. This is the classical way to trade one of the classical ways to trade the head and shoulder. So you wait for it to complete, then for the retest, and then the continuation. And that's no different than you wait for it the quasi to break through, right? So here, what you had is basically this, right? So it breaks through, comes back, goes on, and then you get in on that trade, right? So this is this would be the right shoulder, even though it doesn't look as symmetrical as the head and shoulder, but I mean, that's the general idea behind it. You wait for it to come back, retest, and once it here, this is the kind of the confirmation. It went through, came back, retested, and then went again. That's the follow-up movement, and you wait for your entry to get in, which is good practice.
Yes, it is. I don't trade patterns to that degree, but I also feel like my entry with NASDAQ is a form of a pattern. It is just a lower high, lower low, break, sweep, break at least, not just a sweep, but change of character and then a directional shift. That's all it is. It is a kind of a pattern as well. But yeah, and with that, I feel as though we have pretty much come to the very end of the stream. We have like a minute and a bit left. I did want to ask a question to you, Victor, though, before we sign off. We have a 1v1 battle next week. We've had participants go up against LJ, against...
yes.
The answer is yes?
Yes.
The answer is yes. All right. So next week, we will have a participant go up against you.
Yes, I love these. I love these battles. I'm up for it. You don't have to ask me. You count me in.
Answer is yes. Great. I love that. Awesome. So who in chat next week on the 25th, if I can remember correctly? 25th, yes. Wants to go up against Victor. And then maybe the other person can go up against me. We can do that.
Sure.
All right, let's do that. The two people on screen right now, Rich and Vic, the two of us will be your competitors next week, Tuesday. Victor, is there anything you want to say before we let everybody over to the Futures channel?
Yes, actually, we have, as we have on every weekday, a session on Discord, and all of you are very, very welcome to join us after, or maybe at the latter half of the while you're watching our futures channel, check out the Discord as well. We'll be giving out 10 hub credits to one lucky person, sometimes even two. So who knows? Maybe you will win those credits today if you join. But the value is in the coming together and exchanging of ideas. I'll be talking about some very interesting topics, so you're all invited. And that's it for us on this beautiful Monday. I hope you guys liked the new, structure that we're just starting today. It has a little bit of a growing pain, but things will be smoothed out. In the next couple of sessions, and hopefully you guys enjoy. Let us know in the chat as well what you guys think of it. Previously, there were some viewers who already were very positive about it, so thank you for that. That's what we want to be hearing. But if you have any feedback is welcome. We want to be improving, not just positive feedback. Any feedback is constructive. At least that's what we think. Richard, thank you very, very much for being you.
Keeping you company. Yeah.
Yes.
I can only be myself. Thank you very much, Victor. I will answer this. What does it entail? The 1v1 battle is a competition between you, the viewer, and us, the hosts. You come onto the stream. You try and beat us in a 1v1 battle. There's some rules. We give you an account to trade with against us. At the end of the 30 minutes, whomever has made the most profit is declared the winner. And if it's you, the viewer, we give you a 100k evaluation account free of charge that you can trade to your own delight. So that's going to be the 25th, next week, Tuesday. So
25th. I'll write it down in my calendar. And I'm going to be ready for you guys. Ready to for the battle.
We're going to put our fisticuffs on. I'm going to put gloves on so I don't dirty my hands, but it's going to be a brawl. All right. Victor, thank you very much.
Yes, thank you, everyone watching. I'm sure you were just about to say that we are closing our session. Thank you all for watching. Don't forget the like and subscribe button right here below our session to let us know you enjoyed this. And, stay tuned for the Futures channel. That's it for us. So that's a wrap for us. See you guys tomorrow. Bye-bye.
Bye-bye.